Good morning, everyone, and we're going to start. We're getting moving with the Global Trade Facilitation Summit 2022, Dubai. Connecting the trade world, shaping the future, and that's what we're about here today, yesterday, the day before, and tomorrow, connecting the trade world and shaping the future. So, I'm going to call on our Secretary General of ICC United Arab Emirates, Hassan Al-Hashimi, to say welcome remarks and give you some key points on Dubai and the UAE. Hassan, please. Thank you.
Assalamu alaikum wa rahmatullahi wa barakatuh. Excellencies, distinguished guests, ladies and gentlemen, a very good morning to all of you. Welcome to the United Arab Emirates, welcome to Dubai, and welcome to Dubai Chamber of Commerce. It is an absolute pleasure to meet you all. I'm sure you've been having a lot of activities over the past days, but today, just a heads up, it's going to be a lot worse, with lots of content that is coming our way in discussion about this very important subject. So this is ICC United Arab Emirates Global Trade Facilitation Summit. And just to give you a quick background on what led us to put this event all together, it goes in the roots of this nation, of the United Arab Emirates. It gets into the roots of the professional focus that you, each and every one of you, represent in terms of trade finance, in terms of imports, export activities, and so on. And that's why I wanted to take this opportunity to share with you some very quick highlights about the United Arab Emirates, about Dubai, and linking all of this together with the work that we all do on a daily basis. So these are some highlights for your reference. If we talk about numbers and rankings, the nation here has been doing pretty good compared, looking at the international numbers. But it's not about the numbers, really. It's more about sustaining the growth, sustaining the positioning of the United Arab Emirates, sustaining the positioning of Dubai. All of these slides will be shared with you. But if I talk about Dubai trade itself and commerce, it's good for you as well to be very much aware of who are our main trading partners. So you see them here. China, India, USA, Saudi Arabia, Switzerland. And then you do have as well their contribution as well in terms of the volume for each region. But trade, in an essence, is it takes about 30% of our GDP, and everything else is then focused on services. As some of you is aware, oil for Dubai at least is less than 2% that comes directly to our GDP. Focusing on trade itself, that's why there is a big push to continue to boost foreign trade. Dubai plan to boost the foreign trade to 2 trillion dirhams, which is about 54 billion US dollars. And this falls directly in the essence of what I started with, what Vincent will be taking you through today, and as well as all the incredible speakers and supporters that are present with us here. Talking about certain sectors within our economy here in the city of Dubai, tourism, of course, and the hospitality industry is quite important. If we look at the numbers, of course, considering the pandemic, the number of tourists is at 7.28 million. And Dubai Airport remains the busiest airport. These numbers, of course, when the highest that we were was around 16 to 17 million tourists prior to the pandemic. But it will remain as we are witnessing the growth that is happening right now and the focus on trade. More importantly, as we discuss about the ICC United Arab Emirates, I'd like to acknowledge, of course, the presence of His Excellency Hamid bin Salim, the chairman of ICC UAE, as well as some of the board members that are with us here today from various chambers of commerce. So we also have the Director General of Abu Dhabi Chamber of Commerce with us here today. And what we do through the International Chamber of Commerce, United Arab Emirates, is really getting that support across the federal level to really put forward such events and then focus on areas that are relevant to our members as ICC UAE, as well as the other chambers of commerce. But if we talk about membership in Dubai, at least for the Chamber of Commerce, we are close to 290,000 members. And despite the pandemic, we've added an additional close to 28,000 members. And this is where it's interesting. These members, as you know, with certificates of origin and export activities, they have exported around 61.7 billion US dollars in 2021, despite the pandemic. We all know how it had impacted all of us, the drive towards digitalization, the disruption that has happened across multiple sectors. And all of this falls in line as well with what we're trying to achieve through events such as this one. We've issued around 670,000 certificates of origin. That again shows you the number of activities that are happening around the globe. I was just talking to His Excellency the Chairman about his active participation at the Expo 2020, and he, through the Federation of UAE Chambers and within his other hat as Chairman of ICC UAE, was engaged in more than 100 events with international players. And the international side of things is quite important. If you look at the tagline of what this conference is all about, is also very much aligned with the theme of the Expo 2020. And part of that international reach, the Chamber of Commerce here, at least in Dubai, has these offices that are in multiple promising regions. So if we look at Africa, for example, we have 4 offices there in Kenya, in Ethiopia, in Ghana, in Mozambique. We continue to expand all the way to Latin America, 3 offices there in Argentina, in Brazil, in Panama City, and very soon in Mexico City. And then in Baku for the CIS region, and as well as an office in India and 2 offices in China. But the idea here is to really expand our footprint, not just as a representation of the private sector of Dubai, but a representation of the stakeholders of the United Arab Emirates through Dubai, with your support. And I know a lot of the delegates that are here, we've interacted with them on multiple levels, and these offices really help us all connect one another and really facilitate. And I hope that through the conference today, we'll be able as well to give you, to at least trigger some thoughts that way you could utilize our presence. Going back to the expo, we only have 2 weeks left. There is, I know it's part of your program, you should be really excited if you haven't had a chance to visit the expo. So the expo experience is something not to be missed. We are actually saddened by the fact that it's going to end by end of this month, because the journey has been incredible for all stakeholders involved. It took about 6 years with the bidding and with the involvement, with the engagement, with the interactions, and to see this come to life and how it has really connected minds and literally created the future at a site that is just in between Dubai and the capital Abu Dhabi, that has 5G connectivity, where the infrastructure is fully advanced and available, and where the legacy of the expo will continue to expand beyond the expo dates. Numbers published yesterday, 19 million visits to the expo site. Now take that number into consideration when you look at what's happening globally and the challenges. So that is incredible. And we think that these numbers will get to at least 20 million in the next 2 weeks. 191 to 192 countries, and then you have different pavilions from different institutions, and they all are part of the essence of what Expo wants to do. And we as Chamber of Commerce, as Dubai Chamber of Commerce, we are a partner with the Expo, and we have brought forward a lot of these activities that you see. I only highlighted 2 because these are the last 2 that are remaining, which is the Global Business Forum Latin America and the Business Forum related to the theme week of water, so the Water Business Forum. So it's through and every step of the way, it's the ICC, United Arab Emirates, it's the other chambers of commerce, it's the engagement of all our stakeholders, the different commissions under the ICC. It's the event as this one where we also include Expo experience in it. This is an opportunity truly not to be missed, whether it is global business forums that we do for Africa, or the recent one that we have done for the ASEAN region, or the upcoming one next week for the Latin America. So a message from the board of ICC United Arab Emirates and from my team, from all of us to you, is really make the most out of what did the pandemic situation meant for your daily interaction? How can we collectively utilize the experiences that we went through to take us forward? And what can we do as ICC UAE to support you more and help the profession that you're in? So all of this collectively is something that we would welcome to hear from you. And I know you have a lot of activities coming up. I did a lot of talking. I thank you for your for being here with us this morning, and I wish you a successful and a very interactive day. Have a good day. Thank you.
Thank you very much, Hassan. You've given us such a nice snapshot of where we are, and now we got to think about where we're going. And where we're going is looking at the theme of the conference, connecting the trade world, shaping the future. And where we are right now is in the world of commerce. The sands are shifting. The economic sands, the political sands, the sand is shifting. And this means everything is very, very unstable right now. But if we're going to try and build solid foundations for trade going forward, well, there's no better place than to come and do it in the desert. We're here 50 years ago, that's basically where we were. But you look around and you see the foundations, the structures, the commerce that has been built through vision, through innovation, through cooperation, and through collective engagement with the world at large. You just look at the UAE itself, it's a micronism of the world. So many nationalities, so many working together, all working in the same direction, and that direction is moving forward. And that is moving forward to lift the world and lift all our colleagues, and it's all really about people. But you know, we can have all of these aspirations, but if we don't work and work hard, nothing really happens. So like we had yesterday and today, we're going to be working hard, but we're going to have a lot of fun as well. Because if you work and have fun, you build relationships, and relationships that last. So this week has really been busy already. On Monday we had a lot of internal meetings, working groups, etc. Yesterday we had an internal dialogue meeting of the multilateral development banks who came to Dubai because they saw this as an opportunity for us to reconnect. Yesterday we had the Trade Law and Compliance Conference. Trade law and compliance, well, it doesn't sound very exciting, but I think it was very exciting. And I forgot to mention that our viewers on the internet, on YouTube, yesterday we had 17 countries and many participants viewing. Today I think we're going to have many more. So you're all very welcome, and sorry I forgot to mention you at the beginning. But back to the program. Yesterday we had the Trade Law and Compliance Conference, and of course in terms of trade law and legal issues, we've had a challenging time as well over the last 2 years. With the pandemic, we had so many contracts frustrated, we had so many force majeures, and quite frankly, we had a level of defaults we had not seen in recent times. There have been some major court cases in major jurisdictions that have given us lessons to be learned. Yesterday, we had lawyers, we had bankers, we had logistics providers, we had ship brokers, we had exporters, we had importers, all discussing, all agreeing, and occasionally strongly disagreeing. But this strong disagreement done in a spirit of friendship and comradeship leads to results. So one good thing about this pandemic, I feel, is that the ego has departed. I remember years ago watching the movie The Eagle Has Landed, but now it's The Ego Has Departed. People are open, people are looking for new ideas and looking for new solutions. So yesterday we have our Trade Law and Compliance event looking at legal cases, looking at some practical solutions like the UAE Guarantee Facilitation Project, which is going to yield very substantial benefits to the economy in terms of guarantees and demand guarantee practice. We moved on then to trade and compliance. And of course, compliance is a word that makes us all shiver a little bit, you know. It has touched us all in the last 10 years. And of course, yesterday I felt was a tipping point in our progress. I think with the people we had, the expertise we had yesterday, there was an acceptance that this is something that's not going to go away, and we need to collectively get our minds working together to find some practical and solutions. So we're taking ownership of the problem. So in our discussions yesterday, we had accountants, we had exporters, we had importers, we had lawyers, we had bankers, all moving in the same direction, maybe not at the same speed, but we are now aligning to move forward at the same speed. So trade law, compliance issues, KYC, very important. Yesterday as well, we moved forward and we were looking at the tricky situation and the very complicated situation of dealing with sanctions and the application of sanctions, the changing environment of sanctions that have never been at the level they're at now. So for business to succeed, we must be open, we must cooperate, we must actually think about the other people's problems. So you need to walk a mile in my shoes, I need to walk a mile in your shoes, and then we kind of start to understand. So finally yesterday, we were looking at also another very complicated issue, and these are all nitty-gritty technical stuff. We won't be so technical today, but a little bit technical, and tomorrow we were looking at the de-risking problem. The de-risking problem for banks in emerging markets, and we had wonderful frank discussion from some of the experts, or I shouldn't say experts, I would just prefer to say practitioners that are in the room today. We looked at de-risking of banks and the unintended consequences, but they're consequences, the unintended consequences of political leaders in the world. And these unintended consequences are consequences, unintended or not. So for those who are at the receiving end of the challenges, we have to reach out and support as best we can, of course bearing in mind the aspirations of the people in our collective countries. We have people in the room today for 42 countries. Yesterday I think it was 27, and it was so wonderful to see people arguing in such a friendly manner yesterday and having fun and joking, but sharing substance as we went through the day. And so I'm going to finish in a moment, but you know, sometimes you get inspired by something and it kind of stays with you for the rest of your life, you know. And I remember when I was a young guy working in a trade finance department in a bank a long time ago. And I had lovely long blonde hair in a ponytail. I know it's hard to perceive this right now, but that's the way it was. But I remember thinking I'd join the ICC. And it sounded kind of good to me. You know, I'm in trade finance and I have all these ICC rules, UCP, etc. So I started reading up on it. I didn't go Googling because there was no Googling. So I just started reading up a little bit on it. And of course, I saw the ICC was the International Chamber of Commerce. That sounded like somewhere I would fit in perfectly, absolutely perfectly. But then I read a little bit more, because I wasn't inspired yet, it just sounded maybe a little bit attractive for my CV, etc. But then I read a little bit more and something inspired me. And that was the story of the founding of the ICC. And the ICC was founded after a world war by a small group of men and women. And the gender balance was off then, okay? But there was women in the group who were really powering ahead. We need to do something about this. But that small group of people made a difference. Because up to this point, we didn't really have standard structures for rules for commerce in a complex political and geopolitical environment. But what inspired me was a few little words, that this group got a nickname after they started working, okay, because they were really trying to make a difference. They became known as the Merchants of Peace, okay? So kind of they were all from different countries, different backgrounds, but they collectively got their minds together and they made a difference. So here we are again, and we are also in a challenging time. And some people could say it's more challenging, others would say it's not so challenging yet. But we need to look to the future. We need to connect our minds and shape the future. We need to be connecting the trade world and shaping the future. So with those kind of few words, we're going to move forward in our program. And when we are looking at examples of collective cooperation and reaching out, as I've just said, to those who may not be as fortunate as us, well, that's what this conference is all about. It's the Global Trade Facilitation Summit. And in the last 2 years, you know, you don't hear as much about it as you should. But in the last 2 years, the global multilateral development banks, have played a huge role in keeping supply chains, or I should say the financial supply chain, open to emerging poorer markets. Emerging markets where, I'm not criticizing commercial banks, you're commercial, you need to, you know, your risk reward, that's what it's all about. But who would actually go where others would not go to keep the lines open. The multilateral development banks, I'll not go into detail, but you're going to hear that they really stepped up to the challenge. And we can learn a lot from how they operated and how they actually maintained business, maintained lines between developing and the developed world. So with this, I'm really lucky to have good friends with me here today. I was nearly going to say old friends, but Rudolf Putz always tells me, Dr. Putz, he always introduces me as his old friend, and I always say, Rudolf, go easy on the old bit, okay? Right, his friend. So we're going to move ahead with Dr. Marco Bon, who's going to moderate a panel with Mark is here, setting the scene with the development banks, their activities, what they've been doing. So Dr. Mark, please join us on stage. Thank you very much.
Well, I would like to call the members of the panel, please. Steve Beck, Rudolf Putz, and Basil Al-Hussein, and as well as Nathalie Lua, please. So, as they are making their ways into the podium, let me remind you, I'm Marco Bon, I work for the World Trade Organization, and
Maybe
Mexico.
you'll stand at the podium.
You want me to stand at this podium?
Yeah, you look better when you're standing. He's tall.
Well, I will not presentation, but just a very small introduction. At the WTO, we've been seeing another major swing of international trade, minus 5% in 2020. Plus 10.8%. We just got the numbers in real terms. That is, in value terms, plus 25% last year, and we're going to go for another rocky year this year. So we've seen a swing that's like no other in international trade. But what I think matters more than the swing is the fact that when we were all locked up during the COVID period, we have experienced that unique situation whereby goods have continued to move and provide the supplies, the essential supplies, while we were all immobile. That is, for the first time in economic history, people were totally immobile, but goods have been mobile across the borders. And I don't think you would find one single event of that kind in economic history, and that tells you something about the plasticity of the world trading system and the qualities of the trading people who have made it possible. In this particular panel, we are going to talk about the efforts by the multilateral development banks in meeting some of the difficulties in 2020 and 2021 in helping get goods, essential supplies, food, medical supplies, and others get across the borders, particularly for the developing countries which have been hit by all kinds of consequences from the COVID, and particularly the deterioration of sovereign ratings, the withdrawal of international banks lines at the beginning of the pandemic, and the fact that someone, as into the global financial crisis almost a decade before, had to step in to support those countries which had been being subject to these woes. So my panel here today, let me start from here on just on my right, or on my left, if you're looking at me from this side. We have Basil Al-Hussein from the International Trade Finance Corporation, which is the trade arm of the Islamic Development Bank. We have here Makiko Toyoda, who is the head of the Global Financial Trade Program of the International Finance Corporation, which is the private arm of the World Bank. We have Rudolf Putz, who is the head of trade finance for the EBRD. And we have the head for trade finance and supply chain for the Asian Development Bank, Steve Beck. With these excellent representative of multilateral development banks, I would like to, let's say, have two sides to discussion. One would be to discuss a little bit, sort of looking backwards, the important counter-cyclical role that what we call TFPs in our jargon, trade facilitation programs, have been playing during this COVID period, so during this big swing, and generally how in times of conflict, of crisis, we need those, the intervention of these MDBs, and how we need them to remain engaged in low-income countries and continue also their ongoing work to train bankers as well, so that gradually the bankers in the countries where they operate have the capacity to mobilize their own trade finance needed to do their own trade. So that would be the first part of the discussion. But looking ahead, that would be the second part of the discussion. We would like to discuss how TFPs are helping trade to be part of the energy transition, to combat illicit trade, to support the transition to digital trade finance and making supply chain more transparent. So you see all kinds of challenges that are now facing global trade. But let me turn back to the past and ask, going rightward, Basil, what kind of situation you have been confronted with when in February, remember, February 2020, that is not that far away. We've been asked basically to stop going to the office. You had calls from all your clients, not yet diverted to your home or to your mobile phone, screaming for help. How did it look like? How did the ITFC reacted? Please tell us more about your situation, and then we will go Makiko, Rudolf, and Steve, and then we will draw a few conclusions before moving to the next subject. Thank you.
Yes, thank you, Mark. ITFC and Islamic Development Bank, as other multilateral and even commercial financial institutions, faced difficult times at the beginning. It was a time of uncertainties. Nobody knows where this pandemic was going ahead. Is it going to escalate further, or it's going to be maintained? So, as you rightly mentioned, everybody start working from home, don't go to office. It is really was dark times for everybody. From a business perspective, of course, we were affected as everybody else. Our trade approvals volume went down sharply. Not because of default, but because of the current situations. There is less demand on normal commodities and products. Our portfolio depends majorly on energy financing, and the energy demand during the pandemic went down. So by default, the trade finance portfolio went with it. ITFC reacted. We did revisit our strategy to see whether the current strategy was relevant or not. We did enhancements on it. We did a lot of new things in order to adapt to the ongoing situation. The group, Islamic Development Bank Group, developed a Respond program called the 3Rs program, which is the Respond, Restore, and Restart. This amount of $2.3 billion was allocated under this program to help our member countries to face these difficult times and help them sustain their economies and face it, if we can say it. ITFC itself contributed big amounts to this strategy or a new program. We dedicated over $600 million just to support the medical supplies, food security for our member countries, help the least developed countries to import vaccines, to increase their capacity, medical capacity, their emergency rooms, medical equipments, food items, importing food items, to facilitate these things for them. And we allocated additionally $550 million to local banks in member countries to be channeled through local banks to SMEs respectfully. So these amounts, the 550 million, that was in addition to the 600 million, the first 600 million, was aimed to help the SMEs to hold on, to maintain their businesses, even the bare minimum, but to help SMEs in general in member countries, and in order to just wait and see how they can overcome this pandemic and these difficulties. Our programs were successfully implemented and help us also to boost our relationships with our member countries. Our new adopted strategy also included doing business differently, introducing new business lines, introducing new products for ITFC in order to help and serve member countries in new different ways. So ITFC developed new products. We were before, of course, we are trade finance corporation that doing Islamic trade finance, so we were limited by this mandate in our products. But the pandemic helped us to go beyond that. We introduced guarantee programs. We didn't do before LC confirmation business, so we started doing LC confirmation business, and of course, LC confirmation business is there forever. But being an Islamic financial institution and a multilateral one, not a commercial one, we had our own challenges in introducing such business lines. Also, we developed for the agribusiness the salam financing that we didn't do before. We are developing currently the local currency financing to help provide trade financing in local currencies in our member countries rather than just stick to the hard currencies. Also, we are introducing new products to help finance services and intangible assets, which is a totally new thing in the market from Islamic finance perspective. All of these updates and developments helped ITFC to boost its trade finance approvals. So from 4.5 million, that was dropped before from 5.6. We achieved last year in 2021, alhamdulillah, $6.1 billion of approval, which is a big boost and an evidence that the new adopted strategy and the directions to support our member countries in these difficult times was successful, and we saw the results. Thank you.
Thank you, Basil. And I just wanted to also, because there will be another panel, but I wanted to associate to that panel, although they are not on the stage, the African Development Bank and the Afrexim Bank, who also stepped in. What you're seeing here is a market safety net, in times of crisis. And these are the people who are stepping in when the market gets some tough going. Makiko, trade finance was immediately when the president, I remember when the president of the World Bank announced immediately at the outbreak of the pandemic, the emergency support by the World Bank, trade finance was part of it. Can you tell us why?
Sure. If we look back at COVID days, it was March 2020 when the World Bank President Malpass announced COVID-19 response package. That was 160 billion US dollars. And then IFC's trade finance operation was included. Trade is so important to respond to this type of crisis. We have a history of trade finance operations starting from 2004. But then if we think about those counter-cyclical role that IFC and other MDBs have been playing, starting from the global financial crisis in 2007, and then some coup d'etat experiences, Ebola crisis, and now this is a COVID-19 crisis where we try to utilize our lessons learned to apply to respond to this type of crisis. Trade finance, we think that it's really important component that we have to include in this emergency package. So IFC stepped up to implement strength programs to respond to those emerging markets needs. We included $6 billion US dollars COVID-19 fast-track facilities that include a global trade finance program, which I am heading. And then also we have other 7 trade finance products at IFC. We focus on global trade liquidity program to support those liquidity in the emerging markets, otherwise critical commodity finance programs and other those commodity-related related finance programs that we try to support emerging markets. If we look back the initial 3 months, starting from March 2020 to June 2020, we saw the big jump in the transaction volume. Under Global Trade Finance Program, we saw more than 100% increase in our commitments. It's simply because it was shock in the market that correspondent banks are walking away from emerging markets. Based on our survey, we understand that 40% of the respondent banks, our client banks, felt correspondent banking relationship stress during the COVID. So those are the tough time that among 169 banks that we surveyed, 23 banks openly told us that their trade finance lines are cut. So it was difficult for those emerging markets banks to operate during the COVID. And then this is space where IFC and other MDBs, we have to step in to provide additional support. We saw a big change in our trade finance operations. As Basel just explained, we saw two big changes in our operations. One is that we had a high percentage of agri and food commodities trade. So during the COVID, I think the industrial goods, maybe consumer goods, infrastructure-related goods, those percentage went down because of the lockdown and port closures and economies down trend. But then the increase of the agri and the food commodities was significant. So still now we have a high percentage of agri and food commodities. It's more than 40% at this moment. So this trend is still continuing. The other change that we saw in the market is that the strong demand from low-income countries. So in our World Bank language, we call it IDA countries, but those low-income countries' demand was significant. And then we try to accommodate those demand. So before the COVID, our trade finance platform, we served about maybe 55% of our transactions for those low-income countries. But then during the COVID, it started going up to 57%, and I think 2020 ended with 60%. Last year, 2021, this low-income countries percentage is 65%, and as of today, it is even 73%. So this is a good lesson learned that we applied from the global financial crisis 2007, that we decided to focus on our low-income countries partners, fragile and conflict-affected countries, so that our trade finance guarantees or maybe funded operations would be benefited from those affected countries. So those are big changes that we saw, and we tried to add new countries. For example, Djibouti it was a new country for us. It was a 99th country that we added during the COVID. We also added Ethiopia. We also added Yemen. So those are the countries that we didn't work before, but then because of this COVID crisis, it gave us a chance to go into those markets. So now we have a global footage, but then I think our focus is really to help those low-income countries. And our current operations, largest region that we are helping is actually Africa. Africa has about 40% of our operations. So we continue to try to serve those low-income countries. And then also one more thing I would like to add is regarding this Ukraine and Russia conflict that we see at this moment. World Bank announced emergency financing package of $700 million US. But then we try to serve our Ukrainian friends and partners' needs. And then I think this is not just that region. I think this impact is spilling over to the all global markets. If you think about our client countries like Egypt, for example, Egypt imports 55% of wheat from Russia, 15% from Ukraine. So a country like Egypt, Egypt has to think about substitution of those wheat imports. And then we see new trade corridors coming up, new trade flows are coming up. So it is actually affecting to other markets like Africa. I think we discussed among our other colleagues from Africa, like Afri-Exim Bank and also African Development Bank yesterday, but then countries like, for example, Tanzania or Senegal, they import wheat. I think they rely on more than 60% of wheat import from Russia. So we will see dramatic change in those countries where we are serving, and then hopefully we would be able to accommodate this type of drastic change in the new trade corridor, new trade finance. We think that because of the high oil price and also the food price is going up, we try to accommodate those high transactional costs. Just to observe what we have seen in our trade finance transactional platform, for the past 4 weeks, we saw about 50% of the increased transactional volume because of this Ukraine and the Russia crisis. And then also, if you just zoom into the wheat transactions, the transaction volume increased by 100%. In terms of the number of countries that we operate, we see the new exporting countries coming in. Those are the countries that we've never seen in the past. So those are a little bit of changes that we even see at the beginning of the crisis. I think this is just the beginning, but we will see more changes in coming months. In terms of the pricing, we also see some price hike. Some sectors, we saw 35% of the price hike. But then this is not a surprise for all of us because if you see, for example, US wheat futures, I understand that it increased by 40%. So we have to think how we can prepare for this type of high pricing, maybe affecting into the food security in some of the low-income countries. And then this is our role to support those countries. I think, Mark, you mentioned about capacity building needs. I think knowledge is power, and then this is our MDB's role to support this type of knowledge. We continue to operate advisor services, technical assistance through more like online type of training, virtual training. We have a staff who is dedicating their staff time to provide this type of training for African countries and other regions. So we think that our role is to support those emerging markets to build their knowledge during the crisis, and then we all have to share this knowledge so that we can prepare for the next different type of crisis, and then this type of lessons learned can be shared among the global partners, and then this is what we are hoping to support. Thank you.
Thank you very much, Makiko. I would like to emphasize exactly the reactiveness of multilateral development banks. Imagine all the calls coming from one day to another, but in order to respond to the calls, to have this indispensable link between the, let's say, large financial centers and the banks in the field in the developing countries when there's a huge gap between the perception of risk and the actual level of risk, which is a little less acute, then you have to have something prepared. You have to have a big network. You have to have the products in place. And we owe a lot to the EBRD, who has been an innovator in these programs. And I would like to hear, it's always very inspiring to hear about Rudolf's views in crossing one of these crises. There was the 1999, there was 2008, there is now 2020. What are you drawing as a lesson this time, Rudolf?
Thank you very much, Mark, also for reminding us of this crisis through which we have gone through the last decades. Our trade facilitation program, it was actually designed and created as a crisis response program, and it was a crisis response to the Asian banking crisis in 1997 and the Russian banking crisis in 1998. So it was really designed as a crisis response program, and it's very inspiring for me to see that we started this program 22 years ago, and 22 years ago it still fulfills its what have we learned from the COVID crisis? I think what we have learned from the COVID crisis is that it's very important for financial institutions and multilaterals to have crisis response programs in place when the crisis starts. You cannot develop a crisis response program when the crisis is here. You have to have it. You have to have it set up. And we were in this lucky situation that we have had already this experience of several crises, the financial crisis of 2007, for example, 2008. So we knew we had everything in place when COVID crisis started. Of course, what we had not expected, that we had to do this crisis response from our home office. And I remember the first days when we left our office and had to work from home, and all of a sudden we had to work from our private laptops, from our private mobile phones. But we had everything else in place. And what we saw in the first days of the crisis is that the supply chains had been disrupted. Yes? So countries closed the borders, the transport could not flow. So the first what we saw is that there was a request for extension of letters of credit and guarantees because importers could not take the merchandise and exporters could not deliver them. So extension of existing letters of credit and guarantees. What we also saw is that when importers and exporters saw that the supply chains were disrupted, the importers immediately saw the need to keep higher stocks. Because we are living in a world, we had been living in a world of just-in-time, but just-in-time did not work anymore. So all of a sudden, importers had to keep higher stocks. That means they placed higher contract volumes, resulting also in higher trade flows. Generally, trade was down, and in many countries we had seen that there was generally less import, and as Makiko had mentioned, there was increased demand for import of foodstuff and food commodities, but trade volumes were down. But at the same time, demand for our programs increased, because when crisis comes and risk increases, commercial banks, they are the first to react. Commercial banks become more cautious in lending to clients. They become more cautious in lending to foreign financial institutions, more cautious in taking risk on exotic markets, on smaller countries. So all of a sudden, a lot of business which had been covered in the past by foreign commercial banks had to be covered by multilaterals. So although the trade volumes went down, demand for trade finance increased, and particularly also for risk cover by multilateral development banks. I had been talking about imports and importers keeping higher stocks, but on the other side, we also saw a need for extension of performance bonds. In countries like Turkey or Greece, exporters, they produce not only goods, but they produce also services. So construction companies who had got orders for construction places in Africa or in the Middle East, all of a sudden they could not fulfill their contracts, so they had to extend for performance bonds. So all of a sudden there was also need for extending the tenors for performance bonds, also on the export side. In addition to being a program as crisis response, our program is also a development program. And we have a very developed toolbox for helping smaller banks in less advanced countries to develop trade finance activities. And we had been used of providing our trainings and technical assistance by face-to-face trainings and by sending a consultant to our partner banks. All that was not possible anymore. But we were in the lucky situation that we had already developed an online training program. And when COVID crisis started, we just offered online training to our partner banks, and we had a record number of bankers in partner banks using our program for training new staff and getting new knowledge through online training. And we have learned from this experience, and digitalization of technical assistance. It's also one of the projects which we have embraced and which we will continue also in future. And digitalization of trade finance generally, I think it's one of the things which we have learned from the crisis, how important it is in future also to replace paper-based documents by electronic documents.
Thank you very much, Rudolf. All in all, multilateral development banks have been financing anywhere. I'm not going to give the numbers exactly. We haven't checked them, by the way, but anywhere between 30 and 40 billion during every single year of this very high swing. Asia, having become the powerhouse of trade that it has become, of course, the Asian Development Bank's Trade Finance Program has been largely solicited during this crisis and has grown quite significantly. I would turn now to Steve about his experience and then maybe make the transition to now that we're not actually returning to normal. I think there's still a high demand from low-income countries because they're coming out of the crisis with worse financial that they came in, which is a big difference with the global financial crisis, which was a developed countries crisis. Now the developing countries are going to come up with more debt, deteriorated fiscal positions, sovereign ratings that are still deteriorated, and so on. So your experience, Steve, and then the challenges ahead before we actually move back this way for TFPs, and how you will help shape trade and trade finance in the future, because now I'm afraid this is the ransom of success. You have a leading role.
Indeed. Thanks, Mark. Yeah, I'd like to start by picking up on what Rudolf was talking about in terms of the crisis response. We've started to discuss within Asian Development Bank now what transpired over the COVID period. Not that I think it's necessarily over, of course it's not in many parts of the world, but we're starting to look back. And to Rudolf's point, we have these incredible tentacles all over the world, meaning agreements with banks, insurance companies, and it's an incredible network that can be ramped up, or, as the case may be, ramped down according to the situation that's going on in the world. And so this is one of the fundamental reasons that the trade finance programs are such excellent crisis response vehicles. And I think that we're now starting to have a discussion around maybe other sort of imaginative ways, in addition to trade, that we can use this same kind of a model to intervene quickly in different types of crises. So there's some potentially some very interesting thinking going on in that regard. Now, at the beginning of the crisis, that sort of network of partnerships through the trade finance program really facilitated excellent sort of discussions and dialogues. I mean, in a crisis, things are not clear, right? People don't know what's going on. So it's critical that we have these, set up these calls and so on that we did. And we were actually very well coordinated. And Vincent, you were involved in some of these discussions between the banks to talk about, how do we manage the situation? If we can't get documents to a bank to check these documents and their issues with a particular transaction, how do we work that out with ourselves? And I think that as a community, a global trade finance community, we can be very pleased with the way we coordinated. And I think there is some scope to say, at the very least, that the trade finance programs at the multilateral development banks helped underpin that. And the International Chamber of Commerce also played really a facilitating role in bringing us together, as as you've done with this conference, Vin. So coordination, I would say, I think if we look back, we coordinated quite well. That's one thing. And of course, going forward, when there are more crises, we need to ensure that we continue to do that. Second thing is that if you would have told me before the crisis that our business had to go completely virtual, I would have screamed very loudly and been quite skeptical about whether or not we'd been able to manage. And yet, with the relatively limited tech that we'd put in place, and I think this is true for the industry overall, I think we were all quite pleasantly surprised. We managed, without skipping a beat, to transfer our business completely virtually, which is quite interesting. So that was good, But on the other hand, I think we also realize just how vulnerable global supply chains are and how critical they are. I mean, before COVID, people didn't talk about supply chains and just how important they were. But during the crisis, of course, when we realized how desperate we were for things like personal protective equipment or test kits and ventilators and all the rest of it, all these critical goods, among others, we realized how important supply chains are, how vulnerable they are, and how critical it is that we make them more robust. So I think that's another thing that we've taken from that. When the crisis really hit, we contacted our partner banks to say, look, which companies among your clients are involved in the supply chains for some of these critical COVID goods, the ventilators, et cetera, et cetera. And the banks didn't know. So then we went to the WHO, we went to other organizations, and what we'd realized is that the supply chains for these critical goods had never been mapped out. People didn't know which were the critical companies involved in each of the phases that are required to manufacture and distribute these critical goods. So we worked with a company, some data scientists, to do some of that mapping. But the point I want to make with respect to supply chains is we recognized that they need to be made much more robust, but also we know little about them, and we need to drive transparency through them. For a whole variety of reasons, including to verify and monitor environmental and social standards throughout the supply chain, which is one of the great challenges of our time, which maybe we can talk about in the second segment. But just before I do that transition, I just want to mention that our business grew both in terms of transaction numbers and dollar values by over 45%. We're operating in 16 different countries. Our largest markets are Vietnam, Bangladesh, Pakistan, and Sri Lanka. In addition to that, we do, further to Makiko's point, agree and subscribe to the idea that knowledge is power, and doing these transactions is certainly important to closing market gaps, supporting growth and jobs that come from that trade-led growth. But it's not enough to just do the transactions. There are a whole range of different elements of knowledge that can help us close these gaps. And so we're very active in that space as well. So going forward, I don't think the crisis is over. We've got the conflict in Ukraine and Russia that Makiko referred to. There are going to be a whole bunch of knock-on effects. The relationships, economic relationships, are complicated and probably much more connected than we had imagined. And so I think we need to be very nimble and watch that very, very closely and ensure that the role that we can play helps ensure that we're able to smooth out some of these bumps, especially when it comes to commodities, whether it's food or energy. A lot of our countries depend on these commodities, and the strains that some of these countries are going to feel are going to be very important and potentially very dangerous. And we're going to have to work together, public and private sector, to ensure that we provide as much support as we can where it's needed. Excuse me. Thanks.
Thank you very much, Steve. In the interest of time, I'm afraid we're running out now a little bit of time, and I wish we had more time to speak about future challenges for TFPs, but can I ask for 1 or 2 minutes of your time and setting the priorities that you have for the year or two to come, Rudolf, Makiko, and Basil, each of you?
Yeah, the Priorities. Of course, it's crisis response to the crisis currently between Russia and Ukraine. I think this is what worries me most. I'm really worried about the long-term consequences of this conflict, which may have consequences which nobody may have ever thought before, also for food security. Keep in mind that Ukraine is the worldwide largest exporter of grain, and Egypt the worldwide largest importer of grain. And this grain which comes into Egypt, as mentioned before by Makiko, it comes mostly from Russia and Ukraine. Now, if Ukraine doesn't manage to get its crop going, and there are only very few weeks left, they need fertilizers, they need diesel, they need seeds, and if this crop does not happen, grain prices will further increase. And I'm afraid that the gap left by a shortfall of grain in Ukraine and perhaps also of Russia, it cannot be covered by other countries. Of course, there will be more demand for grain from Canada, from the United States, but I'm not sure if these countries will be able to cover the shortfall of grain in Ukraine. And it's not only a matter of price, it's a matter of availability and who can afford this food, who can afford the price. And will it be possible even to transport grain from Russia to other countries when there are sanctions? Because currently nobody wants to touch under these sanctions. Will these sanctions be lifted? Will they continue? Will they refer also to food products? So this crisis, which keeps me very worried. Otherwise, digitalization, as mentioned before, and we shouldn't forget about the need for sustainability and green. It's one of major topics of EBRD, major objectives. And of course, we will have an influence also on our trade flows, and we give preference particularly to financing trade flows which are sustainable and help our partner countries in becoming more independent from fossil fuel and to invest into renewable energies.
Thank you, Rudolf. Makiko?
Thank you. Just add one comment. Disrupted supply chain is maybe one of the most big concern that we have at this moment. So how could we help those disrupted supply chains? How could we promote the SME inclusion during this difficult time? I think what IFC is now trying to do is to expand our product coverage. So I think I totally agree with all what is said by our colleagues here, that we tried to come up with more like a supply chain finance support. So in this case, we try to strengthen more like a payables finance, reverse factoring, receivables financing. This type of area is something that we'd like to focus, and then we are trying to come up with a new product. From that point of view, I totally agree with Rudolf that digital trade, blockchain is maybe a future of trade. So, and then this is maybe something that that can contribute to serve to promote the SME inclusion. From that point of view, IFC also did pilot digital transactions last year, and then this is the beginning of our journey. But we tried to accommodate such a needs of digital trade so that as MDBs, we also would be able to help our partner banks in emerging markets to catch up on this digital movement. So I think those are maybe digitalization and also supply chain finance. Those are the areas that IFC would like to strengthen and then increase our support to emerging markets partners.
Thank you, Makiko. And finally, Basil, and we would have almost closed the panel on time.
Thank you. We share the same concerns for our member countries. We are not out in the clear yet, so we need to have our strategies live, adaptive and agile in order to have a better response to our member countries' need. We need to introduce innovations to our trade facilitation and capacity building programs to find new ways to serve our member countries. As Makiko said, digital trade is something new in our world. We did launch 2 digital initiatives at ITFC level. Also, we are considering more and more innovative solutions and new products for our member countries. Also, we need to have more alignment with the other MBBs. We work together on serving all beneficiary countries. We introduce and drive the markets for better trade development and facilitation. Thank you.
Thank you very much. I would like also to associate the African Development and the Afrexim Bank, who will be on stage just in a short while, to the efforts of the multilaterals, and a big round of applause for the risks they have taken during this period and keeping trade open. Thank you very much.
Brilliant panel, and really great. And so during that session, we heard a lot about the challenges in the least developed countries, the poorer countries. It was mentioned correspondent banking and de-risking, and so these are really important challenges that we need to address. So we're moving forward in this team, looking at these challenges. So we're going to be looking at correspondent banking in decline or in transition. And Srina Keshavan of Trade Assets, if Srina could join me here on stage, I see he's joining me, and he'll be dealing with this very delicate and very important subject. Very important in the context of trade facilitation and keeping the wheels of trade moving forward. Srina, and the clicker is there. Start there, I'll get you.
All right, thanks. Good morning, all. Thank you for being here. I feel rather restricted standing behind the podium, so I've requested for a handheld microphone. So in the meanwhile, I thought I should offer some relief. We just had a very important discussion, but it was serious. They talked about serious matters. And these are matters that are of import to all of us, wherever we are. But in an attempt to provide some diversion, it's quiz time. Yep, sure. Quiz time. So there are some rules to this game. You will not Google for the answer. I see somebody already picking up their phone. Thank you. You will not Google for the answer. And you will not shout out the answer. I will decide who's going to answer that question from those who raised their hands. Okay? Is it closer now? It's better? All right, thank you. So the question is, and if you're from the country that this relates to, you're excluded from answering this question. Also, all representatives of multilateral development finance institutions are excluded. No, there are many others out here, but we've got to make it fair. What is the biggest contributor of export revenues for Costa Rica? You are in the qualified majority, sir? Okay, give it a go. The answer the gentleman provided is bananas. Close, but it's actually medical devices. Brazil is the largest exporter of coffee. Which country is the second largest? Yes, madam. The answer the lady has provided is Kenya. The answer is Vietnam. Sorry? I set the rules. Third question. Which country is the largest economy in Africa? That should be an easy one. Sir? Correct. A round of applause for the gentleman there. Nigeria is the largest economy in Africa, as on date. And one final question. And I know there are many in this audience who can answer this question, but as I said, it relates to your country, you're excluded. So, which country issues the largest number of letters of credit? Are you from Bangladesh, sir? You know. He's correct. Bangladesh. So this conference is all about connecting the trade world and shaping the future. So some context here for those who are unfamiliar with the terms that we're using. Is it working? Am I supposed to be pointing there? There it is. I'm speaking from personal experience, and so you may choose to see things differently. My banking career began in 1985, and I joined at the lowest of the lowest possible rungs as a trainee. It was with the Bank of Credit and Commerce in Hong Kong, and when that bank shut down, my banking career ended. I moved on to do other things, but I remained in the area of trade finance. And there are some very important lessons I learned as a young, wide-eyed banker. Living in Hong Kong and working in Hong Kong was, of course, an incredible experience. But what I took away from my years with the bank was, number one, banking is a profession with purpose. A purpose that has to make a difference to communities beyond your own. The second was that when you address risk, don't address it from a posture of fear. Risk is ever present. Risk has the potential to damage, but we have to get used to the idea that we coexist with risk and not barricade ourselves from risk. How are we going to do that? And the third concept I took away was the concept of South-South trade. At a time when, probably at that time, talking about the 80s, it wasn't fashionable to talk about that. And so in the course of my career, I had the privilege of financing tea from Indonesia to Pakistan, cotton from Uzbekistan to Taiwan, sugar from Mexico to Benin, manganese ore from Gabon to China, and fish meal from Peru to China. And it was incredible in terms of the learning experiences I had as a young junior banker. Oh, I forgot about chemicals from Thailand to Senegal. So there's a whole world out there beyond what we might traditionally be thinking about. And there are so many opportunities out there. Now, I did mention my association with Bank of Credit and Commerce. So my awareness of what financial crime is goes back to those times. In 1989, were the first regulatory actions that were taken against the bank. And so we all started wearing this new pair of spectacles called financial crime compliance. And it dramatically changed the way we communicated with our clients, how we verified records, how we didn't take anything for granted. And this movement has gathered pace, particularly after many of the largest banks of the world ended up getting huge fines for breaches in financial crime compliance. But then I asked the question, is financial crime only a problem of the developing economies? And looking at some of the data that's available, trade between 134 developing countries and 36 advanced economies, you look at the number there, the sum of value gaps. And when you look at all the trade that the 134 developing economies do, you see another number there. Now, when we talk about financial crime, yes, it is very international. And it's also the case that there has to be the collaboration and connivance of parties where the funds are intended to move. I recall an incident that was very embarrassing to one of the world leaders, where he thought he was speaking privately, but it was picked up by a journalist, where he named a certain country as being amongst the most corrupt. And the president of that country responded by saying, yes, we acknowledge we have a problem with financial crime, and we are doing our best as a government and with the resources that we have to address the problem. But it would be so helpful if the banks in the financial centers of the world did not provide safe haven to these criminals by opening bank accounts and allowing them to deposit their ill-gotten proceeds. And in that connection, here's an extract from UK Parliament's report as to what the London Laundry Act is all about. This is just one of many examples. I didn't mean to pick on the UK, but it's just one of the most vivid examples of how perspectives need to change. We have a worldwide problem, and it's not something that only the developing countries are responsible for in terms of eradicating. So the cause, there's much to speak about. What is the effect? Look at the graph in the center. And that tells you the level of deprivation that has been wreaked on the banking systems of many of the developing world. So what should be the response from the developing world? We agree, and I'll read it out for emphasis, we agree financial crime is a menace. And we agree that integrity is non-negotiable. That is a human value. It has nothing to do with the country you come from or the institution you work for. But unfortunately, we live in a world sometimes where decisions are made about what we do somewhere else, and we don't have a say in the matter. But then we have to be part of the international system, and so we do our best to comply. Now, this is a bugbear. You have dozens upon dozens of ratings and indices, and it's almost as if it's passing of an opinion on the entire system or the entire nation. So you may rank very low on a corruption index, you may have not the most impressive credit rating, but that is not representative of who that nation is or what businesses or banks in that nation do. Through an act of self-preservation, the more powerful banks raise their drawbridges, and they look to isolate themselves. You know, I find it funny that there are banks who say they're global banks, and they exclude whole swaths of the continents as not being part of their market space. It doesn't make sense to me. I don't know if it makes sense to you. And then, of course, there are the international banks who are very proud of their network. Back in the day when BCCI existed, the bank was present already in 75 countries. And that was quite distinctive for a bank as tiny as BCCI in comparison to the giants that existed and continue to exist. So there was also a lot of concern about payments. So they didn't want dirty money flowing through the clearing accounts. So de-risk, chuck them out, condemn the bank as a whole for having allowed some dirty money to pass through. And what happened? Trade finance became the casualty. So what we ask for is, instead of de-risking, we ask for risk mitigation. We ask for risk management. Don't make sweeping judgments. Don't make sledgehammer decisions. It has consequences. You know, when you land at Bangladesh and Dhaka's Shah Jahan Airport, or in Lagos's Murtala Mohammed Airport, or in Vietnam, Ho Chi Minh City's Tan Son Nhat Airport, what do you notice? You notice a buzz. You notice the excitement. You notice the desire to better yourself. You notice aspirations. You notice that there's so much happening here. And it would be tragically a missed opportunity, particularly for those institutions who have the capabilities to find ways to do business in some of these countries as well. For a bank to say, I don't have limits, or a bank to say, it's not part of a risk appetite, I understand every bank has its performance metrics and its policies and its preferences. By all means, do that. But there are opportunities that are waiting to be picked. And this is not a plea to compel you to look at them, but just a suggestion. There is profitable and good quality business to be done out there. And I have personally experienced it. There requires, of course, a good understanding of what's the underlying, a good KYC process by which you know the counterparties, proper structuring, proper monitoring, proper ongoing risk management, evaluation. And yes, it's harder work, but it can be extremely rewarding, not only from a satisfaction perspective, but even from a revenue perspective. Strange contradiction. I was thinking about this is my own conclusion. Many parts of the developed world have moved on to open account trade finance, if you can call it that, supply chain finance, whereas the developing world is still heavily into bank guarantees and letters of credit. And you get statistics about the rates of default. And it suggests to me that the vast majority of payment instruments issued by banks in the developing world are being paid. And so that should be some source of comfort. Bear in mind that in many parts of the developing world, they operate under very strict foreign exchange regimes. So when a letter of credit is issued or a payment instrument is issued, there are certain processes that are engaged in to assure that the transaction will be satisfactorily completed. Yes, there are instances when it doesn't go the way you anticipate it, and what could have been done better is the next question. Or was that a wrong judgment? But certainly countries are less prone to frivolous expenditure. So what's the real life impact when a confirmation is denied, when a discounting of a bill is not done? What are the consequences? How does it actually play out? It blocks migrant remittances. There are communities that rely on a serving member's ability to remit monthly payments. Insufficient fuel to fire up your kitchen stoves. Turn on the lights. How are the children going to study, do their homework? I see letters of credit being issued for edible oils. I see letters of credit being issued for grain. I see letters of credit being issued for fertilizers. And the impact of refusing those transactions is reduced access to food that these countries do not produce. When machinery orders are turned away, the inability to spur job creation. Now, everybody wants these countries to succeed, but they have to be provided the means to do that. And of course, investment flows choked off. The list goes on. Finally, my final slide. We have to get with the program as developing economy banks. There are protocols that we have to observe. There are no compromises. We just have to make sure that we cross the T's and dot the I's. There are technology solutions available to you, one of them being trade assets, which helps to build connectivity regardless of where the bank is located. Come on board the platform and reach out to all the other members. And we have a truly diverse international makeup. We have to make every effort as banks in the developing world to raise the level of transparency. We must be quick and proactive to provide information to our correspondents. And our correspondents have to be convinced that you have done a good enough job of evaluating these transactions so they feel safe. They feel this is a transaction that remains bankable. Yes, you want the best pricing, but there is a certain cost that has to be paid. And pricing has to be negotiable. It's not that you set a price and then take it or leave it. Through trade assets, we hope to diversify your correspondent networks, and we look to see for opportunities where you can also transact both bank exposures on a primary basis as well as a secondary basis. And banks with their balance sheet constraints need this service, and we believe we're doing the right thing at the right time. And that is what I wanted to convey to you on behalf of Trade Assets. And we would welcome any opportunities that we have with you during the next 2 days to talk to you about trade assets. Thank you very much.
Thank you very much, Srina. Could we give him a good round of applause? That was a very, very inspiring presentation, Srina, and I think it's making us double think our role in trade facilitation. So just a few logistical things. We're going to go for coffee break in 30 seconds. Not yet. Sit down again. Yeah, okay. We're going to go for coffee break in 30 seconds. But before we do, don't forget you're all going to Expo, and I'll be giving you information how you'll be able to collect your tickets for Expo a little bit earlier. Later. And of course, you'll be going to Expo, compliments of Dubai Chamber and ICC, but Dubai Chamber in particular. Also this evening we have the gala dinner, the Global Trade Facilitation Summit gala dinner. There will be buses outside here. I'll tell you more later. But just so you know, the gala dinner is in the Park Hyatt, which is only 2 kilometers from here. It's in a taxi. You're there in 4 minutes, just in case there's any miss up. But the Park Hyatt, think you're parking your car, because last year someone went to a different one. Okay, so my dear friends, we're going to have a coffee break. We're going to try and get back here at time 11 o'clock, 20-minute coffee break. But it's a really good session coming up next. It's regarding something really important: the UAE, the United Arab Emirates, joining the European Bank for Reconstruction and Development as its 72nd shareholder, and the plans that are unfolding to expand trade through this cooperation. So enjoy your break, talk, communicate, and we'll see you later. Good. Thank you for your all kind, your kind attention all morning. Our last session, moderated by Mark O'Baughan of the WTO with the leading multilateral development banks, one thing struck me, that very much of the good work the MDBs are doing, the multilateral development banks are doing, exporters and importers are not aware of it, because when they're taking the risk on a bank in an emerging market, it's behind the scenes. As far as the exporter and the importer are concerned, in most cases, they're just dealing with the commercial banks, whether it's an issuing bank or a confirming bank. But behind the scenes, the multilateral development banks are underpinning it and supporting the trade and supporting the risk. So something really exciting has happened in recent times here in the UAE, but I think also for the European Bank for Reconstruction and Development, the EBRD. I think it's a win-win situation. So the UAE became the 72nd shareholder in the European Bank for Reconstruction and Development, and I guess the question is, what can we expect? That's the question. And I guess the person to give us the answer is Dr. Rudolf Putz of the EBRD. If we could give him a good round of applause, please.
So, Vincent, thank you very much for this introduction, and thank you also very much for organizing this event. Because it's actually it's an historic moment, because it's the first time I remember that all development banks coming together to meet at one conference. Frequently we meet at our locations, for example, at the World Trade Organization in Geneva. But this was an excellent opportunity for us to come together and not to meet our colleagues in our development banks, but also our clients, commercial banks, and for clients of the clients, importers and exporters. I would also like to use this opportunity to thank Dubai Chamber of Commerce for hosting this event. It's great to see that Dubai Chamber of Commerce has chosen this opportunity to invite guests from all over the world and development banks from all over the world to come to Dubai, and also to celebrate the first year of membership of Dubai as a shareholder of EBRD. And in my presentation, I would like to show also to ICC, United Arab Emirates, and Dubai Chamber of Commerce, what are we doing and which opportunities there are also for importers and exporters in Dubai to take advantage of financing provided by EBRD. In my first slide, I want to show you a bit where are we active and in which countries are covered by our activities. EBRD's countries of operation, it started 30 years ago, and EBRD was founded as a development bank to support socialist economies in the transition from a socialist system to a market-based system. And originally, EBRD's countries of operation was only Eastern Europe and for CIS and Southeast Europe. But over years, we have learned that experience which we have learned from Eastern Europe and CIS can be translated also to other countries, is needed also in other countries, and we have expected and extended our activities also to Mediterranean countries, countries which are close to the European Union, and where EBRD thinks that we can also make an impact and help countries close to the European Union to come closer to development and to connect to the world trade. So today we have also countries of operations like Morocco, Tunisia, Egypt, Jordan, West Bank, Gaza, Turkey, Greece. So also Mediterranean countries have joined for EBRD not only as shareholders but also as countries of operation. And if you look at this map, these countries were not so far away from Dubai. I think Dubai is just in the middle between our countries in Eastern Europe and CIS countries and Northern Africa and Mediterranean countries. And I think that in the current situation, Dubai will benefit from a change of trade flows. I expect in the next months more trade flows between Central Asia and the Middle East, because as you know, traditionally there had been a lot of trade flows between Russia and Central Asia and Caucasus countries. And I think some of these trade flows we will now diversify, and I think it's an opportunity also for importers and exporters in Dubai to take advantage of these countries. And I have seen also plans of Dubai Chamber of Commerce to offer to open offices in other countries, and perhaps it would be great if we see more offices of Dubai Chamber of Commerce also in EBRD's countries of operation. I've seen that there is already an office in Baku, but I think there is good potential also to look at Central Asia, which is not far away and well connected. As mentioned before, EBRD has 72 shareholders. It's all our countries of operation are shareholders of EBRD, but also all OECD countries. And it's good to see now also Dubai as the latest shareholder joining for EBRD. Majority of the capital is held by the European Union, by countries of the European Union. And keep in mind that the EBRD was developed as a development bank of Europe for Eastern Europe and CIS countries. So it's not surprising that the majority of the shares are still held by the European Union. And as mentioned before, Dubai joining and United Arab Emirates joining for EBRD as a 72nd shareholder, it's an opportunity for United Arab Emirates to learn about EBRD's countries of operation. And on Monday I went to Dubai Expo, and all our countries of operation were also represented by own pavilions. And within a few hours, you can learn a lot about EBRD's countries. You don't even have to travel there. You just go to Dubai, Expo, and you see all these countries in a very short period of time. And even myself, who have been to most of our countries, I found something interesting in the pavilions. So for all the participants of this conference, I would strongly recommend it to take advantage of an excursion to Dubai Expo and to see all our countries represented there. Over the years, EBRD has done significant investments into all our countries. EBRD covers financing in all sectors of the industry. So it's not only trade and trade finance, but it can also production, it can be service sector, it can be EBRD provides capital for investment. EBRD provides also long-term finance, not only a short-term trade finance. What do we want to achieve? EBRD's strategy, of course, is to support all our countries in the development of their economies, and under my program, the Trade Facilitation Program, and the development of trade and trade finance. But EBRD has set itself a goal to become the leading development bank in green finance, in sustainable finance. And last year, EBRD already achieved 51% of all financing provided by the EBRD in 2021 was already sustainable finance. And sustainable finance, that means green economy transition, projects which help our economies to save energy, which makes them independent from fossil fuel, investments into renewable energy. So this is a big topic for EBRD as a bank, but also under our trade facilitation program, we give preference now to trade in sustainable machinery and equipment and sustainable investments. Over years, our trade facilitation program has grown, not only because trade finance volumes have grown, but also because we have added more countries of operation in the last years, of extension to the Mediterranean countries, to Northern Africa and the Middle East. So it's not surprising that over the years our trade volumes have grown, but they are much smaller than those of our development banks, because we have a focus on small and medium-sized enterprises, on small banks in smaller countries, in emerging countries. So we are not volume-driven. EBRD is an institution that is ready to finance also smaller projects in smaller countries and smaller projects which have been financed by smaller banks in emerging countries. Under the trade facilitation program, we support for trade finance, for development of trade finance, from export production to transport, storage and distribution, but also receivables. So it's not only trade finance, it's also receivables financing, and we are working closely together also with all institutions for provide also receivables financing, factoring and supply chain finance. Under the trade facilitation program, we provide guarantees that cover for payment risk of issuing banks of trade finance instruments to confirming banks. We provide also liquidity in form of short-term cash advances. And as mentioned before, we support also for development of factoring and receivables financing. And not only domestic business, but we also help our partner financial institutions to develop also international factoring. As mentioned before, for strategic targets of EBRD is to become the leading development bank in sustainable finance. We have decided to exit financing of fossil fuel under the trade facilitation program. We do not finance anymore fossil fuel, and we have set ourselves also for target to support our partner banks in the digitalization of a trade finance business. These are the priorities for the next 5 years. We work with a 5-year plan, a strategic 5-year plan, and these are priorities for our trade facilitation program. As mentioned before, green and sustainable is very important for the EBRD. We have already managed to finance more than 1,000 green trade finance transactions in 27 economies. Examples, for example, is a wind power plant from Denmark to Ukraine, or wood products from Romania to Egypt, Morocco and Tunisia. So these are the transactions which have priority for the EBRD. These are transactions where we can offer also longer tenures than we would normally do. Normally we provide tenures in some countries of 6 months, 12 months, but for green finance in some cases we can even offer tenures of up to 5 years. Most of you are familiar with the trade facilitation programs of the development banks. It's a typical guarantee transaction. We always have an issuing bank and a confirming bank. And as mentioned before by Vincent, we work only with commercial banks and we do not lend directly to importers and exporters. And the reason is that we do not want to become a competitor. We want to stand behind commercial banks when they need us, but commercial banks, they should face for customers. They should deal with importers and exporters. This is a business which commercial banks can do much better than international financial institutions. So we rely on commercial banks to deal with importers and exporters, and we stand behind them, but only when they need us. If commercial banks can do a transaction, we are not without our support, we are not involved, and we are not issuing our guarantees. As mentioned before, green finance is important for us. We help our partner banks and our countries of operation to become more independent from fossil fuel. We are happy to support projects which finance investments into renewable energy. And I've chosen here an example of Ukraine, because Ukraine is a country which is strongly dependent on imports of fossil fuel, and fossil fuel not only for heating or for energy generation, but also for the production of fertilizers, for example. So we think that fossil fuel should continue to serve where it's mostly needed as a feedstock for the chemical industry, for the petrochemical industry, for production of fertilizers. But wherever possible, we try to support our partner banks in financing projects in renewable energy, and here a wind power plant in the western part of Ukraine, We hope that even in these turbulent times, the wind power plant will continue to help the Ukrainian people to become independent and to have energy available when they need it most. Another case study would be a financing of a hydropower plant in Armenia. Armenia is a typical EBRD countries of operation, a comparatively small country, but with a strong growing economy. And of course, this economy needs also green energy. And in this case, EBRD supported the delivery of hydropower equipment from Austria imported into Armenia and helping Armenia to provide energy and to get energy from hydroelectric power plants and to become less dependent on import of fossil fuel. As mentioned before, we have decided to exit fossil fuel. That means our business volumes in fossil fuels are now replaced by other trade flows. More and more, we are financing trade flows for food stock, for foodstuff, and I think in the current crisis, which we see in Ukraine and in Russia, a lot of our support will be for financing stocks and imports of grain into our countries of operation, including Egypt and other countries in North Africa that in the past got the grain delivered by Ukraine and Russia. And if this grain should not be available in the next months and in the next years to come, then of course we will help our partner banks and to finance imports from alternative sources. We are working closely together with associations, not only with the International Chamber of Commerce, but also with trade and trade finance associations, including also factors FCI. FCI, the Association of Factoring Companies worldwide, and we have extended our guarantee program to support also for development of international factoring, so that import factors and export factors can do business with each other without taking risk on each other. In this case, an exporter in Georgia exports goods to Georgia, and the import factor is a bank in Georgia, which is TBC Bank. The export factor is the import factor is Arm Swiss Bank. The export factor is TBC Bank in Georgia, and under with TFP guarantee, we cover the payment risk of the import factor of Arm Swiss Bank to the export factor in TBC Bank. So it shows that the trade facilitation program works not only in working with banks and supports not only trade finance transactions, but also transactions which have been financed by factoring. United Arab Emirates is an active participant in our trade facilitation program, represented through commercial banks. 18 banks in the United Arab Emirates have joined the trade facilitation program as confirming bank, and they can use EBRD's risk cover in dealing in financing imports and exports with all EBRD countries of operation, and all these confirming banks, they can benefit from a 100% guarantee provided by the EBRD covering the payment risk of an issuing bank of trade finance instruments to confirming banks. So it's an excellent tool for going into new markets, for supporting importers and exporters in United Arab Emirates in doing business with EBRD's countries of operation without own risk. And over the years, we have supported more than 300 foreign trade transactions between United Arab Emirates and EBRD's countries of operation with a total volume of 400 million euros. We are ready to take own risk. We provide financing from our own capital, but we always try to involve also commercial banks and other developmental financial institutions and for commercial sector to co-finance with EBRD. We are ready to take risk, but we think that we should cover only risk which cannot be covered by the private market or by our institutions. So we have invited also other banks, commercial banks, and our development banks to co-finance with us. Co-financing partners for us are, for example, OPEC Fund for International Development, but also Arab Trade Finance Program is participating in our program as a co-financing and sharing part of our risk together with insurance underwriters and our commercial banks. As mentioned in our first panel today, EBRD's trade facilitation program serves not only as a crisis response program, but it's also a development program. And we are one of the largest providers of trade finance knowledge to EBRD's countries of operation. We provide training in form from face-to-face training, and our young friend Vincent, he has been working with us for many years in training our partner banks in doing documentary credits. We have now similar trade programs also for factoring and receivables financing, and what we have learned during the COVID crisis, that it's important to complement this face-to-face training also by online training, and we have got 9,000 bankers who have joined our e-learning programs, and they can use these e-learning programs to get more experience and knowledge in trade finance, using ICC rules in doing their business and to do business safely and fast and efficient. We are closely working together with the ICC. We are using in all our training programs ICC content. We are using content which has been developed by the ICC together with commercial providers of training programs, online training programs. We're working closely together with associations like the ICC and the FCI. So we see ourselves as a catalyst where our support is needed. We are ready to offer our helping hand to associations, to commercial banks in helping to provide technical know-how to our partner banks also in smaller countries and less advanced countries. On the last slide, you see our contacts. You see Vincent always with a smile, with a big smile on his face, and it's Vincent who has been giving us great advice on the development of our program. He has helped us to make this program successful, and he has also shared his positive experience with our development banks. So Vincent today is the catalyst, keeping all development banks together, bringing from here to Dubai to meet at one place and to introduce our activities to our shareholders, including also United Arab Emirates. So I wish you much success in working with the EBRD and the other development banks and in using our programs for the development of trade and trade finance.
Thank you very much, Rudolf. Thank you. Good. Wonderful presentation. Thank you very much. Great. So as we can see, the important role of the EBRD is ever increasing, and with the UAE becoming a 72nd shareholder, I think it can only go from strength to strength, which is important in these challenging times. Just one thing, Rudolf, thank you for saying, Vincent, your young friend. You got it right eventually. You know, it took a while, but you got it right eventually. So moving forward now to another area where trade facilitation and trade support is so important. So of course, a land of challenges, but without any doubt, a land of opportunity. So we're looking at Africa. And Marco Bon is going to moderate this session again so well. So Mark, please come up and bring your panel with you. Lovely, great. Thank you. Give him a round of applause. Thank you. Welcome.
I would like to call the panelists, Mr. Drame, Mrs. Gwen Mwaba, and Mr. Khan, please join me. So let me introduce this session about trade and trade finance in Africa. I do have on my left Mr. Omar Khan, who is a Director of International Offices at the Dubai Chamber. I do have Gwen Mwaba, who is the Director and Head of Trade Finance at the Afrexim Bank, and just on my far left I have Lamine Drame, and he's the Head of Trade Finance at the African Development Bank. I would like to discuss in the continuation of our first panel with the MDBs the kind of challenges and opportunities as well for trade and trade finance in Africa, which is the new trade finance frontier, in my view, in the context of the current recovery. Recovery in Africa, certainly, that is uneven for the time being across countries. Those benefiting from rising and volatile commodity prices, but those who are importing those commodities, net importers of these commodity facing challenges, the need for global trade to support the recovery for many of these trade-dependent countries, and the scars from the pandemic issues I would like to maybe open the discussion with, and then turn to the trade landscape, what progress and challenge needs to be done in order to reduce the trade finance gaps in Africa, for trade finance to be ready, the trade finance industry to be more modern and ready to face the challenge, the long-term challenge of the free trade agreement of the continent, which will create new trade opportunities, but which will create the challenge of having to finance these new trade opportunities. So starting with the current situation, I'll have a sort of first round, and how do you see currently trade finance in Africa, current challenges and opportunities right now in relations to the current commodity boom and burst and cycle, and then looking ahead in the years to come. The floor is yours, Mr. Khan.
Is it me or ladies first?
You decide among yourself.
Thank you very much. Dubai Chamber has a group of international offices all the way from China and soon to Mexico. We have 4 offices in Africa. We've been engaging with the African continent very proactively for 10 years. We've just concluded the 6th edition of the Global Business Forum for Africa, and you know what I saw before, and is there's a lot of high-level financing coming in, but also we're very ingrained on the ground. We're seeing what the businesses are doing, the entrepreneurs, the SMEs. There's one of the biggest challenges that I see is that there is liquidity, but it's not always trickling down. And in Africa, for example, financing for SMEs sometimes could be at 25%. It's almost like credit card interest rates. And we've seen challenges, certain companies in the UAE looking at what the Chinese do, and certain construction projects that they are saying, look, I have this liquidity sitting maybe here locally. I could earn a very high and a pretty interest rate on my own project, and I will finance my own project and go directly. So there's that. There's a lot of also young entrepreneurs are looking into technology gateways, because we're seeing, and when it comes to trade, we're seeing the betas there where we have, you know, trade credit insurance, we have international factoring, and however, the African businesses are not always biting. They're still not going for that. They're very price conscious. They're very used to dealing face to face, and that's a challenge. There is a demand. There are projects. There is trade, and Dubai also is willing to export. But we, as Dubai Chamber, sometimes we get calls where we're saying NLC is there. Documents and bills of lading have been sent, and it's been released. However, because of the hard currency issues, we're not getting paid, and that's crunching our cash flow. We know we will get paid, but it's affecting our cash flow. So again, there's a lot to be done on the ground, and I know the previous speaker saying we're supporting the commercial banks, but there is a gap. There's definitely a gap, and somebody will step in sooner or later, and we have to be innovative, or we will miss out once the tide turns, if we're not aggressive and innovative in that region.
Thank you very much, Mr. Khan. Gwen, you are a specialist not only in crisis response. We were discussing that just earlier at the coffee break, but also in resource mobilization in the trade finance market, which is very dynamic in Africa. So and there are many players and there are many multilaterals who are ready to help. Can you tell us more about your activities and your resource mobilization?
Yes, absolutely, Mark, and thanks very much to everybody that's attending this summit over the next 2 days. I think as a Frexim Bank, which is basically the African Export and Import Bank, an African-focused DFI, I would be remiss if I didn't take a step back and really talk about our response during COVID, because we are just, trying to emerge from COVID and learning to live with it. Now, the biggest challenge, obviously, that we observed during the onset of COVID was that Africa was going to be left behind in the race to access to vaccines. And if we didn't address this, the whole of Africa would be crippled, given that, borders were shut, supply chains were disrupted. And if Africans could not travel because of lack of vaccination to negotiate business deals with other parts of the world, and also for foreign investors to come into Africa because they were afraid of the COVID situation in Africa, we realized that in the medium to long term, Africa would be closed off. So our first response to that challenge was to really look at Africa and how we could help with procurement of vaccines. So we had a program, and it's still running actually, which basically is a whole of Africa approach to procurement of COVID-19 vaccines. So even though the vaccination rates are still low in Africa, you can imagine how much worse it would have been without that intervention. And our intervention was a $2 billion intervention to procure Janssen vaccines to complement the work of COVAX. So that was one problem that we needed to address. Now, the second problem beyond COVID-19 vaccines that we observed was there wasn't enough PPE, masks, and other COVID-related materials on the African continent, and governments were grappling and really didn't know where to get these supplies. I remember, I think it was March 2020, a mask was costing $50 US. So Afrexim Bank partnered with a technology platform developer to create the Africa Medical Supplies Platform, which again made it possible to pool procurement for Africa and bring these much needed COVID-related supplies in, from ventilators to masks, etc. And then because of COVID, factories started shutting down. So businesses lack liquidity, and I'll speak about liquidity and how we then raise the resources. But as factories shut down, people were being laid off. So we developed a program. It was a $200 million program to help people with existing factories retool their factories so that they could start manufacturing things like hand sanitizers and masks on the African continent. So at least we were then in a position to continue within the African continent, given that borders were closed, to continue trading, at least within countries. And like with any other crisis, of course, the first response from Western liquidity providers was to withdraw or really scale back their lines. So as a Africa-facing DFI, we found ourselves in a position where, again, we had to step up and respond to provide that liquidity to the market. And we obviously can't do this on our own. And to your point, Mark, we had to look to international partners, and particularly the DFIs, really stepped up and helped us to access that cheaper liquidity pool, because in a crisis, you do want to make sure that the funding is concessional. And because the Afrexim Bank doesn't have a concessional funding window, we had to look to partners who could provide very concessional rates to enable us to respond. And if I just cite a few examples, and for fear of omitting some key partners, but just to cite a few examples on the vaccine procurement facility, the World Bank, I think Makiko alluded to it in an earlier panel, they really stepped up and have been our de-risking partner by approving projects for countries. So we fronted the $2 billion, and behind us the World Bank is taking on that obligation by providing these longer-term loans to the countries. We also had partners like KfW, AFD, India Exim, who have all stepped up, ITFC, who have all stepped up to provide a pool of liquidity to enable us to raise the resources needed to provide liquidity to our financial institutions partners so that they could then on-lend to their customers in the various markets. And maybe just in closing, we also tapped into some commercial banks who were able, under exceptional approval, to provide quite finely priced facilities to provide liquidity to our Afrexim banks, such as Standard Chartered, who also participated in the COVID-19 response. Thank you.
Thank you very much, Gwen, and Lamin, probably also you have been facing some of the same challenges, which was immediately as lines were being cut off, as foreign exchange becomes scarce, and as some of your partner banks started to cry for help in getting LCs confirmed outside of the continent, you had to step in and that changed the face of your program. Can you tell us more about that and current operations?
Thank you very much, Mark. Just to step back a little and look at what Africa has gone through from 2020 to now, with the with COVID coming in and so forth. Of course, many of us are aware that Africa had negative growth in 2020, about 1.8% thereabout. In 2021, there was some growth, about 3.5%, and likely just going to be a little better in 2022. But Africa faced a lot of challenges, due to the volatility in commodity prices. There were gainers and losers in that. The balance sheets of many of the sovereigns wasn't really very good. Balance of payment conditions were not good. The budget deficits were quite high, and that really caused, quite a lot of problems in many of these these countries. The supply chain disruptions that we spoke about, and the fact that Africa was and still is highly dependent on commodity imports from China and Europe. And with the onset of COVID, it became very clear that indeed, we need to find alternatives. So while that was a challenge, it also is an opportunity that we are on our own. And unless we begin to really, get better at working together in Africa, and developing, internal supply chains, integrating much more, then in future it will be a bit more difficult. So for us, indeed, when COVID set in, we had to look at what was happening all over the continent, and started with a crisis response facility of $10 billion. One, to support countries with their budget constraints, but two, also to provide liquidity, as it were, and guarantees to banks operating in Africa. Because as my sister Gwen said, conforming banks, correspondent banks began to withdraw their lines. And so there was a gap that needed to be filled. Of course, trade has also gone down because of the supply chain disruption, but even then, the need for financing was great. So we had to step in, provide liquidity to local banks, and also step up the guarantee facilities that we have. Principally, it was more on a risk-sharing basis with international banks. But when they withdraw, they're not willing to take the risk at all. So now you're left with a situation where you have to cover 100% of the risk. So we've now developed a new instrument called the transaction guarantee, similar to what Rudolph explained for EBRD, where we're able to take on 100% of the non-payment risk of local banks on the continent. What we realized, though, and something that Mr. Khan alluded to, is that in many instances, liquidity wasn't so much the challenge. It was risk perception of even the local banks towards their clients. So what many of them did was really to focus on their large local corporates, and national companies, existing clients. So SMEs and first-time clients, we really had hit. They didn't have much of support from the local banks. And that is a persistent problem that we still have. Now, of course, we need to find ways and means of basically bridging that gap and ensuring that we are more innovative in providing solutions to enable these SMEs and first-time trade finance demanders to have access. So it really boils down to how we can incentivize the local banks to take the risk of the SMEs. But just giving them liquidity would not do it, right? Because they're still left with the risk themselves. So it's providing some sort of first loss guarantees, as it were, providing them with more capacity in terms of training, but really being with them, lock in step to take some of the risk that they're taking. I think that would be perhaps one of the ways we can look at really bridging that. So we've done a lot ourselves with our 10 billion, crisis response facility to the governments and providing significant support to local banks. Now, the transaction guarantee instrument is going to be a game changer for us. It wasn't available during the crisis, so we were not able to do as much as others were able to. But now that we are very much prepared that should a similar event or incident occur, we'll be there, to provide as much support as we can.
Now, let's say that, of course, we know that the COVID pandemic is not over in Africa, and there are still challenges about the unevenness, and it's a little bit of a vicious circle as long as people are not vaccinated, and there are resistance also to vaccinations now that the vaccines are starting to flow into Africa and some other low-income regions. But let's say that progress is being made, that we get back into business and a new cycle of growth in Africa, which I strongly believe, given its youth, its opportunity, its energy, and creativity. Now, with a more integrated African market, there needs to be one thing that goes with integration is typically a reduction in trade costs. I mean, there's all kinds of trade costs, whether it's a border crossing, whether it's transportation. It has to be financed as well, right? And you would agree with me that trade finance costs in Africa do reflect sometimes the fact that the market is a little bit fragmented, that there is a premium to existing clients. There is a culture sometimes within banks to be relatively conservative and not take on new customers. Hence, the SME problem, but at the same time, you have a greater likelihood to meet SMEs in Africa than anywhere else. So, what are your directions and priorities in respect of trying to let's say, to change the situation in which, because customers are not being offered the right products for themselves, or because sometimes the products are not available, like, as you know, we are all trying to develop factoring and new forms of supply chain finance in Africa. People are only left off with the option to take on a very expensive working capital. What is your plan? And what should be done in order to, what should be the new frontier of trade finance market developments in Africa, according to you? What would be your priorities? I just leave it to you, just dump it like this. Let's say 5 years, 10 years down the road, what you will be working on in terms of trying to improve the efficiency of the market.
Yeah, I'm happy to get started on that. I mean, for a Frexim Bank, actually, intra-African trade is a very, very key part of our strategy. It has been for the last 5 years and will continue for the 5 years going forward. In fact, intra-African trade is the arrowhead of the bank's whole strategy, because we do realize that we need to move away from a situation where Africa is continually exporting raw resources and start to facilitate and finance manufactured goods, which African countries can trade amongst themselves, and therefore they have stronger convening power when it comes to trading with the rest of the globe. So you're right, we have been encouraging factoring for a number of years. Obviously, the uptake on factoring in particular is not as penetrated as we would like it to be for a number of reasons. One of the main ones being that most African countries don't have a law that supports factoring. So Frexim Bank did a lot of work with partners such as FCI and Multilateral to develop a model law for factoring in Africa, which is being adopted by a number of African countries because that product is very well suited to SMEs. We also have the traditional supply chain finance, which we are rolling out with partner banks, local banks in Africa, so that again, the SME segment is not left behind. They can benefit from the fact that they have a contract with a large multinational or large local corporate who can raise financing cheaper, because all of the SME suppliers under a payables finance structure would benefit from the low financing that the anchor buyer is able to raise financing at. But, alternative means of financing on their own are not enough to, narrow that trade finance gap. So again, Frexim Bank is doing a little bit more heavy lifting when it comes to intra-African trade. One of the things that we've developed and was recently launched is a Pan-African payments and settlement platform, which is a revolutionary piece of financial infrastructure, which will enable African buyers and sellers to trade in African local currencies. So, for example, a seller of goods in Cameroon selling to a buyer in Kenya, the Kenyan buyer can pay in Kenyan shillings, and the Cameroonian seller will receive their local currency, and only the net settlement amount will be settled in dollars. And the estimation is that this platform alone will save up to $5 billion annually for the African continent. And as you know, exchange from foreign currency to local currency comes with cost. So it increases the cost of trade. So if you eliminate that, it should translate into lower cost of supplying goods and services. And this platform actually underpins the whole implementation of the AFCFTA. But beyond that, we do recognize that there's still other problems. You mentioned border controls, congestions at border posts. So again, Afreximbank has introduced an interstate transit guarantee, which enables truckers to move from Cape to Cairo without having to stop and clear goods at multiple border posts because of the support of the Afreximbank guarantee. And this should lessen lead times for goods to travel across the continent. And of course, if you lessen lead times, you are cutting down costs indirectly. We also have a repository system called MANSA. It's really a KYC repository system which will enable buyers, sellers, banks to go on and obtain up-to-date KYC information on counterparties in other African markets so that they understand the parties that they are trading with, because at the moment, if you don't have information, then you're not likely to trade. But more importantly, linked to this repository will be a platform that we call the Africa Trade Gateway, which includes information such as what products is a particular country producing, in what quantities, in what grade, so that what happened in the past, somebody in Rwanda would order cowhide from New Zealand, for example, when a neighboring country is producing very high-grade cowhide for their leather goods. So sharing information in terms of other regulatory requirements for trading into a particular territory will all be accessible on the trade gateway. And I think when we put all of these things together and add on another important piece of Afreximbank's strategy, which is export development and industrialization, by industrializing the continent and encouraging more manufactured goods on the continent, I think all of these things brought together will ultimately not just increase intra-African trade and bring the informal sector into the formal sector and also into the financial markets, it will also bring costs down significantly.
Absolutely, reducing transaction costs, as you say, the currency cost, transaction costs, transit cost is key indeed to making the market more efficient and allowing more trade. Mr. Khan, Dubai has considerable, certainly experience in Africa and expertise in the financial sector. In the shipping and port sector, it's the Dubai Port Authority is managing the container port of Djibouti and so on. How do you see the prospects in engaging into Africa for the years to come, and in particular in this trade finance field?
Well, thank you. We've moved, the DP World has moved from Djibouti to Somaliland in Barbara, and they have a project, a $1 billion project that will make a logistics corridor into the heart of Ethiopia. They are now operating in Maputo. They are also enacted in Angola. This just started. They are bidding in Tanzania. They are also looking at Ghana and Accra. There's a free zone. So again, Dubai and its capabilities, whether it's Emirates Sky Cargo, DP World, or the World Logistics Passport, is really trying to create that marketplace here in Dubai to be a facilitator, whether it's taking goods, whether raw or finished, from Africa to the world, or vice versa. But again, part of what we are doing as well is, again, looking at the Intercontinental Continental Free Trade Agreement. And we are urging people to go, we are diversifying our trade and really going very wide into Africa. However, we are also urging our businessmen to start planting seeds, and we're trying to sort of highlight success stories, whether it's investments in hotels, construction. Carrefour at least now has opened 8 stores, hypermarkets in Kenya, and doing very well. And there are many different success stories of investment, and this is where we have to, again, encourage and push our businesses out, because we know we are on the same track of Africa. Of many of the growing countries, we see the profile of imports and exports, raw material going out, sophisticated finished goods, semi-finished goods, and machinery, electronics coming in, and vehicles. So again, what Dubai did a very long time ago is take the raw material, which was the oil we knew was limited, and coming back to your first question, we invested in capital, we invested in education, we invested in finance, payments, in banking, in transport, and everything, and real estate. So again, this is a game that, of development that we are just coming out of and continuously doing. And I think we have a very close connection as to, we're on the same track, we're just a few steps ahead, and there's a lot that can be done. And with regards to even the vaccination program, and I don't know if your bank was involved, our Mozambique office told us, we have a vaccination program where, there's no solution. However, there's sort of a Kickstarter program where everybody puts and pledges funds for a minimum of 10 vaccines, and that will actually reach saturation to a container. An importer and a logistics company will bring it in. Once the payment is there, the critical mass, the products come in, and the Ministry of Health coordinates to ensure the application of the vaccine is there. And that's a really great example of the business community, the logistics community, and the government and the banks coming together to create a solution where just a ready solution from the government is not there. And we see this is very important. Coming back to also the banks, like I said, the desire is there, the commodities are there. We want to sell. We're a very small market. We're looking for bigger markets. But if I have receivables here in Dubai, the banks will give me invoice discounting or irrevocable factoring. If it's very well-known companies that are known in Africa, in certain countries, that their reputation mitigates the risk, but also their client mitigates the risk, somehow there's no appetite for that. And this is what really, I'm looking forward as well to more solutions coming in. And my last point is, I think, as was mentioned from my colleague in Afrexim Bank, a lot of the solutions are going to come up from Africa, and that's where a lot of the outsiders will start jumping in. I've just met recently a gentleman from the diaspora of Burkina Faso. He's worked 10 years here in Dubai, he has some experience. He is coming here, he set up an online company for a payment and verification gateway. He has about 400,000 African businesses now, and he is coming to verify the DERA market. We know that billions come out of the DERA market in terms of exports. We know it's always been informal trade, but here's an African young entrepreneur having a piloted company and service, and he himself is saying, look, I know how the culture is, I know what the desire, I know what the pain points about sophisticated trade financing products, credit insurance, credit rating is, but I'm looking something that's more palatable, and they have connections to SWIFT, American Express, Visa, and many other gateways that they can enact. So again, there's a lot that's going to be happening in Africa, and we need to be in there to see it, because we can't, if we sit from outside, we'll just see what CNN and BBC tell us. and that's cherry-picked, unfortunately.
Thanks very much, Mr. Khan. And I'll leave the last word to Lamin. It's true that there are efficiency gains to be made in the traditional trade finance market, and you are already in. But we might get actually good surprises from a more advanced market. I mean, Africa has been a leader in mobile banking. There is a demand, and we will run a seminar in Côte d'Ivoire very soon where we will address this issue of new SMEs that are in the e-commerce business who want to be connected to platforms. So there is an energy also to develop new technologies in Africa. Can you tell us more about that and then potentially your involvement?
Yeah, I mean, clearly, I think if you want to bridge the trade finance gap in Africa, we need to look at alternative solutions. And technology, will play a key role in that. You're speaking about, mobile banking and so on, the M-Pesa in East Africa, in Kenya particularly, and how that has revolutionized sort of banking for, small players, SMEs and retailers in those countries. And we've seen that mushrooming right across Africa, with MTN and all the other, big mobile players really getting that. Even some of the banks really being big partners in that. I think when you look at what is going to happen going forward and what SMEs, would have to do or how we can support them more, there are a few things that we can do. Surely, as we were talking, and somebody mentioned it earlier, I think, for our own programs, there has to be greater awareness. We need to make sure that, SMEs and others are aware of what we do. When you look at Africa in general, and for the studies that we've conducted, of course, we know that the gap is about $81 billion to $100 billion per annum. But when we talk to the banks, they tell us that almost 60% of their financing goes to the large corporates. SMEs have no more than 28% of that financing. So if you really want to now help them to get more of what they need and to support, Africa's growth, considering that 90% of all the enterprises in Africa, SMEs, they account for more than 80% of GDP on the continent, yet access to finance for them has been severely constrained. So for us as an institution, we need to find ways and means of really helping them get better themselves. So building SMEs' own capacity of, to be aware of the sources of financing that they can tap into, how they can better prepare to meet the requirements of banks would become key. And in all of that, I think technology will play a big role. We spoke about blockchain, we spoke about digitalization, of trade and all of that. That will be key if SMEs are really going to break ground and, play a greater role in our economies and have the necessary access to financing. It's work in progress. We're also aware that it's not always the case that SMEs are low risk. Our studies have indicated that indeed NPLs for SMEs, even in trade finance, could be as high as 10% in some markets, 5% in others, compared to bigger corporates where the rates are as low as 2% or 3%. So there are challenges that we have to deal with, but I think we have the capacity, if we collaborate more and work together. Gwen spoke about factoring. We know we cannot do all of this ourselves, so we've been partnering with AfriExims, providing some TA to support factoring on the continent. Supply chain financing may become big. I know the stories are different depending on the MDBs you spoke with. We know in Asian Development Bank, it's big, EBRD, not so much. So we need to really study the African market and understand how well it is suited to supply chain financing. So over time, those are the new instruments that we need to look at and hopefully ensure that if they come on board, they're effective in solving some of the constraints that SMEs are facing. So a lot of work ahead, but I think we are up to the challenge through collaboration with the technology companies or the platforms, within the DFIs or MDBs themselves, and of course, why not the Dubai Chamber and others are all in there that we can do a lot together to really, help SMEs in Africa.
Thank you very much, Lamin. We have here partners, and if you are interested into further investing in Africa, please follow up with them. And with this, I would like to leave the floor to the next speaker. So thank you very much for the three of you.
Well, what I really liked about that session was it started kind of with a little bit pessimistic, but then the clouds disappeared and the sun came out, and we saw so many opportunities as opposed to challenges that appeared at the beginning. I love the Omar story about the gentleman who has a market already, but actually he's using the technology to evolve it into a new platform. That's really fantastic, because often we don't need to reinvent the wheel. We just to rethink it and just get it moving more effectively. And Gwen, your example there with the Afrexim Bank guarantee, again, a very simple solution, but incredibly effective with the Continental Free Trade Agreement to facilitate the smooth and free movement of goods. That's really being clever and really being smart. So again, it was mentioned during this panel that many parts of the world are challenged by the trade finance gap. And I guess this is the gap for SMEs to gain access, SMEs and other companies to gain access to money. And like my perspective is there's too much money floating around, but it's not going to the right place, the right productive place. So you can fix a problem if you know the problem and you understand the problem. So I'm giving Steve Beck a problem or a question. The trade finance gap, can it be closed or can it be narrowed or can it be bridged at all? Stephen, please join.
Good afternoon, ladies and gentlemen. Thank you so much to the Dubai Chamber for your hospitality, for organizing this. It's a wonderful opportunity for us to come together. This is my first business trip in 2 years, so forgive me if I sort of start clicking something or going for a hand raise or something or other. Vin, thank you very much for all of your work around this. It's good to see you again. And it's also good to see, of course, many of our partners. We have a great contingent from Bangladesh, from Sri Lanka. We have a partner from Armenia. So it's good to see you guys again. And thank you so much for the ongoing partnership and the work that we do together. Just during one of the breaks, I was approached by Joe from Union Bank in Africa, and thank you very much for approaching me, and a couple of others. And I'd encourage many of you to do the same. So you're maybe wondering, so what does a bank in Africa have to do with Asian Development Bank? Well, of course, we can onboard a bank in Africa as a confirming bank, and we can help bring banks in Africa together with banks in Asia and elsewhere. So we're very pleased to play that role. And of course, I know that my colleagues from the other multilaterals will be very happy to do the same thing. For those of you who don't know, Asian Development Bank is owned by 68 different shareholder governments. It's AAA rated. It was established in 1966. Traditionally, it focused on sovereign projects, big loans to governments, primarily for infrastructure projects and budgetary support. About 20 years ago, it established a private sector capability, and unlike World Bank, which spun off its private sector operations into IFC, International Financial Corporation, which is exceptionally well represented here today by Makiko. Asian Development Bank wanted to keep the private sector department as a department within the mothership. And the strategy, the thinking behind that was that wouldn't it be great if we could do the sort of business and then also the upstream stuff. So regulatory work with people who focus on government type things along with business people who work with real people in the real-ish world. And that's really I think the fun of this job. I'm going to tell you the story about the gap study and its genesis, and it goes back to some of these old guys in the crowd, like Malcolm Boin. And during the global financial crisis, we were the multilateral development banks and some of the major banks that support trade around the world were called to Geneva, and Malc helped organize that. Was the organizer, and Pascal Lamy, who was at the time the head of the World Trade Organization. Rudolph, I think you were there too, right? who was the head of the World Trade Organization, looked around at all of us, the city banks, the HSBCs, and all of us, and many of these banks were going bust, and people were rather nervous, to say the least. It was the end of the world, and so on. And he said, well, look, there's this huge drop in international trade. This is a huge problem. How much of this huge drop can we attribute to a lack of finance? So we're all sort of looking at each other, and we realized that no one had ever thought to try to measure whether or not there are gaps, and if there are gaps, why do they exist, and what impact those financing gaps are having on our ability to grow, create jobs, development, and so on. So, so this is exactly what we set out to do, is to start to measure that. And of course, it is critical for the global economy to understand whether or not there are gaps, why they exist, and what we need to do about them. And I'm going to touch on that within the next few minutes. The second aspect to why it's important to measure these gaps is because the Addis Ababa Declaration on Financing for Development, this is the UN crowd that looks at what's required to meet the Sustainable Development Goals, identified trade finance as being extremely important to achieving the Sustainable Development Goals. So it's critical that we have sufficient financing to support trade. For a whole host of reasons, including the SDGs, the Sustainable Development Goals that we've all signed up to. And yet there are substantial gaps. Sorry, if I can just pause. Is there a slide presentation? Oh, I click. Oh. Yeah, you see, there's I'm out of practice. Thanks, Ben. So, so there. Well, I've basically followed the plot, as you can see. So what happens next? Yes. So so we did the survey, and I have to mention that it's not something that Asian Development Bank has done on its own, of course. Many of you in the audience provide the data, because of course we ask banks to provide the data. To make this study happen, WTO has been an important contributor. The other multilateral development banks, the ICC. It's a big challenge to get the data. And measuring these gaps is not easy. The methodology is not clear cut by any stretch, and there's lots of room for improvement. But I just want to point out that partnership is extremely important to these things. Now, basically what we came up with, we've estimated about a $1.7 trillion gap. It's a big number, and it's the biggest number that we've ever seen. But please consider that this number is probably, well, I'm convinced of it now, grossly underestimating what the gap is. And that's for two reasons. One is that when most of this data was collected, it preceded the significant growth in price of commodities. This is before Russia and Ukraine. And now, in addition to the significant spike in commodity prices that we've seen, energy, food, metals, etc. Of course, we have the war, which has exacerbated the prices. So basically, what that means is that what available limits, country limits, and counterparty limits are available to support trade are being, eaten up at a much more significant rate now, because, one transaction that might have cost, whatever it is, 3 million is now, 4 million, 5 million, whatever it is. So the gap, no doubt, is significantly larger. Okay. as has been pointed out by Lamin and Mikiko and others, I think this is something that we all need to be concerned about. The potential for social unrest in many parts of the world, particularly with respect to food security, is something we need to be very, very careful about. Oh, okay. So it won't come as a great shock to anyone that small and medium-sized businesses are the ones that are most underserved. And it probably won't come as a great shock to anyone that it's women-led businesses within that SME, small, medium-sized business segment that are even more underserved. There are many reasons for it. You can see there why proposals were rejected. Obviously, a lot of it is around perception of risk. By the way, we've never had a hit in our trade finance business ever, and that persists. And I think by and large that has been the case for the other multilaterals. Although of course now we've got a number of situations, particularly with respect to Belarus and other countries. We'll see what unfolds. But I think we're all pretty cognizant of the fact that the risk profile of this business does continue to be relatively low. Notwithstanding, there are perceptions around risk, which contribute certainly to the gaps. Also the unintended consequences, Vin made reference to that earlier, around anti-money laundering and others. Capital costs also around a business that attracts, relative to its risk, sort of, I guess, lower margins than other businesses. And this is also an area that we need to continue working on with respect to demonstrating empirically that the risk profile is low and that regulators need to adjust capital requirements to do this business in such a way that it corresponds with the risk profile. So now, ladies and gentlemen, what I'm going to do is tell you about some of the things that we're doing at the Asian Development Bank to try to address some of these gaps and some of the challenges that we face in our industry with respect to environmental and social issues. So first of all, I'm just going to touch on the business itself. So we provide guarantees and loans to banks to support trade. We have 4 different products, 2 unfunded, 2 funded, and you can see that over the past couple of years we've had a significant jump in our business. Last year we supported $8 billion through about just under 7,000 transactions. The co-financing, that basically means that we're able to mobilize investments in trade from the private sector, whether it's from partner banks or from private insurance companies. And we find this, it's an extremely important part of our strategy, not only to leverage our own capacity, but also to hopefully one of these days do ourselves out of a job. I mean, ultimately, what we want is for the private sector to come in to fill these spaces, and for there to be no need for multilaterals to be in this very commercial space that's a relatively low risk. So bringing in the private sector into these transactions is critical. And the relationships that first of all, the comfort that they derive, especially given our no loss, no default record, the comfort they derive in doing these transactions enables them to go into markets where they may have never been before. It sounds a bit Star Trek-ish, doesn't it? Never been before, and establish those relationships, the credit history and so on, really hopefully in some kind of a durable, lasting sort of way, enables the private sector to move into these spaces and fill the gaps. So this co-financing element is extremely important to us. Now, in addition to the trade business, as has been alluded to before, we've started a supply chain business. We're still in the process of scaling that business, but we're very excited about the prospect of enhancing support for small and medium-sized businesses through a supply chain finance structure. The trade finance business in the context of a multilateral, especially Asian Development Bank, is a weird animal with its multiple transactions and fast turnaround times and so on, especially an institution that's used to doing these massive, infrastructure deals and so on that have a gestation period of ages and repayment period of ages. But this supply chain thing is even weirder because it's not financial institutions risk, it's corporate risk. And so there are challenges in building this business, but we've started to see some very nice traction. How we've started is we've started with signing agreements, risk-sharing agreements with the larger global and regional banks that have a fair bit of experience in this space. So that's going fairly well, and you'll be probably reading about a few more of these relationships in addition to the HSBCs and stand charts that are ongoing that we're going to be signing over the next few months. On the other side of our strategy to build a supply chain business is we're providing very intensive capacity building for banks in our developing member countries to understand how to start a supply chain business. And after we've done 4 quarters of this very intensive training for the local banks, we're signing partner financial institution agreements on supply chain finance with these banks and sharing risk with them in supply chain deals. So this is the transactional sort of side of things where we're closing gaps. As has been alluded earlier, doing transactions is not enough to close these gaps. So with respect to supply chain, where it's little known in most of our developing member countries, we work very closely, including with the Bangladesh Chamber of Commerce. Mr. Artur is here to do upstream sort of work to explain to regulators how supply chain works, to create a regulatory environment where banks can really move into this space and grow the opportunities in supply chain to enhance support for small and medium-sized businesses. So this is an extremely important part of what we do. And finally, I just want to touch on the work we've been doing in the digital space. Digitization, we all know, is extremely important. But I just want to articulate just how much so that is the case and how it can address so many challenges that we face. On the one hand, if we can digitize transactions, the kind of metadata that would be produced out of that process would enable us to close information gaps that would in turn allow us to enhance support to small and medium-sized businesses. The performance histories, obviously the credit, and all of the other associated risks could be uncovered through the transparency that digital transactions would bring. So that would really help us close gaps. Second of all, if we're going to meet our climate objectives, I understand that it's been estimated that up to 80% of the carbon footprint can be traced back to supply chains. If we're going to get serious about that and meet our objectives, we're going to have to clean supply chains. And if we're going to be able to, if we want to green supply chains, then we're going to have to drive transparency through those supply chains and understand them much better. And digitization is going to be critical to verifying and monitoring and understanding, what is the carbon footprint throughout supply chains. There's no question about it. And it's the same thing for social standards, labor standards throughout the supply chain. So digitalization is critical. So what are we doing about it? Why haven't we done it yet? 2 fundamental problems impede us from moving forward on digitalization that I want to tell you about. that we've been acting on, and I would encourage everyone to participate in. First of all, there's a lack of protocols and standards in digitalization that impedes interoperability. Now, we all know that with respect to all of these platforms that are out there, and many of you are representing platforms that offer a variety of services to close gaps, which is great, but there's a lack of interoperability there. There's also a lack of interoperability between each component part and phase of the supply chain, the trade ecosystem. So what does that mean? That means that we do not have seamless communications today between an exporter, a shipper, a port, customs, warehousing, finance, and the importer, right? We don't have that. It's all, there's lots of friction there. People have to print stuff, sign stuff, show stuff. So what we did is we created the Digital Standards Initiative with the government of Singapore, and we housed that at the International Chamber of Commerce. So the Digital Standard Initiative now is coming up with those standards and the formats that will enable a seamless transaction throughout that whole trade ecosystem. And ladies and gentlemen, just imagine how mind-blowing the productivity gains would be when we achieve that kind of seamless digital trade. It's phenomenal, as well as the metadata and other bits of information that I mentioned before. So, so the Digital Standards Initiative has been created, and I would encourage everyone to please participate in that process. The fintechs in the room, please adopt those standards. If you don't, I think that whatever you're offering clients will not be relevant in the market in the fairly near-term future. That's the first impediment: standards and protocols, which we're working on. Second one is that governments talk a lot about the importance of digitalization of global trade and how it's going to enable us to make supply chains more robust and so on. But there's no law that recognizes a digital document in the vast majority of countries today. Right? So how are people going to be able to transact digitally when it's not recognized in law? It's not feasible. So we're very aggressively talking with our developing member countries and advocating that they adopt in legislation model laws that have been created by the UN, UNCITRAL. And so we're very actively engaged in this, and I would encourage all of you here today to help in that advocacy campaign. And ladies and gentlemen, I'm just going to close just by mentioning, I'm not going to go into detail. I think maybe people want a break and lunch and so on, but we're now implemented a pilot in 7 jurisdictions, including Bangladesh and Sri Lanka, on trade-based money laundering. 2 objectives in that. One is to do a better job of identifying trade-based money laundering, because I think we all know we're not doing as good a job as we need to on that front. And second of all is to streamline these processes and make them a lot more easier to manage, less cumbersome, less costly. And we're very grateful for the participation of Bangladesh and Sri Lanka and the other jurisdictions, along with those governments and banks participating. So ladies and gentlemen, there are gaps. It's important that we close them. There's a lot of exciting stuff going on to close those gaps. Digitization is key, as well as key to meeting what is maybe one of the greatest challenges of our time, to clean the supply chains. Thank you so much for this opportunity. Good afternoon. Thank you.
Thank you very much, Stephen. That was really wonderful and insightful. Well, ladies and gentlemen, we'll be going for lunch very, very soon, but I'm going to introduce you to our chairman, Hamid bin Salim, who's chair of ICC International Chamber of Commerce. And our chairman actually, very often at these events, the chairman is the first person to speak, etc., etc. But our chairman takes a different approach. He wants us to get underway and to get some work done, and then he's very happy to talk to us. So chairman, if you can join us, please. Thank you.
Bismillah ar-Rahman ar-Rahim. First of all, I would like to complain to you about Hassan and Vincent. They always prepare a speech for me. They know exactly what's in my speech. They speak before me. They say everything in my speech. Then when I come here, I have nothing to say. To start with, I'm very glad and honored to be with you here. Thank you for participating face to face. We are always glad to have you in the United Arab Emirates and Dubai. I would like to thank Dubai Chamber also for hosting this event. And really, I'm impressed with the caliber of the speakers and the panelists before me. It's always good to see such an important and VIP in one event with the ICC. If we just look at the gathering today and yesterday. Yesterday, they had the complying with the trade law. And today we are talking about the global trade facilitation. If we look back at establishment of the ICC in 1919, and 4 years later, in 1923, the establishment of the Arbitration Center. The ICC core business is making business work every day, everywhere, anytime, for everybody global-wise, and facilitating the trade between sectors in different countries. And the Arbitration Center complies with the trade law compliance. So this is a very important week for us as in the ICC UAE. We have here with us His Excellency Mohammed Hilal Meheri. He is the Vice Chairman of the ICC UAE and the Secretary General, Director General of Abu Dhabi Chamber of Commerce. So if there is anything to ask about Abu Dhabi, and His Excellency is here also with us. I think there are two challenges that we are facing when we go back, and we are already back to do our work and to do our daily activities when it comes to private sector and doing business. The two challenges, one is we are not going back to doing exactly what you used to do 3 years ago. We are going back, adapting the transformation to a digitalized economy, green economy, and all these. And the other thing is connectivity is very important, because as you all know, you can find any product, any services provider anywhere in the world. But the most important and the most challenging there is to get them together. Whatever happens, the pricing is going up, or there are disrupting channels or whatever, make it challenging to go from one country to another country. So if we keep facilitating for private sector worldwide and making sure that the connectivity and all channels are smooth, we will do our job, and that's exactly what we are here to do. I won't speak much further because I know the only thing and the only privilege I get speaking last. So to tell you that after my speech, we are having lunch. So I get credit for inviting you for having lunch. Thank you very much.
Thank you very, very much, Chairman. Greatly appreciated. And as you mentioned, the lunch, I'll give you some details about the lunch. We'll be going for lunch now, and we'll be back at 2 o'clock. So we have nearly an hour and a half. So to go to lunch, you'll exit this room. I guess that's a good idea. Okay? And then you'll go downstairs and you'll go out the front of the chamber, and my colleagues will be there to greet you and point you in the right direction. So lunch is actually available in the Sheraton, Dubai Creekside, where you were last night. A lot of you were last night. So just out the door, my colleague will direct you. And when you come to the Sheraton and you just go in the front door of the hotel, you go immediately left, and there'll be someone else there to guide you as well. Your lunch will be there, and let's do our best to get back sharp at 2 o'clock, okay? We have nearly an hour and a half, so it's quite doable. So my dear friends, colleagues, please enjoy your lunch, and we'll see you sharp at 2 o'clock. We continue with what has been talked about. We get into supply chain finance. We move from there into digitalization, and we then look at trade transformation in some emerging markets. Go and enjoy your lunch, and you have a good chance to network. Thank you. Thank you. Thank you. Wonderful. Please come on in. Hashim, please come in. Come on down. You're welcome. Come on down. Take a seat. Yeah, great. Nice to see you guys. Yeah. Good. 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 Yeah. Now. Oh, Michael, you're here. Wonderful. Yeah, great. I knew I could depend on you. Yeah, that's wonderful. Okay, guys, we're all going to get moving for the afternoon, but just to tell you that we have 38 countries watching us on the internet at the moment. So hi out there, everybody, and thank you for your comments. And we haven't really answered one or two questions, but we'll do our best. But we had a few comments, and one of the comments came from our friends in Doha, Qatar. One of our friends working in a major bank over there, and he just said, "Splendid event, congratulations to all the speakers." Okay, so congratulations to all our speakers. And then we got a message from Israel, right, from Israel. And our friends in Israel, are one friend in particular, Sarah, younger member of the Banking Commission for many years, a good colleague, has said that holding this event at this challenging time is truly in the spirit of what the ICC is all about. So I hope we're doing a good job. And someone else made a comment. They were at the event yesterday, and they told me that I'm looking better today than I did yesterday. Well, there you go. But then again, I look better every day, so, you know, not much I can do about that. Okay, well, we're going to continue. So now I'm going to hand over to our afternoon chairman, Michael Bickers, and I guess we're kind of moving into supply chain and that. But Michael, I'll leave over to you to make the introduction.
Thank you, Vin. Thank you very much. And thank you to the Dubai Chamber of Commerce for putting on this wonderful event. And I'm very, very pleased to be here. And as Vin touched on, this afternoon session is about trade and supply chain finance and emerging market trends. So, a couple of things I want to say, first of all, before we get started, is that for the purposes of this afternoon anyway, when we use the phrase supply chain finance, we're going to mean factoring and traditional factoring and reverse factoring, also known as payables finance, or approved payables finance. So I just want to make that clear, that distinction, and I know that factoring and supply chain finance has been mentioned a few times today and probably yesterday. But when we use the term supply chain finance this afternoon, that's primarily what we're going to be talking about, approved payables finance. So just for a few minutes, I'm just going to talk about some of the trends that we've seen recently in these two areas of factoring and supply chain finance. And I've, see if I can get this to work. Yeah, okay, let's do, oh, there we go. So I borrowed this slide from FCI, and I just want to give you an idea of what's been going on in terms of volume development in traditional factoring. And you can see there's been sort of between 2000 and 2020, there's been fairly steady growth, compound annual growth around 7%. And that's divided up into 5-year slots. And I should say that the last year that FCI has figures for, which is 2020, it's a bit of a different picture. There was a substantial drop in volumes, very substantial. I think the biggest drop that FCI has seen in its history because of the pandemic. And we saw a bigger drop in volumes and use of funds than we did during and just after the banking crisis. And the main reason for that is the support that governments were providing around the world. The furlough schemes and the loans that were provided, that all meant very, very cheap funding for SMEs, and as a result, SMEs didn't need to use receivables finance nearly as much as they had before. But that's bouncing back, and there was a significant, as soon as that funding support stopped, there was a significant bounce back in terms of use of factoring. It's a bit of a different picture for approved payables finance. Well, get it right. No. There we go. So this is a table that we put together for one of our publications, the World Trade Supply Chain Finance Report. And these figures are very, very much estimates because banks, they put together their reverse factoring figures and amalgamate them in all sorts of different ways. So it's virtually impossible to get true statistics. So we do our best by asking experts and contributors to our publications as to what they feel the growth rates are and use of funds in supply chain finance. And you can see from the right-hand side there that the growth is pretty spectacular. And I can tell you for 2021, that growth has increased even more to above 40% growth, both in volume and funds in use. So there is something pretty spectacular happening in supply chain finance. In terms of emerging markets, the growth is a little bit weaker, and in full factoring, it swings around about. Some emerging markets saw a big drop, some saw little growth in 2020. But, in terms of developing markets, what I've seen over the 25 plus years that I've been looking at this sector, it's not easy. It's not easy to grow these markets, and it takes a lot of time. And that's a lot of what we're going to be talking about this afternoon. What can we do? What can be done to help these markets grow and develop? What are the issues that need to be overcome? So we'll look at that in some detail. And of course, what's complicated things even more in the last year or two is, well, we've had the recent situation in Ukraine. And even prior to that, we've had a lot of changes in dynamics in terms of global trade, which has been mentioned before, deglobalization, nearshoring, and trade wars. So all that kind of stuff is come into the mix and needs to be taken into consideration when strategies are being developed for growing emerging markets. Okay, I think that's enough from me. And now I'm going to introduce the first session, and I'm going to welcome back to the stage that young man that was referred to earlier. Do we now refer to you as young man in the future? Vin? I don't see why not. Why not? Seems quite reasonable to me. Vin is going to be talking or covering case study on Bangladesh and supply chain finance, trade transformation through regulation. And regulation, I should say, from what I can see, is a kind of double-edged sword. Some people think it's great, some people hate it, but it has been seen to help grow markets, like in Turkey, for example. It's been very positive. But if you ask people in the UK, they hate the idea of regulation being involved. So that's an unregulated market. Vin, I'm going to hand over to you. Thank you.
Thank you, Michael. Thanks a million. So I'd like my panelists to join me on stage. Shelby, Attar, Farouk, and Nesru, please. Please. And your wonderful pictures should appear on here on stage. So we'll take a seat in your order. So Attar, I guess you'll be here, and Shelby, your way over there, okay? And Nesrul where is? Oh, he's here, right? You got to be careful when these guys sneak up behind you. You know, you never know. You never know. So, yeah, is there a spare chair? Yeah. Okay. Yeah, I'll stay here. I'll stay here. Okay. Well, we're going to have a kind of an interesting presentation. As we all know, the opportunity in trade, as we've heard, is in emerging markets. So that's good for the emerging markets and the developing countries, but it's also good for those who trade with them. So here we have a panel from Bangladesh, and you can see their names and pictures behind you, so I don't want to waste any time in introductions, okay? But I'm going to get right into it. So Bangladesh has been the largest volume issuer of letters of credit on the SWIFT system for a long, long time. Even bigger than China, okay? So that's kind of hard to believe. And this is kind of driven by regulation, but not only regulation in that they have been doing letters of credit and very professionally for a long time. Like, I remember one time, Attar, in Bangladesh at a workshop, you referred to me as the great grandfather of letters of credit in Bangladesh. So I'm very happy today, from being kind of an old friend to a young man. Things are looking up. So maybe Attar, we said there's a change. There's new change in regulation in Bangladesh, and this kind of focuses on the foreign exchange circular number 25 of the 30th of June 2020. But I'll get back to that in a few minutes. But Attar, maybe you'll just give us an overview of Bangladesh in terms of trade, trading partners, whatever. Over to you.
Thank you, Vin. Thank you very much, all the audience. Let me take this opportunity to thank ICC UAE Chairman, His Excellency Humayed bin Salem, Secretary General M. Hassan, and our very good friend Vincent and Habib, and also the Dubai Chamber for organizing this Global Trade Facilitation in Dubai and making excellent arrangement. Dubai Chamber is also there. And my special thanks also to 17 banks from Bangladesh for sponsoring 59 bankers. Can we give them a big hand?
Well done.
Thank you, Vincent, for arranging this afternoon session, case study on Bangladesh and SCF, trade transformation through regulations. For the audience who are not from Bangladesh, I would like to just tell you in brief how Bangladesh has progressed over the years. Bangladesh GDP growth in 1971, when it was just became independent, was -5, almost 6%. From there, it has come to 8.5% in 2019, just before the pandemic started. After a decline of GDP to 3.51% in 2020 because of the COVID, the country has recovered again, and the GDP is expected to be 7% in 2021. Bangladesh's per capita income was only 134 when it became independence, but now it is 2,462. The per capita GNI was only 85 in 71, and in 2021 it is to 2,391. GDP was 8.7 billion only in 1971, and it has reached to 416 billion in 2021 and expected to be 510 billion in 2022, which I suppose is almost equivalent to Denmark. So we are the export powerhouse and the fastest growing economy of the world. The country's export earning in 2021 was 44.22 billion, and it is projected to reach 50 billion in 2022. We are the second largest exporter of RMG. Bangladesh is going to become a middle-income country in 2026, but in view of the recent Ukraine and Russian crisis, I don't know, the projection may be affected like all other countries of the world. In view of the COVID-19 pandemic, the central bank took the initiative of changing their foreign exchange policy, as Vincent said, by circulating the Foreign Exchange Circular number 25. To familiarize these foreign exchange regulations, ICC Bangladesh with Vincent and Asian Development Bank, we organized open account policy change by the Bangladesh over two webinars, one in October 2020 and another in March 2021. For your information, Vincent, about 800 plus participants from Bangladesh and abroad attended the October issue.
Wow.
And 455 from 22 countries in 2021, March. And we had the discussions were Mr. Stephen Bacon, Head of Trade and Supply Chain Finance, Asian Development Bank, Mr. Humayun Kobir, the Executive Director of Bangladesh Bank, a number of managing directors and representatives of export houses attended these webinars. Thanks to Stephen and Ken, and also, of course, to my good friend, Vincent, for organizing this joint webinar with ICC UAE and ICC Bangladesh. So with that, as Vincent said, that 80% of our LCs, export is through LCs, but this open account is a new thing, and we are trying to make it workable so that we move from LC to open account in the course of time. Thank you.
Thank you very much, Atar. That was really brilliant. And what I find amazing is that with my friends, the bankers in Bangladesh, in terms of letters of credit, they really are brilliant. They really are experts. They're at that top level. But yet when we move into the open account, because it's something completely new, it's difficult to kind of grasp. And again, that feeds down into the exporters, particularly, and the importers. But here on my panel, I have Farouk from a local but very active and dynamic trade finance bank, and of course Nezrul. But Nezrul is more here in the context of ICC Banking Commission in Bangladesh, and also then we've Shelby over here, who is from Standard Chartered Bank, head of the trade in Standard Chartered Bank. But maybe, Farouk, to give us a little bit of granularity on the circular and the open account, what's actually happening at the moment?
Okay. Thank you, Vin. You are my friend, also Bangladeshi people, bankers friend as well. Thank you very much for inviting me here. First of all, just case study of Bangladesh and SCF. This is, I want to just give you the preamble. So in 1999, Bangladesh, some NBFF already started their supply chain financing in our country, and 2008 or 9, some NBFI also introduced supply chain financing in Bangladesh. And 2017, we have the Citibank we are from introduced first digital platform supply chain financing. This is the preamble, and you know that very recently Bangladesh Bank also issued a circular for factoring and reverse factoring. It's a very minimal stage like SME and others, but this is the very beginning, and this is the start from our side, from regulated side. And we have a very good, you know that very well. Before Atul Bhai already explained that we are the second largest garments industry in Bangladesh. So we have a very different, unique back-to-back LC platform which is established in the world. So, but you know also everybody knows that in Bangladesh, Pakistan, India, and Sri Lanka, they are very much middlemen from very lower side. The middlemen engage over there. So it's a very good opportunity in our country to establish a safe in our pharmaceutical industries, garments industries, as well as farmers grower in basic side. This is a and we are in very good situation at this moment, just starting, and 2020 almost 9 to 950 billion taka transacted in supply chain form, which is significantly high. But we have more scope to grow up in future.
Right, Farouk, that's really interesting. So it had a slow start, but now it's actually gaining momentum. And what's interesting is when this circular came out, all the dialogue, all the conversation was about factoring, okay? But actually when you read the circular, it doesn't use the word factoring, okay? It talks about payment on open account with undertaking, okay? Now, of course, factoring fits into that definition, but it's not the only thing that fits into that definition. So we'll come back to that a little bit later. But having heard from Farouk on and I know, Farouk, you feel that the digitalization and advanced technology is really important, but we'll come back to that as well later. So Shelby, you know, this open account trade, including the factoring, open account has come in against the payment undertaking. And it's moving, but I think there are certain challenges for it. And with your experience, could you illustrate maybe one or two of current challenges?
Okay, as you mentioned that in Bangladesh for export-import transaction, LC is the most popular payment method in Bangladesh. For export, it is very vital because as per local regulation, export proceeds should be realized within 120 days from the shipment date. Otherwise, our exporters will not enable to gauge some cash subsidy and export development fund. Okay. For this purpose, our exporter like to transaction through LC. But in global trade, open account financing is most popular. To familiarize this open account transaction and to secure the export proceed realization, Bangladesh, our central bank, Bangladesh Bank, issued the circular number 25 on June 2020. So when this circular implemented in Bangladesh, to implement this transaction in Bangladesh, we face some challenges like payment undertaking or risk coverage for payment. It is very, very challenging point in this circular because all the exporter or importer involved in this open account transaction, they will arrange this payment undertaking through a third licensed party like factoring agent or foreign bank or insurer. Okay. It is not so simple as mentioned in the circular. Okay. Other thing is factoring is not so much popular in Bangladesh, and factoring process is not properly established in Bangladesh. So there is we have to go ahead in this field in future. Okay. Farouk already told that we are working on it. Another thing, as a Standard Chartered bank, to realize the payment at early basis, we are providing our customer VPP, that means vendor prepayment under supply chain finance, because most of the buyer like H&M, Gap, they are maintaining account with us, and under vendor prepayment, we paid our exporter on early basis.
Okay.
In that way, we are supporting our exporter to repatriate the proceeds within the stipulated time.
Okay, that's very helpful. And then on the operational side, you mentioned there was some issue regarding the consignment, the consigning of a bill of lading. Maybe you could just explain that to the audience as well.
In open account transaction, the BL should be consigned to bank, BL should be consigned to buyer. But in our local regulation, BL should be consigned to any AD, that means authorized dealer, who are maintaining account with Bangladesh Bank. Without receiving payment, we cannot endorse the BL. In open account transaction, when it is said that undertaking, when we receive the undertaking, payment undertaking, then we issue a NOC to our shipper to issue the BL consigned to buyer. It is very vital point that I mentioned earlier, that the payment undertaking. It is a challenging point in this circular.
Yeah, well, thank you, Shelby, because you have a mission with this and you keep bringing it up. So I really appreciate your determination. But just a little bit of feedback on that. First of all, like yesterday we had a discussion with the chairman of the Chartered Institute of Shipbrokers, and we were talking about bills of lading, and not going too much off point for a moment, but a point came out was that, you know, when the Ever Given got stuck in the Suez Canal and there's 20,000 containers on it, you know, in our discussion we agreed eventually there could have been, who knows, 10 bills of lading for every container, maybe more. So we're talking about 200,000 bills of lading for that one ship, 200,000 bills of lading. And then, as Shelby is kind of indicating, these bills of lading can be issued to order of the customer or to the bank, and then they're going to be issued in a set of 3. So yesterday we kind of transformed the world, because 2 out of these 3 pieces of paper in most cases play no role whatsoever in the modern world. So this is something we can fix very, very quickly. We just need to kind of get our act together. Second thing, the point you mentioned is that having this situation where it must be consigned to the bank, it causes an unnatural flow in the transaction. And when you have this unnatural flow, well then people aren't inclined to move towards something if it's not simple. It's not simple. Number 3, when we're thinking of the exports of Bangladesh to United States, to be quite frank, most of the buyers, you have them forever. Well, I'm not saying forever, but the same again and again and again. And it's truly amazing, and don't take this the wrong way, but maybe 10, 15 years ago, the quality in the ready-made garments in Bangladesh was so-so. But now it's at the very top. So now very top. So now we've many buyers looking for price, but also looking to Bangladesh and looking to continue their engagement. But they don't want to continue with commercial letters of credit and these 3 full sets of bills of lading. They don't want to do it. But when they have this trading relationship, now we're looking at and working with the central bank, support of ADB, coming up with a structure for using standby LCs, not just for the existing buyers in Europe and US, and there is a lot of interest, but also in regional markets. So this is where I bring Nesrul in. And first of all, can you say why, because I know you're a champion of this other point, why do you think the standby for this type of business is appropriate?
Thank you, Vin. Standby letter of credit, as you compare the other instrument like demand guarantee, I think I have to go out of context a bit, because in type of independent undertaking, terms and condition is the most critical factors. So over a period of time, using the standby letter of credit subject to ISP 98 is actually pretty much short, simple and precise as compared to the demand guarantee. So look at another point actually, even if you go to the court, if for any involvement of a court cases, in most of the jurisdictions on the demand guarantee side, the lawyer or judge is actually facing difficulties to find it out, identified whether the demand guarantee case, the guarantee case is actually related to the suretyship guarantees or accessorship guarantees or demand guarantees.
Do you mean if it's a primary obligation or a secondary
primary
obligation?
obligation. But when it's come to the standby letter of credit, it is very clear and guided by very precise rule. So that's why I am a big fan of a standby for our suppliers. So
Okay,
supply chain financing.
and there's a lot of consensus now in Bangladesh that this idea, using the standby for the existing European or US buyers, makes a lot of sense, and some of the buyers are actually moving towards this. But I know you also, because Attar will know the numbers, but most of the trade in the ready-made garments goes to US and Europe. Is that correct? Yeah.
Most of the biggest buyer is US.
Yeah.
And then European countries.
Okay, okay.
But as you said, the RMG has now gone out from the traditional kind of things,
Yeah.
more sophisticated they are going to go.
Yeah. Yeah, so getting back to Nezrul on this, you know, you have the, you know, we're thinking the US and Europe, clear, okay, it's logic. But you're also pushing that, that because trade in Asia is growing quicker than the rest of the world right now, because the purchasing power is stronger, okay, you feel that the standby LC for these markets may be supported by the multilaterals, development banks, could form an ideal structure for the banks, if the standby is in place, to provide pre-financing to the exporter. Could you give us a bit of explanation on what you have in mind?
Absolutely. If you look into the current circular, this circular is actually talking about the payment risk coverage. So the question is whether you need a payment risk coverage for 100% of the contract value, or you basically need this payment coverage for the up to one or two shipment,
okay,
which is create a less costly item for the exporter in terms of getting the financing. So suppose if you want to get a payment risk coverage from the factoring companies, this is actually 100% coverage. But if you have a standby for 10% of the total contract price, which, or 10 to 15%, which is equivalent to the one shipment, then actually the coverage cost is actually lower and actually getting the finance in a cheaper cost. But the very fact is that Bangladeshi market, as you mentioned, is very known for the LC. So LC product are well established, but banks are not actually have a supply chain product or open account product in their hand. So if multilaterals is actually come out with a standby support, underbacked by any foreign bank, actually provided a standby guarantee underbacked by the multilaterals as a guarantee, that will help, really help the market to go up. And one thing I want to add here,
please.
This particular circular is basically not reply to the constant demand of the global buyers to go for the contract sale, is also give an ample opportunity for the SMEs to get the financing, because SME didn't get bank finance directly because of the collateral issue, but getting a coverage from the abroad, it is bank is very comfortable position to get financing. So at this growing stage, I personally think that we actually needed the multilateral guarantee support backed by a standby issued by the foreign bank.
Okay, very good point. And we heard yesterday at the Trade Law and Compliance Conference, there was a presentation of the UAE Guarantee Project, and it was illustrated very clearly that, well, by one of the speakers, that he felt that demand guarantees or standby LCs are perfectly suited for digitalization. And that was due to the fact that, well, they're pretty simple in workflow compared to a commercial LC. Most are issue and expire unutilized. And there was another one our speaker had, but I can't remember what it was. But coming back to you, Farouk, in terms of digitalization, you know, it could, I'm not saying it, but it could have been said by someone going back maybe 5-6 years that in Bangladesh, the banks are really behind in terms of advanced technology in the past, okay? What about now, or what do you see is unfolding in transition in the banks in Bangladesh?
Okay, thank you, Vin. Actually, in Bangladesh, now digitally we are going very fast now. In supply chain financing, and digital platform is very important, you know, everybody. So we are trying. Already we have established one digital platform in Bangladesh with the help of IFC. And second, also our bank, Citibank, is introducing in a very short period of time with their main sponsor, with the China system. Okay. We are working on it, and it will be the very good digital platform and digitization for supply chain financing as well. And at this moment, actually, what Nesser says, our SME sector is now growing up. So the total financing in this line is very important at this moment because of earlier I mentioned that our middlemen's grabbing the whole fruits from the market, so they should be come out. And the digital platform is the main only one platform which can be minimized to save them.
I think you're right. Well, you can continue, but I think you're right because in a market the size of Bangladesh, so huge for the ready-made garments, without digitalization, you're not going to be able to scale up this supply chain finance. So back to you, Farooq.
Then Vin rightly says, actually in garments industries now back-to-back is established, but lot of supplier who are not in this loop. Okay, so our backward linkage is growing up, and small size industries are also growing up. To develop more, and it is time to grow them through digital platform. This is very important for our country as well as our neighboring country like India, Pakistan, and Sri Lanka as well.
Very important. So Shilby, I just go to Shilby first and then come back. Are you optimistic for supply chain finance with the current developments in Bangladesh? I don't think you were too optimistic, Shilby, a few months ago or 6 months ago. But are you optimistic at this point in time?
Yes, at this point I'm very much optimistic because several banks in Bangladesh working on it, and they know how to onboard the supply chain process.
Okay.
From where we will contact, how this process will be learned, and what our customers need. We are totally understand our customers' need. In that way, we are working on it.
Okay. Now, Shilby is wonderful. I remember a long time ago at a session, she was talking about import LCs and the importance of all the data being correct in an application form. And again, that's now transferring over to the supply chain finance, the onboarding of the data at the beginning being mission critical. So that's really important. But Nazrul, I cut you off there. You please join in.
Just to add one more point, basically, from the correspondent banking side. Correspondent banking is usually offer LC bundle of financing product to the Bangladesh, as Bangladesh is known for the LC business. So they may have a supply chain product in other market, but they do not have readily approved product for Bangladesh market to offer supply chain product. So actually getting a multilateral guarantee covered product, it will easily help them actually to provide the support to the Bangladeshi market to get this supply chain financing.
Okay, and I just can't forget your words, Nazar, when you talked about standby LC being short, simple, and clear. That's what my mother used to tell me I needed to be, short, simple, and clear.
Yes.
So I've been working well. I'm doing pretty good on the short one. Simple, I was naturally simple, but the clear, I'm not so sure. I'm doing my best. Okay. So Nazar, I've just a final question for you, and Athar, I think, wants to make a point after this. In the standby LC, you know, you kept mentioning ISP 98, but an awful lot of these people here, they would think just UCP. I don't want a discussion about UCP. We had it yesterday. But is there any one or two points why you really feel it should be ISP 98 instead of UCP 600? Just please, briefly.
On the electronic presentation, I must highlight one point. On the ISP 98, actually, the rule is very clear on the definition of the document in Article 1.3.
Okay.
This definition include paper document and also the electronic document with actually a very focused ingredient to capable of being examination concept.
Okay.
So then after it has a very precise definition of electronic presentation, electronic record, electronic receipt, and electronic signature. But just think about it. The rule has been developed back in 1998. But how foresight the rule is? We had EUCP subject to EUCP 600 with us for a long period of time, but very rarely in practice. So even a transaction, document issuance on electronically, and make an occasional presentation, because digitalization is now a buzzword. ISP 98 is more precise and consistent to the current environment.
Okay, I'm surprised to hear this coming from Bangladesh, but actually I'm encouraged to hear it coming from Bangladesh. Attar, coming back to you, you know where we are, the current status, like, and ICC Bangladesh must be one of the most dynamic national committees in the world. So what's your next step? What do you need to achieve your next step?
No, what Nesar and Farooq were saying about the SMEs.
Yeah.
SMEs is the backbone of any economy. And during the COVID-19, 2019, the central bank has given a lot of stimulus packages to the trade sector, including the SMEs. But unfortunately, the SMEs have not been able to get the financing because of the collateral and all this, and that is creating a problem for the SMEs to get financing. And central bank is after the commercial banks to put this thing. So, but what we could do is we now have to, the open account is basically to support the SMEs.
Okay.
And we want to do something more on this capacity building of the commercial banks and also SMEs to how to operationalize the open account. And in this, Vincent, we need your support. And we also hope that Asian Development Bank will give us some support to do this capacity building work in Bangladesh so that we can make the open account not only for export but also for import. And the other thing is that, Nesar, I think Asian Development Bank probably has given some $50 million or something like that as a standby guarantee for the open account. So that kind of thing, if other IFC and IFC is also giving, so it will help the operationalization of the open account system in Bangladesh.
Great, and the ready-made garments industry in Bangladesh has lifted so many people out of poverty, and that's really very, very, very important for us to actually remember. We have 5 minutes left, so if anyone has a burning question in the audience, and we'd love to hear it. Any question? Hashim, could we? Yes, and I'll get you the microphone, Habib, and you can bring it up. One. Oh, yeah. Okay. And just while we're waiting, like here in Bangladesh, we have the regulation, and while it's not perfect, it's on the right track to facilitate trade and open up a new line of finance for companies, SMEs. Everyone talks about SMEs, but sometimes it's hard to define what is actually an SME. But opening up for finance for companies. And Hashim, I know, is very active in digitalization, and focus is on supporting SMEs. So Hashim, if you have a comment or a question, please go right ahead.
Sorry, Habib, I did not get you. Okay. Hello, assalamu alaikum everyone. This is Hashim Al-Husseini. I'm the co-founder of MoneyMove FinTech platform. In fact, I don't have a question, but I'll start where Mr. Attar has ended. If you're looking for the open account for SMEs locally, this is our bread and butter that we are now doing in UAE, and we are taking it to Saudi Arabia as well. So it will be our pleasure as a UAE fintech company to do this with you, because we're starting the open account with ECI, Etihad Credit Insurance. Maybe some of the banks here has heard about the Unified Trade Finance Gateway, which is sponsored by the Etihad Credit Insurance, bringing the exporters with an insurance company with banks where we have the leading banks now, like Emirates, MBD, FAB, and other banks are coming. RAK Bank also, sorry if someone from here from back came 2 weeks back. We have something that we can do in Bangladesh right away on a national level that will exactly deliver the goal of the open account locally internationally with zero paper, zero human interaction that will support the SMEs right away. Wearing the other hat from Saudi Arabia, we have the funders, the financing, the government support that we can come up with in Bangladesh, and we do it right away. So from a technology part, from an investment part, to go and add value to the Bangladesh economy right away. So thank you so much and wish you all the best.
Thank you very much, Hashem. Let's give you a big hand for the support.
Yeah, I guess that's the kind of cooperation we need. And our chairman is looking at me, Michael Bickers.
In the world by per capita, which reflects the LC issuance. So also, I just say I look forward to with the move in supply chain about them going to do the certificate of supply chain finance. But instead of having a shameless plug, I would like to offer my services to do a webinar to Bangladesh on the subject matter with our colleagues who write the book for that. And I'm doing it publicly so I can be held to it, because I know Attar was asking me recently, so I'm more than happy to help my friends in Bangladesh.
Thanks, Alex. Greatly appreciate it. Well, Michael, I'm going to hand over to you in a moment, but I just can't resist telling you this, that we kept talking about Elsie again, Elsie again, you know, and just to let you know, my mother-in-law who's watching, she is so happy because her name is Elsie and now she feels she's famous. So, hi mother-in-law, Elsie, you're famous in Bangladesh. So Michael, we'll hand back to you and we can proceed with our next very exciting panel on supply chain. But thank you very much. Thank you. Well done.
Thank you.
Thank you, Vin. So this panel is about supply chain finance, development and impact. And first thing I'm going to do is welcome our panelists to the stage. So we have Claudia Perry, who is Regional Director at HPD Landscape, Bertil Kurtulis, who is Regional Director for Central, Eastern and Southeastern Europe at FCI, Rajesh Mira, Practice Lead, Supply Chain Finance at IFC, and Anna Kavtarats, I hope I've pronounced that correctly, strategic business.
Enough, Michael, to pronounce it.
I should know by now, shouldn't I? Apologies. Strategic Business Development Consultant, JSE Basis Bank. So I'm going to join you guys and sit with you. Right, so just to remind, when we are talking about supply chain finance, we're using the kind of limited definition of supply chain finance, the ICC definition, and we're just covering factoring and reverse factoring stroke approved payables finance. I want to start by just talking about the importance of this for emerging markets, and I know it's been mentioned before and touched on before, but why is receivables finance so important and so appropriate for helping SMEs, funding SMEs in emerging markets? I mean, for example, you don't need, as far as I understand, you don't need a strong balance sheet within factoring as a product. Finance tends to grow with the sales, SME sales or the client sales. So the provision of finance grows in line with that. And of course, as it was mentioned in the previous session, SMEs are so important to growing economies. In the majority of markets, not only emerging markets, but global markets everywhere, the number of SMEs far outweighs larger organizations. And the vast majority of businesses in any markets are SMEs. So it's extremely important, and if you can help to develop SMEs within a market, then you help to develop economies. And as it's been mentioned before and many times, SMEs are the backbone of economies. So let me start with you, Rajesh. What's your take on this at IFC? Why is this so important to developing markets?
So thank you, Michael. So as we all know, IFC's key objective is to get the finance to the SMEs at economic rate and as much as possible, especially in the emerging markets. One of the ways to do that is supply chain finance, because it cuts out a lot of processing on a bilateral loan, and you can really depend on an anchor to onboard this spoke and suppliers at a mass scale. But then there are challenges that even this solution has especially in the emerging markets. So I'll just mention a couple of them. We all talk about reverse factoring, and that is the subject today. But one challenge that we see in reverse factoring is that while the banks are taking risk on the buyers, it really stops somewhere, because every bank, every FI is looking at those large buyers. We all talk about Gap and Puma and all the big names. So unless we can go to the next level, a large section of the SMEs will be deprived of the advantages that reverse factoring is bringing. How do we address that? So we will discuss those points in the subsequent discussions. But there is a lack of credit insurance that is not available in emerging markets to the extent it is in some of the advanced markets. And organizations like IFC and other multilateral banks are trying to bridge that gap by bringing in their own investment and supporting the FIs to enhance their risk appetite, to go even to tier 1, tier 2 buyers, so more and more SMEs can be covered.
Sure. Thank you. And Bertel, let's move to you. I mean, many of your members at FCI are in emerging markets, and let's focus a little bit more on the factoring side. What's your view on this? Why is it so important, and why is it so appropriate as a method of finance to help SMEs in developing markets?
Okay, thank you, Michael. Many of the speakers on the previous panels refers FCI. Before EBRD, also Rudolf explained their transactions jointly, their transactions supported by FCI members and guaranteed by EBRD. FCI is the representative body for the receivable finance industry. Our core product is receivable finance. So we have 400 members in 92 countries. So when we look at the portfolio of our members, 90% of the clients of our members are coming from SMEs. So receivable finance is very important for SMEs, and SMEs and for the financial institutions is very important for funding the SMEs. It doesn't mean that the big corporates do not use factoring for their financial needs. When you look at the funding side, the biggest portion goes to big corporates, but as a number, we can say 90% of the SMEs, 90% of our clients are coming from SMEs, so which is very important for receivable finance world. And I also want to mention, for example, for UAE, 60% of private sector employment coming from SME sector. And this ratio increased up to 90% in most of the emerging countries. So SMEs are backbone of our economies. It's very important, their presence, to solve the needs of the SMEs and to provide sustainable finance to SMEs is very important. I think the only solution is open account receivable finance, because normally, I don't want to go into details of the difficulties of the SMEs, but they are the vulnerable part of our economies. You know, we in the different part of the world, we are experiencing many different difficulties on our economies, and in the banking system, unfortunately, the first decisions are taking the pull back the credit lines of the SMEs. So for the sustainability of their credit lines, to reaching the credit line for the SMEs, the only way is to use their receivables.
Sure. And I think it's worth mentioning that receivables finance has been extremely successful in the more mature markets around the world over the past few decades, and so much so that it's not only SMEs that receivables finance is now helping, but larger companies, middle-sized companies, are also beginning to use receivables finance more so than they used to.
Michael, if I may add. So obviously everybody knows that the SMEs are the lifeblood of all economies. With particular to UAE, they are accounting about 84% of the workforce in the private sector. And there is speeded development of the economies in the UAE. Obviously, there is focus on improving trade, which actually brings more opportunities for the SMEs, yeah? Your question was, what are the advantages for the economy? Yeah, so if you take an example of the supply chain finance or, you know, payables finance, yeah, this obviously brings a lot of advantages to all parties involved, yeah, to the suppliers, to the buyers, to the financial institutions, because, you know, it brings more profitability. You have fees from, you know, both the supplier and the buyer. But obviously it has a great advantage for the economies, and I will mention a few of them. So 360 degrees cash management, low NPL, low inflation, low unemployment, brings advantages for SME development, and also it brings international competence advantage due to, you know, sustainable finance and production.
So, yeah, sure, very good point.
Michael,
I'll come to you in a second, Anna, but I just wanted to say, despite all those advantages, you know, closing this finance gap that's mentioned a lot, Steve Beck mentioned it earlier, it's still very, very difficult to do that. And Anna, you're in an emerging market, so you've got experience of receivables finance being introduced into Georgia. Just tell us a little bit about that.
Yes, sure. I just wanted to comment, but I think you made a right comment, just to refer to the Stephen's comment with regards to the trade finance gap, which was probably the optimistic view of 1.7 trillion being identified, and with the current circumstances, which is going on currently with the Russian invasion in Ukraine, we of course estimate that this gap is going to be a lot bigger. As colleagues have mentioned, supply chain finance and would be a very good solution for the inclusiveness of the SMEs. We've been talking a lot about the need and SME being the backbone of the economy, and I'm sure that I think been mentioned there for the countries present for this event, and each and every one of us, really what we need is a stability and integrity for our economies and for our countries, which is integral part that SMEs have to be included and not excluded when the crisis comes. And we've gone through the crisis. And yes, Michael, factoring has been as a product within Georgia and within the region. I see Armenian colleagues in the audience and probably some other colleagues from our region listening online. But again, there are many obstacles which probably we'll be discussing today, why the product was not still as popular as it is today. But we see the trend, we see the positive dynamics, and with the support of governments and support of international institutions, I think we're driving to the right direction. Speed is still low, but at least we see the positive signs.
Sure, thank you, Anna. I mean, one of the issues that has been a problem in getting this off the ground and getting traction in emerging markets is the availability of credit information. So in many, many emerging markets, you don't have the experience in the Dun & Bradstreets, and credit information just isn't available, or it's very weak in its availability. And so I think it's getting better. It's certainly improving, but it's still an issue, I think, in many emerging markets. So what do we do about that? Bertel, let me come back to you. And what's your view on the paucity of credit information?
It's definitely a big problem for the emerging market, but it is also a problem for even for the some of the developed markets. And I think it's important to have, the important is to have the standards for all the financial system to provide the information to a centralized data and have the information from this data. So centralization is very important because for the last couple of years, the rising fintechs also provide, the fintech companies provide many information for, especially for the personal consumer finance data. But if you are not centralized the data, it is not helpful for the whole financial ecosystem. So centralization is very important. The other important thing is to support this structure with the necessary law and regulation. But because if it is not a must for the financial institution to provide information, it is not the system not gathering all the information from the banks, so it is not work properly. So supporting the system, the information system with the law and regulation is also very important. And the another important thing is to provide the data to all financial institutions, not only bank, also non-bank financial institutions. And if it's possible for the insurance system, because in most of the developed countries, we see that this information not give, the credit bureaus are not giving this information to non-bank financial institutions or the insurance companies, so which is very important. We have two good examples in the one developing market. For example, in Turkey, we have a very, very good credit bureau, and the infrastructure of this credit bureau is the shareholders are all banks, and there is a law supported to have the data from all the banks monthly basis. They are providing data, they are having data, and on the executive committee of this credit bureau, all the financial ecosystem represented, so which is they are working, it's very good. And they are also supporting the credit bureau also created the system for receivable recording in Turkey. This receivable recording system works online with the Ministry of Finance, which prevents the double assignment, double invoicing, the fraud cases. So the system works very properly on the credit side, and also for the receivable registry side. For example, we have another very good example in Poland. Additional to the Turkish credit bureau information, the Poland credit bureau, they're also sharing the information for the fraudsters. The fraud cases is very important for the financial ecosystem, as we have the very big fraud case in last year, like Green Seal case in the system. So sharing information, if the issue is the sharing information, the competition shouldn't be on the table. If there is a competition on the table, so the banks and the financial institutions do not want to share the information, but this is very important, because if one financial institution faced with the fraud case, the possibility for the others is also is the same. So sharing information on the fraud case is very important, and the Polish credit bureau is sharing all the data in the system and all the fraudsters' data with the system.
Yeah, very
One additional thing, when we are talking about the credit information system, we always understand that the negative credit information that we are expecting to have from the system, but this is not the case, especially for the SMEs, because, you know, as banks and financial institutions, we are just taking the balance sheet, they're looking for the past performance. But the day-to-day credit information give us the day-to-day performance and the future performance of the SMEs. So which is very important for the credibility of the SMEs.
Yeah, interesting that you mentioned Poland, because Poland is one of the most successful markets for the development of receivables finance in the last decade or so. And even before they had a credit information infrastructure and a credit bureau, they still managed to grow the market quite significantly. And the way they did that, they just exchanged the players in the receivables finance market, the independents and I think the banks. What they did is they just exchanged information between themselves, credit information on clients and debtors, and that worked remarkably well. Claudia, I think you've got some comments to make about digitalization on this?
Yes, I mean, obviously digitalization is solving the problem of bringing data available in real time. And as HPD Landscape is a software provider for the SEF industry, we have integrated our solution with credit insurance, insurer agencies, with business information systems, and obviously we have capability to automate this process and bring the right information that would help the factor to take a better decision, a safer decision with regards to the debtors or to the further on to the financing. Another one aspect I wanted to add to what Betul has mentioned with regards to all these registries, because there are certain countries where there are registries in place, they have been set up, and the banks, even in those cases when they are mandatory, which is very nice, there is a delay. So there is a delay with reporting. There is a deadline for reporting this kind of information. Then there is a further delay to to upload all the information and so on. And we are living in a world of changes. And if you have data available as of December in the summer, it might be probably too late. So I guess that, again, I mean, technology is out there, it has capability, but certain other aspects needs to be solved in order to provide it on access online. Yeah.
Okay, and we're going to, thank you for that, and we're going to touch on technology again in a few minutes, but I just want to move on to the importance of education. And when I say education, very often people think I'm talking about educating banks and finance companies about how, what are the mechanics of receivables finance, what's the legal structures, and how do you market the products and services, and that's part of it. But also in emerging markets, what is very often the problem is the SME and business community, they don't understand what it is. They don't know what factoring is and supply chain finance. So there's that side of it too, in terms of education, and that's where you need to talk to brokers and consultants and where trade associations, that we'll talk about in a minute, can be very, very important. But Betul, there's a very big educational program at FCI. Tell us a bit about that, how it works and how it's benefiting emerging markets.
Yeah, we are educating thousands of people on every year, coming from different different countries of the world. Of course, I mean, it's not questionable to educate our people for our financial information, everything. Lately, for example, we are giving education programs for digitalization, for supply chain finance solutions, because what I see from the receivable finance world, because supply chain finance is, of course, it is not a new issue, but it is what I see from the emerging markets. Many of the people, even the bankers, do not know the even definition of the very common traditional product of factoring or reverse factoring or supply chain finance. It is very important for the bankers to understand the product. On the backside, it is also very important to educate the clients, SMEs, because, for example, I have an experience from the market that supply chain products provides very competitive advantage for most of the SMEs, but they do not have this program because of they don't have the information. They don't have the knowledge of onboarding themselves into the systems. And they have difficulties on language, understanding the product. So it is very, very important. As a trade association, what we are doing, we are organizing with other trade associations in the countries to educate not only the bankers, the financial ecosystem, also the clients, also the regulators. It is very important to educate the regulatory people to take the right decisions. Also, it is very important to educate the law people, because it is when you have the problem with the client, you're going to the courts, and sometimes even there is a factoring or receivable finance proper law, but they are using the civil code. So it is very important to educate the people related with the rules and the regulation. So it is, Michael, there's lots of things to say about the education. It is important to have the budget and use the budget and educate the people.
Sure. And we're talking about legal and regulatory.
Education has its own supply chain.
Yeah, and I want to ask you about that,
Sure.
Anna, and because you're a relatively new market, emerging market. How well is receivables finance known in Georgia among SMEs and the business community? And what have you tried to do to improve on that?
Sure. So with regards to the receivable finance, compared to the other supply chain finance products, I think it's more well known to the market, but it took quite some time for the products to get matured. And it's still not quite matured, I would say, but the actions which are taken nowadays will bring its popularity. We tried many times with FCI through different institutions to organize seminars, workshops, and this was, again, not only for the financial institutions, banks, insurance, and etc. It was dedicated to the customers, because at the end of the day, you create the service for the customers, SMEs and the corporates, and the bankers cannot spread the voice as much as the customers can from their positive experience. It didn't work out that well, again, because of the legal framework, because of the treatment of the product from the regulatory perspective, because it was for a long time treated as a credit. And from the collateral point of view, requirements, again, legals need to be trained just to treat the product, risks have to be trained. So there have been a lot of work done with the support of, especially as you can imagine, in the developing countries, you still need a support from the financial point of view, from the experience point of view, in terms of the developing from the development bank. So there have been a lot of input from different IFIs in this regard. And I would just bring one example, which Mr. Putz mentioned today again. And I would think that there are some banks, and from my experience from Georgia and from the Caucasus and the region, emerging markets, I would see, and I've been within certain banks as a consultant now, seeing that the opportunities, the limits, the availability is there, but the lack of knowledge how to use these tools is still lacking. So it's very important to have experience sharing. The experience which recently was put in place with FCI, one of the Georgian leading banks, and also with an input, the risk sharing of EBRD program. This system was in place many years ago, but it was never utilized. So after, I think, 15 or 16 years, this was in place, and this is a very great example how cross-border transactions can be facilitated and propered with the very value proposition pricing, I would say, and both buyers and sellers can benefit out of that, and also the bankers who have at a certain point the capital issues in terms of financing, the providing cheaper financing.
Thank you.
Point on this.
Sure.
As far as reverse factoring is concerned on the domestic side, I think the tech platforms are now playing a very big role in this education because they have come out with apps, and you really don't need to sell anymore. Once that app is downloaded, it's self-educative, and SMEs know how to get finance easily. So I think that spreads much faster, that knowledge, and that's really happening in some of the emerging markets like India, for example. The second point I wanted to make was the very large suppliers now have an objective of this sustainability and climate and green. So they are playing a big role in educating their ecosystem to use the supply chain tools. They are incentivizing them also with financial, better sales terms or discounts on financing rates to adopt these tools. So as a result, the education is happening from many angles now on a large scale versus the old methods of doing webinars and sending out brochures and those kind of things.
And I think it's worth mentioning about terminology as well. I remember in the early days of the market in the UK, the players there didn't like to use the term factoring because they felt it had negative connotations, because there'd been some bad practice in the 60s and 70s by some players in taking on clients which were very, very weak and subsequently went bust. So some negative connotations were attached to that, and as a result, the association and the main players decided more or less one day that they wouldn't use the term factoring anymore. But the problem is they then all started using different terms like growth finance, invoice finance, sales finance, and it was very, very confusing to the business community. And in the end, people still recognize the term factoring. And I think it was a mistake to drop the term factoring. So I think that's something worth bearing in mind as well with emerging markets. And Claudia, you've got a point to make, I think, quickly.
Yes, very quickly. I think that, yes, technology is important, it's bringing, it's making its contribution to the education, but it's very important to bring international best practices. So I think that in order to really unleash the potential in those markets, you really need to bring in expertise from more developed markets, that have experience of making this product successful, and help them to deal with particularities of the market, no matter that we speak about regulatory or everything that comes out from the education. And just to add on this topic, Kyung Leon Lee, which is our APAC representative, has published an article for ICC Academy, which you probably know, it's the e-learning platform of the ICC. And he has actually made a very good point on educating for the sales force, because it seems that there is a problem with how this product should be sold in certain markets. He spoke about common misconceptions about factoring, like for instance, factoring is a loan, it is high risk, it's expensive, it interferes within the customer relationship, and so on. All these things that are, or it works only for specific sectors, it's impossible for others, it works only for very small companies. All this kind of incorrect understanding on factoring, he is actually pointed out in that article, and he is also providing a training on factoring within the ICC Academy as well.
Let's move on and let's talk about. Thank you for those points, and I want to find out what the multilateral development banks are doing in terms of helping with that. Rajesh, I want to turn to you. We've heard today from several development banks about what they're doing in this space, but I think you had a particular point to raise, Rajesh, about credit insurance, didn't you? Tell us what do you mean by that?
So what's happening in the emerging markets today is that what we saw during the COVID period also, the FIs were shying away from, financing SMEs. And there are various other times in history when this has happened because of the perceived and also high risk in the market. And that is why supply chain is a successful product, because it mitigates a lot of the credit and operational risk associated with financing on a bilateral basis. However, having said that, FIs still have to make a choice as to where they want their investment to go. And if they need to be encouraged to bring their lending and their money to the SMEs, they need that risk enhancing support. So in emerging markets, there is a lack of credit insurance today, and the multilateral development banks are playing a role by offering products like risk participation, or even extending loans to the tier 1 and tier 2 banks. It all depends on what kind of an FI you are. Are you a local or a global FI, and what you need? So some of the FIs need to enhance their risk participation, the risk capacity. So they take a guarantee from multilateral banks. Some others actually need liquidity, and there is a funding support that is given to them. And then again, there is a requirement where FIs need capital relief. So that the multilateral development banks do help in that also. Now, one of the things that the development banks are trying to achieve is, by doing this, they are demonstrating. Once a development bank is in the game and is, has a participating risk in any of the FIs, it encourages the private sector to come in and put investment as well, because it gives a big boost, because development banks are very highly rated in terms of credit, most of them. Plus, they are known to be doing a very good due diligence job before they do any kind of investment. So this gives a big boost to the private investment into this, and I think that is one big role that they play. Other thing is that working with the regulators and improving the legal and governance framework in a country, that gives a big boost.
Sure, and we'll move on to
Sure.
that in a second. But before we do that, I just want to quickly go to Anna. Anna, you've developed an interesting cross-border solution working with EBRD and FCI. Can you tell us a bit about that, how that arose and
Actually, it was not me. It was one of the banks in Georgia. Apparently, it was,
apologies.
but I have
Tell
been
us
working
about the
with
solution.
FCA as well. I mean, on behalf of the bank, and which is namely the TBC Bank, they have developed a very good strategy and the product being in place, which they made the product alive. And that's a very good case study for the cross-border factoring, which I have already, I think, touched the basis or within the stage, that EBRD provides a risk sharing. And the transaction is made under the ED factoring system. And basically, that's a benefit for all the parties involved. Tremendous benefit. And I, as this bank has many times have shared its experience, I'm sure that both EBRD, FCI, and the banks participating in this transaction should be talking about this quite a lot to spread them out and to share their experiences. Claudia well mentioned, it's very important to share the experience, both positive and negative, because the transparency would open the windows to the new opportunities in this case.
Sure.
And if we talk about not a product development, but how financial institutions like IFC, EBRD, and ADB helped the environment, it would lead me to the discussion of going to the legal environment, because today Stephen mentioned about the two very important initiatives globally, which is DSI and which is legal framework, which cannot live without each other. It's like there is a unity in these two core elements, and if I may switch to the EBRD project with EU for Business, which enables very soon to have a new law framework for the factoring in Georgia, which will definitely promote and proper factoring business within the SMEs, because already we see the interest is there, but there is support needed in terms of the regulatory perspective, in terms of the capital relief to be adjusted to the regulatory approach to the factoring. In order this law to be effective, there have been additional technology input made that with the support of EBRD and Investor Council within Georgia, there is a technology platform to be built, which is going to be the electronic registry, public registry for the invoices for the factoring, which will be mandatory, obviously, and hopefully there will be no delays in terms of the reporting, and which will make factoring as a business more attractive. Risk approach would be more open, the risks approach will be more open, and the financing opportunities will increase for the SMEs, which will lead the SME inclusion back to the where they need to be.
Yeah, I mean, this is extremely fundamental. You can have all the...
Maybe we may also mention about that transaction. EBRD is not taking risk of the buyers. The buyer risk is taken by the import factor, the importer's bank, and EBRD is backing the importer's bank performance. So it is, from the export factoring perspective, the transaction backed by two banks, so which is very secure way.
And it's a lot easier, although I'm a good advocate of LC business in general, but when it comes to the short route, of course, factoring is a lot easier product in this case.
And this should be very useful, shouldn't it? Because
especially
with import factors, it's been difficult to get to take risk. And this should fill a significant gap, I think, the structure. Don't you
yes, and also I would like to mention that it's, of course, if there is an LC on the table, it is easy for exporters to use the LC. But if there is no LC, and it is not easy for example, for the European buyer, especially in the retail or on the automotive spare parts, most of the sectors, it is not possible to have the LC for the SME exporters. Technically, it is very, very few. So it's all open account, and they need to guarantee from the buyer side to secure their transaction.
Yeah, just got a couple of minutes left, but I think just very important just to focus a little bit on the legal and regulatory side a bit more, because you can have all the will in the world to, to try and develop a market and grow a market, and the desire can be there among businesses and banks, but if you haven't got the legal structure for supporting it, then it's just not going to work. And so, Betel, I know that you've got experience of this in Turkey, but you also, I think, want to mention the new UAE law that's been introduced here recently.
Yes, here it is of course for the health of the whole financial ecosystem, the support of the regulation and law is very important. So recently, UAE Ministry of Finance, they published the new factoring law. It has been published on the last December. So it is. I mean, I have an experience from very different countries for the factoring and receivable finance law, and the UAE factoring law is very, very good one. And normally, if you're taking a receivable from a client, for the additional rights of the receivable, you need to sign extra paper on some other things. But in UAE law, it's defined very, very properly. So I think it is important for the financial institutions here in UAE to increase their receivable finance and factoring business. And before that, there was another law for movable asset. Before that, there was a new law for the leasing. So all these supportive laws creates a very healthy financial ecosystem in UAE.
The only problem is that there is not much awareness on the improvements that this regulation brought here in the United Arab Emirates. And I think that's a pity because there is a lot of opportunity for launching this kind of services, factoring, supply chain finance, so all those advantages that need to be understood. So
The law is very new, and I must say that even it is a very strong one. It is not easy to implement the law because all the other, we were talking about the trade associations. For example, the role of the trade association is very important for the implementation of the new rules and regulations. For example, in Turkey, we have a very strong factoring law, but from the first factoring transaction till today, there has been 40 years. So it is, it's not just a one-day business to implement everything, but if you have a very strong law and a supportive government and Ministry of Finance, it is much more easy for the financial institutions to have this implementation. What we need that the system needs some kind of enabler to increase the awareness or adapt new rules and regulations. And usually, as far as I know, there is no non-bank financial institutions here, but the banking institution, non-bank financial institutions plays this role in the developed countries.
Yeah, these things take time. We're pretty much out of time ourselves now, actually. Maybe could take a quick question if there is any from the audience. Otherwise, I think we're breaking for coffee now, Vin.
Yes, Michael. Wondering if there's any questions in the audience. I have the mic. Yep, we've one up here. You want to keep me fit, don't you? We'll meet halfway. That's a very good way of doing trade facilitation. You know that? We meet halfway. That's all right. There you go.
Hi, my name is Masri from FCOM, Germany. Just one question, please, because we know each other, all of us, and even the competitors there. And just right now, we're developing a kind of Islamic factory. We see that the need for that, and I saw nobody mentioned that from you. So I'm wondering why.
Well, we're not particularly focused on the region here. We're looking at this from a global perspective.
Yeah, I can mention, or FCI do have two new product line. One is reverse factoring. We already spoke about that. The other one is Islamic international factoring. We have many Islamic bank member for this product. As an association, FCR General Rules for International Factoring describes the transaction only. So there is no funding under our rules. We are not dealing with the funding. So we're just structuring the business. So you can either finance this transaction on a conventional way or on an Islamic way. So it is almost the same. So as there is no financing in the general rules of international factoring, the product itself very Islamic. So we launched this product in 2018. It's approved by the Consul, and it is now our members, or Islamic members and non-Islamic members, because this product allows our Islamic members to work with the non-Islamic members to do transaction under the general rules of international factoring.
I think this is a very valid point, because obviously this market provides both conventional and Islamic financing, and it's quite interesting because factoring and supply chain finance are actually very well are representing the principles of Islamic finance. So yeah, there is an opportunity, there is potential for Islamic finance, Islamic factoring, Islamic supply chain finance. I have been discussing with different consultants that are helping banks introducing this kind of services. There are variations on how Islamic finance is working from one country to another. And I know that from a technological perspective, they are having some challenges because they need a lot of changes in the platform. So another advantage is, getting the focus on flexible technology that can allow you to set up different types of product variations like HPD is providing.
You always got to get the last word in, Claudia, I've noticed.
I will catch the last word now.
Okay, you get the last word.
Because Claudia mentioned the technology, and I didn't touch the point. So if we are expecting as a country, and I will just not generalize, but if you have an expectation that the law is changing in a better way, there will be a registry, then definitely if there were the banks or the companies who were reluctant to purchasing or developing the structures for the digital interfaces, it's, it cannot be escaped now, because if you have a flow, you have to support it with the technology. So it's an interesting era, which is, we don't only see that there is a need for the digitalization, but it's unavoidable.
Definitely.
Sure, and that's going to make a dramatic difference to the
And
markets.
digitalization, it's not a short-term diet, it's a constant, continuous process.
Vin, do we have time for any more, or do we need to close?
Yeah, you can go. If there's another question, we can take it. Yeah, of course. I think we're okay.
Okay.
Yeah.
All right.
Well, guys, let's give them a round of applause. That was really an excellent panel. And what's kind of interesting for me is, in terms of the Islamic factoring, in Islamic banking, the Islamic banks are taking ownership of the goods, and factoring is so close to the trade cycle. I think it works perfectly. But the other point I just wanted to mention, when we're talking about the factoring and the EBRD model, two people, it was mentioned twice. When we're talking about factoring in the EBRD model, it links back to what our friend Nezarul said from Bangladesh, because at the end of the day, the risk is covered by a standby letter of credit. So I think that's something important to bear in mind, that this new suggestion coming from Bangladesh already has some precedents that work. Now, some important news for you. We're going to go for our coffee break until 4 o'clock or 5 minutes afterwards, okay? But just to let you know that your tickets for Expo, no Stampede now, okay? Your tickets for Expo, the largest trade fair in the world, are available at the registration desk where you come in. So you can go down, and what's down there is registration and transport. Registration and transport. So, and it's not just now. So over the next while, they'll be there when we finish, etc. So those who feel like getting your Expo tickets, yeah, Habib, correct? To the largest trade fair in the world, and it's wonderful, And the coaches will be going on Friday morning, but I'll give you more detail of that, and they'll be going from outside this building, but more information on that. You don't need to use the coaches, you can do your own thing or whatever. But the tickets are there now, compliments of Dubai Chamber. Pick up your Expo ticket, register for transport, and we'll see you at 4 o'clock. Wonderful. Great, you're very welcome. You're very welcome. We're only warming up. One in Bangladesh saying that now digitalization, but they didn't use the word digitalization, they used the word advanced technology, which I thought was pretty good because digitalization, I have problems saying this word, but advanced technology, no problem, okay? So they highlighted the importance of digitalization or advanced technology in Bangladesh. But also, then our very last panel, they made the very clear point that if you're going to do factoring, reverse factoring, supply chain finance, whatever you want to call it, as far as I'm concerned, you need the technology to scale the product and to make a difference on the ground with SMEs in a country like Bangladesh. So Michael, our chair here, just I think we've enough people back. Please come in. Sorry, Habib, yeah? Oh, thank you. Thank you. He keeps an eye on me. So, just to let you know, the gala dinner is in the Park Hyatt. Park Hyatt, starting at 7:30. We started last night at 7:30. Tonight, we start at 7:30. We go a little bit later tonight. We start at 7:30, okay? And that's in the Park Hyatt. We will have coaches outside at 7 o'clock, outside this building, the Dubai Chamber building, okay? Not the Sheraton. And remember, it's the Park Hyatt in case you get a taxi, because about 2 years ago we did another event, and it was still in the Park Hyatt, but everyone went to another Hyatt. But think of parking your car, okay? I've told you, so don't go to the wrong place. So, Michael, over to you. And I hope your panelists are here. Oh yeah, all set.
I think people are still coming in, but anyway, we have to stick to time, so we better get started. So this session is about trade transformation through technology and inclusive strategy. And what would any conference these days on finance, receivables finance, where would it be without a fairly significant inclusion of technology? I've been kind of observing the whole area of trade and receivables finance, factoring, supply chain finance for more than 25 years. And technology has always been very central to those services and those products. But the level of development and change that I've seen in, say, the last 5 years has been more than in the previous 30 years in the sector. So I've been observing for about 25 years, but I know that even further back than that, technology has been central, changes have been, and development has been strong, but nothing like what we've seen in recent years. Okay, so with that in mind, I'm going to introduce the moderator for the next session, and that is Dr. Joseph George, who is Head of Information Systems and Technology at the National Bank of Fujairah. Joseph, where are you? Over to you.
Thank you, Michael and Vincent. A very good evening to all of you, ladies and gentlemen. It's my pleasure, privilege, and honor to be with you all in this session, especially with the distinguished panelists. I do have 3 members today along with me. When I was looking through their profile, they do have immense knowledge. All of them have more than 3 decades of experience. I'm sure with this session, they will be able to give some outputs to you so that there will be a takeaway. In fact, while I was talking to Vincent and Habib earlier, and we had a chat along with the panelists, we said they have given us a good title, Trade Transformation Through Technology. But they have put a hyphen and said an inclusive strategy. See, nowadays this digital is a buzzword. When it comes to trade, you all know trade is not only digital, rather it is a digitization start, because there are a lot of documents. From the document you take and then you digitize, then you digitalize, then you process, maybe using robotics or AI. That's the way it goes. So we will try to give you some inclusive strategy as well towards the end of the session. So I request the panelist, the first one, Mr. Jesse. He's the CEO of Monetago, and he is a visionary, he's a strategist, and he come across the globe, interact with the different financial institutions. Please, Jesse. You can take the second seat. because you are an important person. I would like to call Mr. Manoj. Manoj is the Chief Product Officer. He also holds immense experience with Citi and JP Morgan and different technology companies. Today he worked with the Trade Sun as a Chief Product Officer. Thanks, Manoj, for being with us. I would like to call even my mentor and my colleague, ex-colleague, Mr. Lakshman. We both worked together in our previous bank. And Lakshman has got immense experience, knowledge in even technology, even processing. Thank you, Lakshman, being with us. Yes, please. And if I'm not wrong, in 2012 or 13, myself and Lakshman together has implemented the first trade SaaS implementation in the Middle East. So that's the acquaintance me and Lakshman has. So I'm very glad to be here with this distinguished panelist. Before I go to the panel session, I know this is a difficult session and this is the last session. And you can see an image here. What is it? Fishing. It's fishing. Can you look back to your life? I know many of you have looked back. What I said is look back to your life. Okay? This is a cultural issue. And when I say this, in our life, when I was in college or in school, we used to fish for pretty good-looking girls. The fintech is fishing for some good banks or some other providers. Maybe the banks are looking for good fintech companies so they can merge with and create more business. I mean to say fishing is one of a by natural nature we all follow. As I mentioned in my initial statement, we as a panelist together, we will give you an inclusive strategy. As you go out of this room, you will have some takeaway today. I promise you, along with this gentleman, thank you, and let me now get into the discussions. My first question to Mr. Lakshman. See, when it comes to the trade, customer excellence is one of the important points. When we say the definition for customer excellence, it changes from market to market. It may changes from people to people, even process to process, and even different level of convenience. Since Mr. Lakshman has worked on the entire trade for more than 30 years, plus he has his own company and he has come out with different products in the using technology, how digital technology can play a role to enhance customer excellence, and what challenges you see bridging this cultural gap?
Good evening, everybody. Thank you for having me here. Thank you, ICC UAE, Vincent and Habib. And thank you for this interesting question. I can start with a small recent example, like what we did in trade assets, rather than going to the banking days. So when we started trade assets, and then the core team, we sat and then we wanted to design the platform, the trade assets. We ensured that at least 2 actual practitioners of the space we are covering in the platform, we were part of the team, so they can bring their own inputs into the design of the platform. Then we spent, we went all the way to Bangalore, India with the technology team. And then we sat for 2-3 weeks, and then we came out with the beta version of trade assets. But then that is only the beginning. We didn't immediately go into a live version. We came back to Dubai. We launched the beta version at GTR Dubai 2018. And then we created a working group of 15 banks who are going to actually use the platform including an international bank and regional banks. And because we have friends in all these banks, so we requested them, a friendly request, saying that, can you be part of this working group and then test the beta version and give us real feedback as a customer. So, and then we didn't, we let it run for many weeks. In fact, it went for more than 3 months. And believe me, believe it or not, we got really good feedback. See, because we all thought the core team, some of us, we thought we had 30 years experience, 20 years experience, so we know everything. So whenever you think that you know everything, you are proved wrong, by the customers, like this thing. So what we got as a feedback after this from the working group was really an eye-opener. We got something like 80 to 100 line items of feedback, 80 to 100 items. You are talking about 6 screens, So there was feedback on functionality, there was feedback on process steps, there was even feedback on the layout and the design of the screen, fields, tags, like this thing. So we were very happy that we did this exercise. So then we went back to the technology team, we sat with them, and as much as possible, we tried to build all those, inputs back into trade assets platform. Then finally, towards the end of those 3-4 months, this thing, then only we were kind of happy to release, release a soft live system again with a few banks. This thing. So we finally went really live only after we almost kind of, if not 100%, we were 90% sure this is what the customer wants. Yeah. So that's a small example, but that is how you need to be, or you have to be customer centric, or you have to ensure that customer's experience or customer engagement is really taken care of. Yeah.
I think that's fantastic, Lakshman. I think you have.
And one last line I will add about fishing. This thing in trade assets also we fish for customers. This thing we don't know whether they are male or female because our customers are banks. So if the word bank is a female, we fish for female customers. Thank you.
Thank you, Lakshman. At the same time, I would like to ask one more question. What are the challenges you face, especially the cultural shift? Because you do not have a product, because that's where the technology challenges right now coming up. Many of the banks will say, have you implemented your product anywhere else? Is it proven? Because when it comes to trade, it's very tricky and banks do not want to make any mistake. And how that cultural aspect you have changed the barrier, or what challenges you faced when you gone for this pilot?
It's for me again.
Yep.
Can you repeat the question, please?
The question was, when it comes to the bank, if I take a technology, since I'm a head of technology of a bank, we always try to ask a question, have you implemented this product anywhere else? Because we wanted to take a proven technology or a proven product.
First, really.
So as a first goal, how this cultural barrier you brought?
See, now we go back to our banking days, so whenever we wanted to do something during our banking days, at least what I was doing was, I was doing 2 things to start with. One is, we do a short survey, what we are trying to do and in what space and this thing. So we select some customers, we go to them, we ask we make them fill up a survey, and we take that into account, trying to, instead of developing something and then giving one size fit for approach, or this is what I got developed, you have to take it or something, this thing. Second thing is, I also used to ensure the project team, is always, the head of the project team is never a technology person, because technology can only be an enabler or a tool like this thing, but then the actual project has to be headed by someone from the business. So who will be able to bring the customer experiences fully onto that this thing. See, if we are the first mover, we try to throw a little bit of the innovation, the disruption, we try to highlight those aspects, and then we also then kind of highlight the end scenario for the customer, today they are there, and then how do they benefit where they are, and then tomorrow they reach there by using our offering, how they will benefit and where they will reach. If you are the first mover, you are the only one offering that. Otherwise, you can always benchmark and you can,
And I think on that point, the very first important step is to stop with the regulator. Because as soon as you talk to the bank, they're like, this all sounds great, but what does the central bank say, or what does a regulator say? So going in, doing the education up front is a very important step in getting them to be the first mover.
To ensure the compliance.
Exactly.
Yeah. Especially if it covers areas, sensitive areas of data privacy and security and all. But I'd just like to add on a few comments to what Lakshman said. One of the fundamental principles is first you have to take, to his earlier point, is the customer is always right, right? If that said, I think it's important not to go and push and sell something. It's more important to figure out what the problem is and take a collaborative approach. And I want to share another example. It's important to find a client or a prospect who has a pain point and is willing to experiment and let you take most of the risk. You as the fintech take most of the risk of implementation. And TradeSun, for example, has been extremely fortunate that a bank like JP Morgan has chosen to collaborate with us and support us in this journey of experimentation and building something that will be of immense value to them and to the marketplace as well. So I think if you're designing something new and disruptive, it's important that you collaborate with the client and come up with something that is really needed. So the example that Lakshmanan gave is just another methodology, but I think we all need to follow it rather than trying to shove a solution down the throat. That's not going to fly.
You can't build it in a vacuum.
Exactly, and I think Jesse will also talk about his experience similar.
Yeah, absolutely.
Manoj, I think the same thing which Lakshman mentioned, and he mentioned a word called technology as an enabler. Do you really think technology as an enabler, or do you think technology as a leader? Why I ask this question? Previously, we all talk about technology as an enabler. When you take a scenario of a family, we all know the importance of the mother. Mother is always an important factor in any family. But mother is always the leader or the unseen leader in a family. The same way, do you think without technology, can we live as an enabler or a leader? And when it comes to the process, based on your experience with Citi and even JP, how you see the process excellence can be achieved to provide the customer excellence?
So it's very important to note, the business is going to grow. It's a universal truth. Every single entity in the ecosystem is trying to grow the business. If the business is going to grow, some of the natural fallouts of that are going to be more and more data. Yesterday we talked about how fragmented the trade data is, and we're creating these data islands. As this data grows, it's only going to become more and more difficult to make any sense out of it, right? Then the regulators are coming forth with new compliance needs, and those are increasing by the day. So as your volumes grow and then your regulatory compliance needs grow, how are you ever going to manage this through only a manual process? It's just not going to be viable, right? So I think it's inevitable that technology has a role to play. And it's going to be a leading role, not enabling role anymore. I think we have numerous examples, but I'll just stick to the trade domain to say where all we can see efficiency. I'll just give some examples. So starting from the client onboarding process, right? Historically, it was based on documentary proof and submission of identity. And again, if the number of clients are going to grow, that process is going to become cumbersome. You may do it as a one-time, but nowadays there's a need to keep on refreshing and revisiting that KYC. How on earth is it going to be viable to maintain your cost and not see it grow linearly if you're not going to do a manual process, right? And keep shuffling through documents. So again, technology is coming in. The concept of digital IDs is coming in. The concept of self-sovereign IDs is coming in, which will make this whole process transparent, and identity sharing will become a norm without ability for others to steal identity. That's just one example. Another one is in the area of compliance, and this again very germane to what TradeSun is doing in the area of compliance checking. Today, many of the banks are following a risk-based approach to compliance. They just don't have the bandwidth to support the kind of volume that the business is churning out. So how can technology help orchestrate this process, automate it, and take as many of the decisions that can be taken on behalf of the humans, right? And only throw out the exceptions which the humans have to manually intervene on then. So the example that I've given is exactly what we do in TradeSun. We've got solutions that can help you check for dual-use goods, fair price, sanction screening, the works, anti-boycott. And the system will throw out its recommendation on what could be right and what could be wrong. Users, at least the effort that it would have taken to log into 5 different sites, to do these 5 different functions, and then review their results and intervene on wherever there were exceptions found, would be a painstaking process. And if the business grew exponentially, the cost of doing this would be phenomenal. So there's no other way than to apply technology to do this. And it's a play of operational efficiency, but it's also a play of better risk management, because rather than following a risk-based approach, you can do 100% coverage and compliance. And you can keep electronic evidence of what has been done. So if tomorrow audit or regulators come in and say, show me what was done, that the required due diligence was done, the banks can do that. Right? So that's another example. The third example, again, specific to trade, document examination. Very rare expertise, scarce, takes years to build, and as banks are losing some of that expertise, very difficult to replace. A place where, again, technology can help. Document examination by no means easy and cannot be substituted, I would say 100% yet by machines. It will take some time to build that expertise and that intelligence in our machines through machine learning. But definitely some of the checks can be automated. And that process can be, of checking can be brought down significantly to be a less effort-intensive process. So there are numerous such examples that could play the role of enabling
I think that's a very great input, Manoj, and maybe this is related to the similar question I would like to ask Jesse, since you are part of kind of deduplication check and the systems that you have implemented in India, that's what you mentioned to me. Mm-hmm. The same kind in UAE, we have implemented UAE Trade Connect.
Yeah.
And again, it is in a siloed base of approach in different part of the world. How such kind of thing can be brought in together into a global perspective to ensure and reduce the fraud, rather when we go for the process excellence through technology, how it can be secure, and what is your experience and challenges, and what's the opportunity we had?
So there's a number of things, data privacy laws, localization laws, such as in India and what have you, and then the need for different levels of examination, so the document examination and what have you. You need the details of the invoice for that, or the document, or whatever that you're checking. But then when you start to try and take that cross-border, then you run into all sorts of, not just technical implications, but also legal, regulatory, privacy implications. And so looking at a company like UAE Trade Connect or a minute ago, we launched the first registry like that in India in 2018, partnered with SWIFT there so that the banks were enabled to come on board and didn't have to trust a small fintech and have to go through the onboarding process with 30 some odd banks there. We started to look at, okay, if I can't take the data out of India, or if I can't take the data out of Dubai or other different regions, or the banks just aren't comfortable with that, how do you mask that data but still make it identifiable to people? So that led to our work with SWIFT, where we're launching a service to all their member banks around the world, where registries like the one we have in India, registries like the one that's been launched in Thailand, the one that's soon to launch in Singapore, the one that's here, UAE Trade Connect, are enabled to take their local registry, which has a lot of value in terms of the data that's in it and very rich analysis that can be done on that data, and hash out those elements. Hashes are seen legally around the world as non-PII identifiable information, and so that can be shared cross borders. So we've worked with SWIFT to develop a concept of a global hash registry, so that these companies, when they're looking at import-export functions, are able to, instead of trying to do a one-to-many query, and so say I'm the UAE Trade Connect and I've got a import-export thing going on, but I don't know who's financing it. It could be actually a third party in a third country. So instead of going and trying to query all of these different registries, which technically is a lot of overhead, but also from a sort of standardization perspective is still lacking, they're enabled to go through what we call the Global Hash Registry, our secure financing product, to basically register everything that they register locally, and then again, sort of have it non-identifiable to them, but it does solve for that cross-border element. And it's not just invoice, it's bills of ladings, purchase orders, letters of credit, anything that could be used in collateral for trade finance. So,
thanks, Jesse. I think that's a great input. I think if we are able to achieve that in the global perspective, I think we will be able to reduce a lot of frauds, and the security can be enhanced on part of that.
It's just one piece in sort of what you have to do. So there's authentication piece. Like in India, we also look into the goods and services tax network to look at see if the invoice has been filed on behalf of the supplier. We look at e-waybill information to make sure the goods and services description matches what is in the invoice. So all of these data points that TradeSun and Trade Asset and all these different people and ourselves come up with are just tools. Information services is not, I never say we're going to completely eliminate fraud, but it does reduce the risk, which in the long term has knock-on effects for trade finance gap and inclusive strategy, as we're talking about here.
I think you mentioned two key points. The one was, you said, I don't know who is financing. Second point you mentioned was, this is a small bit as part of the entire trade. If trade has to be a global and it has to be a wholesome process on technology, the proven technology or the proven approach is the blockchain. But the issue is,
maybe I can take a contrarian approach to that.
Yeah. The issue is the networking. Everybody is getting converged to the platform.
So look,
what is your
if you're building a house, right? You've got a number of tools that you use to build the house. Think of blockchain as the hammer. You can't build a house without the saw. So the saw is maybe the AI, advanced data analytics, data warehousing, things like that. So blockchain is extremely useful, but it's not the end all be all. It's not gonna solve the world's problems. It's becoming now deployed and it's becoming effective. But you look like what we did in India. We were on Hyperledger first. That started to reach its limits of scale. We've been charged 3/4. And then when we thought, okay, we're going to take on all of the transactions all around the world all at once. Moore's law will get us there, maybe in 10 years. But for now, it's not the right tool for the job.
Do you think that is not happening because of a lack of maybe an organizing or regulatory kind of across the globe?
There was a lot of discussion yesterday around how banks can have better collaboration, right? But there are genuine concerns around that as well, right? One of the key things is lack of standards. So, I mean, earlier today, Steve was talking about the DSI initiative, and I think that's a great initiative taking on. Hopefully, if it picks up the adoption worldwide, it will help creation of interoperability, which is key given the diverse nature of the trade ecosystem. The other thing is security concerns. There's a kind of dilemma there because on one hand, regulators ask for more and more secure, and data privacy. So the tendency and ability to share is reducing because of the increased focus on security. But thankfully, the answer is secure technology does exist to be able to, and the examples that he was giving, we can share without necessarily disclosing the identity of the owner of the data. Solutions are there, but these are hindrances to that global ecosystem, if you will. And there's some of them.
And there's an education process that has to go on. The banks aren't comfortable with it. The regulators aren't quite comfortable with it yet. So, but I've always said this: technology is not the problem. It's getting the business units and the regulators and everybody up to speed and aligned.
So I'll be asking another question to all three of you. Can give your view. See, when it comes to the trade, there is no single technology available in the market to the end-to-end processing. There are various kind of technology need to be converged together. So we need to have a holistic approach for selecting the technology. So how do you feel how people are getting trapped or people are getting excel in this situation? Or I mean, say the banks.
Trade finance, trade as a business, it has been the most non-technology dominant, like in the last 100 years. Trade as, I'm not talking about the last 10 years, I'm saying till the previous century, the trade has never seen any technology intervention or interruption like this thing. So trade has always been a manual, paper-intensive business. This thing, but then there is no within the banking space. There is no business like trade finance, which is already undergoing, and it is going to undergo a huge technology and digital intervention like anything you have never seen before. Like, especially I am predicting in the next 5 years, trade is going to completely change. It is going to go through a huge transformation. Like what we used to say, usually the trade is, it's physical documents, so it travels from one desk to another, from one country to another physically, this thing. But then that is going to change, and it is going to be more screen based, and instead of the physical document, data is going to travel, So if there is an exporter in Hong Kong having this set of documents, bill of lading, this thing, that is no more, DHL is no more going to deliver those documents to a bank in Dubai, but then the banker sitting in Dubai is immediately or instantly going to see those documents by means of data on the screens. So the trade is going to become more screen and data. That is something you can see coming. Then, like rightly you said, in trade finance space, there are hundreds of fintechs, all of us, like us, even here in the audience, I can see at least 4 or 5 fintech companies are sitting. More than 100 fintech companies are at least trying to automate, digitalize, or trying to streamline, trying to add their own value to a particular space. Trade itself is not one single space. Trade has got so many different spaces. Like we are on the asset distribution. There is somebody on the operation. There is somebody on compliance. There is somebody on doc checking. So, but then, like Manoj was saying, interoperability at some point in time, because these are all of us, we have created our own digital islands, our own systems, which they know, and none of us talk to. They don't talk to each other like this thing. And then the bank is having to deal with if a bank has trade assets, they have another trade stream, they have got 2-3 systems, then the bank has to deal with each system separately, this thing. So interoperability is key, and so the DSA initiative, hopefully it will come soon. Then again, you have the physical documents, the negotiable instruments, vis-a-vis the digital documents, So there is another initiative, DNI initiative is running parallelly, to make countries and the whole system, so that the digital documents are legally acceptable, especially the bill of lading. So the digital bill of lading is a huge subject now. Like many of us, we are now trying to develop digital bill of lading, subject of course, ML, ATR and all these regulations. Yeah, so my take is, I think in the next 5 years, trade will go through a huge transformation, and all of these digital islands hopefully will come together, and then they will either integrate or they will interface, they will speak the same language, seamlessly, and then making things easier for the bank and the ultimate customer.
Yeah, I think Manoj hit on a good point around identity. When you're a bank and you have to interoperate with all of these different fintechs, and you've got to do the IT and IS analysis on it and what have you, and how am I connecting to you, and all those different hurdles, that creates a barrier to interoperability, right? Because I've got to sign in with my credentials over here, I've got to sign in with my credentials over there, I've got to sign in with my credentials over here. That's one of the big pushes that we're doing with SWIFT is we're the first fintech that's been accepted into this program with them, but the long-term goal is that as a fintech, you go to them, they vet you thoroughly, it took 2.5 years to go through their process, but then at that point, the banks have comfort with them, and then they use their SWIFT credentials to log in, and then they use the SWIFT network to communicate with us. Provides a great level of comfort and a lot less friction on their point. So, I think interoperability is great, it's a buzzword, but we've, if we look at the consumer internet today, it's made up of hundreds of API calls that happen seamlessly as you go through an app, and all of that is tied back to your identity. And so I think that's the challenge. In
Concept
the
of
next several years.
federated identity is really going to pick up. I'd just like to add to the points I think both of my colleagues were saying here. I think within the bank's own ecosystem, there's not going to be a huge rip out and transform and replace, approach. What's really going to happen is there are going to be multiple points of intervention where solutions and new technology will be brought in to disrupt and enhance specific pieces. And I think Lakshman was alluding to that. Right? There may be a compliance-specific intervention, there may be a KYC-specific intervention, there may be a security authentication related. And then, AI will begin to operate on the data. But then to my earlier point, to aid the kind of interoperability beyond the bank's own ecosystem, between banks, so to speak, that and the other stakeholders within the trade ecosystem, it's going to be a longer process. But I think the evolution of standards, and that's being pushed aggressively by the ICC as well as some of the regulatory banks, they're going to help bring about this convergence. So as the standards get created and adopted, all the fintechs will start complying and aligning with those standards. It'll just help the case to move the data around to the point that he made, because this data is going to become available to all. It's not going to get consolidated in one place. That's not going to happen. It's going to remain wherever it is in islands. Maybe the islands will become bigger in various organizations, but the exchange and interchange of data will become much easier and more secure.
And I think it's also incumbent on banks and fintechs to not wait for the regulators, not wait for ICC.
Absolutely.
I created one of the first video advertising companies, and when we were trying to figure out how we scale beyond our network, we put together a group of all the major media companies, the ad tech companies, and what have you. We created the standard for video ad serving, and then we took it to the industry council and said, hey, we've already got this, publish it. So there's opportunity for industry to actually drive those standards if you get the market leaders together.
One point I'd like to add, and the third thing that would happen is, I think the regulations are also going to enhance and help the cause. So today, digital identities don't necessarily have legal support in all jurisdictions, right? Similarly, there are a whole bunch of technologies that are still not regulatory or legally approved in various companies. But that's a wave that's going through. Nobody wants to be left behind. And that's the good news, because all the countries are racing against each other to try and adopt and become modern. So as these regulations, mature and come into force, the concept and adoption of technology to facilitate and disrupt the process is going to be much easier, and that's how this whole transformation will come through. But it's happening at a rapid pace. I would agree with what Lakshman said. It's not going to be 10, 15 years. This is going to really be exponential in the next few years.
I'll give you one good example of what you said, you are alluding to. TF Global published leading fintechs in trade, 2 years back. And what would you expect? They will say leading fintechs maybe 4 or 5. So they had to publish 40 fintechs, because that is how the trade is today, organized or disorganized, different spaces. So when they published a list of leading fintechs slide, it had leading fintechs, 40 fintechs. So that has to.
How many were misleading in that was also important.
How many are still leading is the question.
Yeah, I think you made a point, and while you were talking, Lakshman, you mentioned a word called digital islands. I think based on my experience being part of technology and delivery, I also feel what you said is correct, and going forward in future, it should get converged. I'm happy to say that I'm part of National Bank of Fujairah, and maybe a couple of years back, we were also like a manual islands, and we had an intention to move into the digitalization. We went to the approach of digital islands because we use multiple technologies to digitize. Rather, what we started is from the customer in itself, how to digitize any forms, then how to grab the data, because Manoj has mentioned about data is with the AI. So the future of AI is going to be based on data, and data is the fuel for AI. Then we digitized our processes. We used, on top of digital processes, we used robotics. Now we are trying to use artificial intelligence. That's the strategy which we follow in National Bank of Fujairah. I'm trying to talk based on our experience. Previously, maybe I can say that 20 to 30, a couple of my colleagues are sitting here. I guess our head of trade is also sitting here. Yeah, it's here. Previously, we were almost 30 to 40% already digitalized. Today, our bank is, we are proud to say by end of January 2022, 80% of our trade transactions are going straight through and digitized. But definitely, as Mr. Lakshman said, it is digitized digital islands. But definitely we have converged. But I feel in the days ahead, future, the AI is going to play a major role. When AI is going to play a major role as bankers, and bankers are now coming out with the open banking architecture, and fintechs are there on the other side, maybe organization like ICC should help us to regularize the standardization policy, how the APIs can be connected, so that it will be much easier for the banks and fintechs to come across together. What do you say?
I'll tell you one interesting anecdote about National Bank of Fujairah, your bank. I mean, my ex-bank. In 1998, I think, we introduced quick LCs, like barcode LCs, like, which was a very, very revolutionary concept at that time. Like, we asked the customer, just type your LCs, and then barcode is created. Then our LC people were just scanning the barcode. The whole LC was ready with the SWIFT, even the accounting entries, completely automated, like a system we had developed. But then somehow it was maybe 10 years before time or whatever, like the idea. So it never took off because half of our customers, they insisted that they will continue to use typewriters. Okay, like, and some of, I know Dubai is very famous for that. Half of our customers, they insist we will use typewriters, we will use mail LCs. My LC should go only by mail. It should not go by courier or SWIFT, because banks were charging 400 dirhams for a SWIFT LC as against 30 dirham for a mail LC. So I'm talking about the 90s.
Yeah.
So one day I said how to solve this problem, because customer is saying you have to send it by mail only for the charge. So we took a decision within the management, irrespective of the mode of transmission, our charges will be 30 dirhams. We dropped our charges and this thing. And the bank has the discretion to choose the mode, because your problem is only this thing. So in a matter of 3 months, like the number of LCs going by SWIFT became 98%. Because the bank had the discretion, and then we agreed to forego some of that income. But then we made it up by means of efficiency and this thing.
Yeah, and to the point of digital islands, I mean, if you look at banks' journeys, right, they were paper-based and they kept everything in a big safe in the back of the room. And then the digital sort of economy hit and consumer-based stuff came out, and they had to open up their systems. By definition, they were digital fortresses, right? And then all of a sudden now the fintechs come along and we're like, hey, we want to connect into you here, we want to push this here and push there. So digital islands in and of themselves aren't necessarily bad. If you've got this question of how do these different technologies talk to each other, that's where the challenges come for banks. In terms of how do you open this up and how do you do it so you don't get in trouble with regulators.
Thank you, Jesse, Manoj, and Lakshman. Since I'm moderating, I need to keep the timing.
Yeah, I think Q&A.
And as I promised the audience that we will give some takeaway. The audience, you can see the screen. 3 minutes. You can see the screen. As I was mentioning about the phishing, I did mention that very purposefully. And if you see here, fish the cost. All our discussions were on the cost. The C stands for customer excellence, and O, which Manoj talked about, which was operational excellence, and S stands for service excellence, and the T stands for technology excellence. What fish the cost mean? D stands for digital, F stands for futuristic digital customer excellence. When you are strategizing your trade into a digital approach, you need to think what are the components you need to bring as a futuristic customer experience, because customer experience or customer excellence will change from market to market, people to people, and process to process. And people think different convenience. You have to get into the customer focused approach. Otherwise, as Mr. Lakshman said, with the 30 years of experience, a bunch of people come together and made a product. At the end of the day, they got 200 plus suggestions. So let's not get into our digitalization. Like I said, look back, immediately you look back without hearing everything. So when we talk about digitalization, we need to have a clear customer excellence approach and how you want to take it for the future-oriented approach. The second is FISH, which should be innovative operational excellence. That's what even Manoj talked about. Either it should be a process excellence, or you may use robotics, you may use even artificial intelligence in the days ahead, which you require data. And the third, when we do all this stuff, the S stands for secure service excellence. You may be able to create the excellent customer excellence and operational excellence. But if you make a mistake, your security is not intact because your trade transactions are big volumes and big numbers. You are lost in the game and nobody will trust you later. So always anything which you do in the document or with the trade, always we talk about T&C. You talk about T&C means terms and conditions. Rather, I might say the T&C should change to trust and confidence. So hence, secure service excellence is much important. And last but not the least, H, the holistic technology excellence. As they're mentioning, there are a lot of fintechs will come, a lot of technologies will come, but you need to really select what is the best technology suited for your organization and your customer. So that's the clear, inclusive strategy you need to follow in your digital transformation for your trade business. Fish the cost. Thank you very much. Now the questions to the audience. If you have any questions, all experienced people are sitting here. They can take the questions.
We're out of time. Just like to add, our clients, JP Morgan, are here, the executives from there, and they will be available if you want to talk to them later outside.
So are there any questions from the audience? Just quickly, we've only got a couple of minutes, but take one over there if there's a microphone somewhere.
I think you're sitting on the mic. Dr. George.
Hold on, can you just wait for the microphone, please? Thanks.
Hello. Hello. Okay.
Yeah.
Thank you. You have mentioned about document checking, and it's very critical, and it should be automated. But before automation, it need to be implemented somewhere to test. So can you name few automation happened and it's already implemented globally?
I can't say that it's globally implemented, but we have a number of sites which I can talk to you in private. We are not authorized to disclose in public forums all the names, but happy to meet you outside. They're implemented in specific sites of the banks. So, but not as a global center yet, but we're on that journey because we're working with 2 global banks right now. So I mentioned the name and you're happy to meet our clients outside. They will be more than happy to talk to you.
See, document checking is so complicated or so laborious or so labor intensive. This next generation, the millennials, nobody wants to be a document checker. So document checker is a breed you will not see soon. Like, there will not be document checkers. People will not be ready to do this job. So you like it or not, we have to find digital solution for document checking. In fact, this word discrepancy, itself should disappear because it is to me it's only a money-making exercise. For banks, at some point in time we were making $1 million only from discrepancies, and it was a line income item in the bank.
True.
Even we don't want to give it up.
Okay. I think we'll have to leave it there. But
Michael, can I just comment, document checking is really exciting. I really think the technology can do so much, what you've got to streamline the process. But if you're doing technology and you're doing AI, it needs to be based on intelligence that's already intelligent. But the intelligence applied in document checking around the world is not very intelligent. Because 5 document checkers sitting here, 5 document checkers sitting here, you'll get I don't know how many results you'll get. So we need to rethink it, but that's not taking away from the benefits of process, of streamlining, of workflow that I've seen demonstrated and is wonderful, okay? But I think we need to think about getting the logic together. Sorry, Michael.
Okay, let's have a big thank you to Joseph and his panelists. And I guess from what they were saying, we're going to be seeing some huge changes over the next 5 years, I think was mentioned, in terms of this transition from paper-based to screen-based information. But it was also said, don't forget about the regulator, which kind of brings us nicely to our next session, which is entitled Regulation for Digital Trade, Nice or Necessary. And I'm delighted to welcome Robert Parsons as the moderator for this session. Welcome, Robert. Please introduce your panelists and tell us where we are with regulation for digital trade. Is it friendly or foe? Over to you.
Michael, and if you sit on this side. And I'm going to first introduce to you a very distinguished lineup of panelists today. In no particular order, I have Joel Shrevens, who's the Global Solutions Director of China Systems, and I have Samir Siegel, who's the CEO of TradeStream, and Gunnar Collin, who is the Head of Sales and Marketing at Anigio. What I'm going to do before we kick off with the session is just to give each of them, as is the usual thing when I've got three vendors sitting next to me, a 3-minute elevator pitch, who they are, what they do, and why everyone should stay in the room and not head out and queue for the coaches for dinner. So let me start with you, Joel.
Good afternoon, everyone. So my name is Joel Shrevens. I'm representing China Systems, a sponsor of this event. So our core business is trade finance and supply chain finance, back office and portal solutions, and not only the software but also the services around it. Another important thing to mention is in 2019, China Systems created a new unit called TDS, Trade Digitalization Services, with 2 main objectives. The first one was actually to start digitally re-engineering traditional trade instruments, paper-based instruments, and you will see an example of that tomorrow, one example. And the second objective of that unit was also to come up with a collaborative strategy with other vendors in the market. And some of those partners, they're actually sitting next to me. With TradeStream, we've integrated with TradeStream, we've integrated with Anigio. So because I'm convinced that the success and actually the future of trade finance heavily depends on the level of collaboration. I always like to use an analogy with the travel industry where we can learn a lot. I came here actually and used my passport. I checked into Brussels airport and my luggage was checked through straight to Dubai. Although I took a train, the Thalys train, from Brussels to Paris, and then I took Air France from Paris to Dubai. What I want to get at is my luggage got here. I used one digital identity, my password, to check into Brussels, and I got an end-to-end experience. And there's a lovely word for that, which actually applies to technology so much, and it's called code sharing. And this is what vendors need to do to create end-to-end experiences for our customers. We need to start code sharing our services and use common digital identity to offer such a service. And that's what I strongly believe in as a vendor.
Joel, thank you very much. Samir.
It's very difficult to come after Joel. He's so good. So my name is Samir Sehgal. I'm the CEO of TradeStream. TradeStream is into trade automation. So, a lot of what I've heard today has been around automation. How do you automate trade? Trade's so difficult. So for me, the journey began as a banker. So I was a banker till 2017. And believe you me, most of the pains that we saw in our everyday lives, we've tried to eradicate in one way or the other because the technology is out there. One of the illustrious panelists before spoke about the fact that technology is available. The answer is it is. It's all about our mindset if we can adopt it. So what we do at TradeStream is basically embrace technologies, the latest that we can find, to be able to solve everyday problems that you have in trade. Right from taking a piece of paper, scanning it very simply, picking up all the information, the thousands of pieces of information that you have, and then running all the checks that you can conceivably think in your head in the matter of seconds and giving it back to you. So wouldn't it be wonderful if from the corporate to the bank and then to the buyer and the buyer's bank, if that entire process could be done in minutes? For us, that's the dream that we work towards every single day. We are set up in London, but we got offices in Dubai, India, Pakistan, and we're soon expanding into New York and Singapore as well. So we want to be there for you to be able to solve your everyday problems of trade. Thank you.
Thank you, Samir. Gunnar.
Yes, good afternoon. My name is Gunnar Collin. I'm from Enigio. We are very, very happy to be here. Enigio, just a few words. We don't consider ourselves to be a fintech. We consider ourselves to be a tech company. And sort of the background of the company is really around archiving and technology and cryptography. And we have been focusing on one thing and one thing only. And I would just like to quickly explain what we do, because we are very, very focused. So, Robert, this is a piece of paper, okay? And there are two things with a piece of paper that are really important in today's world. It's very interoperable, okay? So I can give you this piece of paper, and now it's yours. It's not mine any longer, and you can give it back, right? Very interoperable, and it doesn't require anything from you. So that's number one. Secondly, a piece of paper is really good because you can write anything on it. You can create from a piece of paper, you can create a bill of exchange, you can create a bill of lading, you can create an invoice, you can create anything. So the only thing we do at Enigio, and we call our solution Trace Original, is that we are replicating a piece of paper, and we do that digitally, without taking any prisoners, without leaving anything to chance. So this is our technology, replicating a piece of paper into the digital space. And then you can imagine what you can do with that. And that is really up to our users.
Thank you very much indeed. So you've got an idea of what all of our panelists are about. The title of today's discussion, which was digital regulation, nice or necessary, is really focused on the need and the proximity of changes in law which will enable a lot of what has been going on in the digital space to be enjoyed on a much wider basis globally. Some 30 years ago, I was first involved in one of the early attempts to introduce electronic trade documents. And extraordinarily, by a huge coincidence, today, the Law Commission of England and Wales has recommended that legislation comes forward in the UK which will, for the first time, legally recognise an electronic bill of lading, electronic bills of exchange, and a range of other electronic trade documents, which, to this date, at the moment, can only exist through a multilateral contractual patchwork and an arrangement between different parties. And as you know, there are a number of solution providers in that area. So I'm very excited. So I'm Robert Parson. I head up a commodity and trade finance team and digital finance team at Squire Patton Boggs in London. I'm going to very quickly, and first of all, if you're interested, the Law Commission paper is available on the net. It runs to about 270 pages. Read it. Please do not print it for all sorts of reasons. Given it would undermine the whole basis upon which the report's been issued, apart from anything else. But I want to give a little bit of background as to how we've got to the position we're at today, why legal change is needed, why it started happening already. So, I think it's well known that since about the turn of the current century, there's been legislation in place around the globe, which means that we can have electronic evidence of signatures and certain contracts. And some documents remain incapable, however, of being dealt with electronically, and that's the problem. And part of that is because the legislation around those, particularly things like bills of exchange, bills of lading, relies on acts and legislation which came into existence in the late 1800s and the early 1900s. Extraordinary, a long time ago, but shows that those bits of legislation have stood the test of time. Not all documents in international trade, of course, have to be are prevented from using an electronic form. For example, guarantees can be dealt with electronically. Letters of credit, of course, very often exist only electronically. But international trade, with an annual value of about $20 trillion, unfortunately remains heavily dependent on paper. And because that paper, and as Gunnar was demonstrating, very easy to transfer pieces of paper, and importantly, they transfer all sorts of rights with them. And that's the thing which the current law doesn't allow you to do when it's in an electronic form. So that's why this legal change is really very, very significant. And it's been recognized for some time that a change of law would be needed. The ICC commissioned a report in 2018 which looked at the status of electronic bills of lading and unsurprisingly discovered that they didn't have legal status in any of the major jurisdictions that were looked at. Obviously, there are a lot of platforms which have a solution for that, but it's ultimately a contractual device. Many people have seen the UNCTAD model law on transferable electronic records, which I'll refer to as MOLITA. There's some people don't like that as an acronym, but it's got a catch to it, as being the way forward. And for a number of reasons. It has capacity for an e-signature. There's a possibility under MOLITA to distinguish originals of an electronic document from copies, which is a concept often used in trade. The content of the electronic document would retain confidentiality in the same way as Gunnar shielding the contents of his piece of paper from me. And the electronic document, which should be under MOLITA readable by humans as well as machines. Well, we don't want to have this room just full of robots in 10 years' time. We still want to get the chance to come out to Dubai. And also, it should be transferable, stored, and processed by the holder. So MOLITA as a basis has a lot of things going for it. But the use of electronic bills of lading as they've been brought into operation by many of these platforms still only has about 0.1% coverage of that $20 trillion market, an incredibly small amount of take-up. And English law commentators realized that the main problem was that you can't possess something that's in an electronic form. So the change of the law that's going to come forward in the UK will essentially change that fundamental aspect so that you will now be able to possess an electronic record of something in the same way as you can possess a piece of paper. And I'm pleased to say that by coincidence, without any design at all, that we're sitting talking on the day when that piece of legislation is going to come forward. So very exciting from someone who's been involved on the legal side of this for some time. But I want to go straight into some questions. And Gunnar, I want to ask you first of all, I'm going to come to the detail of the technical solutions in a minute that might accompany legal change. But you've been championing, I know, the adoption of MOLITA for some time as a route to global legal change, which would give a more widespread use of electronic trade documents. Can you explain why you feel that MOLITA is an essential legal tool in achieving that sort of fully digitized market that we've heard panel after panel talk about?
Can I simplify?
Please.
Yes. So the Multilateral, the MOLITA, is really clever in that sense because it's all about technology neutrality. So it doesn't matter whether a document is on paper or it's digital. It will be sort of treated in the law of the eyes of the law in the same manner. So this is really important. And what this also means is that you can keep your current laws, you can keep your current processes, you can keep your current rules, you can keep everything that you have today. The only thing you need to do is to make sure that you have sort of a digital document that performs and behaves as a paper document is doing today.
And MOLITA actually contains some recommendations of how that's achieved.
Exactly. This is exactly what's in there. All the things you need to think about what an electronic transferable record needs to be able to do. And that is coming back to the fact that if you want to keep all of your current legislation, that needs to be the case because otherwise you need to start everything, and everything will become extremely complicated, and there will be sort of a very, very cumbersome road ahead. In my view, this model law is really good in the sense that you, once again, you can keep your current processes, your systems, you can keep everything, and you can still go digital.
For those who aren't familiar with what Melita says, Article 12 actually sets out a list of things which make something reliable, which include operational rules relevant to assessing reliability, the assurance of data integrity, the ability to prevent unauthorized access to and use of the system, the security of hardware and software, the regularity and extent of audit by an independent body, and the existence of a declaration by a supervisory body or an accreditation body regarding the reliability. So these things are anticipated, and does that give you, from your position, the groundwork to move ahead?
Yes, definitely, and moreover, sort of from our point of view, is that once again our digital paper, if you wish, can perform all of those things that they need to perform. In terms of distinguishing the original from the copy, making it transferable, making sure that once it's transferred, it's completely transferred, making sure that you can endorse it, that you can add electronic signatures, that you can update it, and that you can transfer ownership.
And these are really key issues. I'm going to come back to some of that in a minute. But Joel, I know you too are a fan of Melita or MLETR, however you want to call it today. But as Gunnar says, the market, needs to do something now. No one's going to wait 10 years till everyone's adopted Melita. What should participants, in your view, be focusing on doing right now, and how can Melita help with that?
Yes. Let me start by explaining what we've done, and then I will state what I expect, what I think the market should do, because we're just a piece of the puzzle. We're not the entire puzzle. So what we've done is, we actually already started working with Enigio, I think was start of 2020. We evaluated their technology against MLETR provisions because they exist for a while already. I know UK law now has come very, very close to MLETR, which we consider as a positive. So we decided, and they may not be the only vendor, there could be other vendors offering this, but for us it was pretty clear, because we have business scenarios in mind. Our customers run operations. So if we embed a certain technology into our platform, we have to make sure it will resist any scrutiny that will be executed by, let's say, by legal bodies in terms of MLETR criteria. And we've done that exercise with Enigio. So we have already implemented and fully integrated the APIs that Enigio offers into our solution. And you will see one of them tomorrow, but we've done more with digital collections, more specifically digital bills of exchange, but in fact already running ahead of the market. The current solution that we have is based on a contractual solution. It's part of ITFA's offering, International Trade and Forfeiting Association, where we actually use the digital container, which is actually the digital document, and we embed contractual language inside the digital container to make it already compliant with the law on bills of exchange, so contractual solution. But it is actually ready when the digital gates open, hopefully in the UK in 2023, it will mean that our solution is already that we can start supporting any trade chains between countries, all the Commonwealth countries. I assume we will be able to start targeting trade chains between those countries and Singapore and Bahrain, ADGM jurisdictions. And that will, we expect and we hope it will cause a domino effect. So it's our responsibility versus our clients actually to ensure that our users can focus on a business process, on a trade process. The channel, whether it's paper, whether it's SWIFT, whether it's fully digital, it should not matter to the user. So that's work we've already done. The second big important thing for us actually, because you're right, we have invested seriously in this, and we of course hope, and it's going to take a while, and it's going to be an extended period of coexistence between paper and digital and other formats. We are aware of that. But something I would, and I don't know, maybe SWIFT is sort of listening, and maybe other channels and networks. I wrote an article, I think you've read it as well now, Robert, that, it was a bit of clickbait. I called it MLETR Inside, because the question I raised is, do we all have to wait till government by government is going to come out with a law which says it's aligned with MLETR? That's going to take for a very long time, and we don't have that time. So something I suggested, and it's probably a lawyer that needs to answer it, is that is it not possible for typically a channel which aims to offer, let's say, e-presentation capability? If you look at what SWIFT has offered during the COVID period, they have FileAct. Everyone knows FileAct. FileAct is a mechanism offered by SWIFT to send physical files between banks. So not just SWIFT messages, but also attachments. Those attachments are typically scanned documents. It worked well, but the problem with it was that what often happened was, and there's BAFT statistics on this, that the banks had to make phone calls afterwards because those documents were scanned documents. So as long as you're talking about an invoice where an LC would typically ask for copies are accepted, there's not a problem. However, if you're talking about documents of title or where original are being requested, then you run into trouble with such a solution. So I would sort of think SWIFT, with its API strategy, and with its huge bandwidth in terms of bank reach and also corporate reach, why could it not offer an MLETR Inside concept whereby SWIFT members say, if I'm going to be sending digital original documents over my network, and like I said, you don't have to do it for all documents, but let's say if a bill of exchange is involved or a bill of lading is involved, if you use the technology offered by our partner that we've integrated into our back office as well, you could actually process digital original documents, because their solution offers what is absolutely essential, I think, to be able to do this. It's the digital notary function. So SWIFT, if SWIFT says, I'm endorsing this solution, and they can go through it, investigate the security like we've done, there's a digital notary component which just stores a fingerprint of the document. There is no business data. It's like Jesse explained, it's purely a hash. There's no business data, but it's actually a notary that will just testify this document is authentic, it is a copy or it's an original, and it can also control the ownership of the document. So it also is an answer to the possession aspect as requested by MLETR provisions. So that's a sort of an appeal to SWIFT. Could we look at a way where banks actually could start potentially offering e-presentations using the SWIFT network and build an API capability using, for example, digital technology that offers that notary capability?
And I suppose one of the attractions of that is that SWIFT, as a non-for-profit, trusted gatekeeper, is a neutral choice.
Absolutely, and their bandwidth is enormous. That's Contour, for example. I don't want to make it channel specific. SWIFT, of course, is known. Contour has also ambitions in terms of offering e-presentations, but it's a closed consortium. The challenge with documents is there are so many participants to a documentary flow. Everyone has seen the Boston Consulting Group slide with 30, 40 participants to a single document. How are you going to resolve that with a consortium, a closed ecosystem approach? It's not going to work. It's going to take decades and decades. How are you going to convince everyone to get on board? That's why I think Jesse also used the word frictionless. The most frictionless, best transformational approach is let the applications which do their jobs today, allow them to continue doing their jobs, but you have to add something where everyone has easy access to a capability to actually do a very secure check on a document, but not something that sits inside every single application on the planet. Something which is endorsed by organizations like ICC, like SWIFT, like a central bank, depending on the document. You could apply it for certificates of origin, for example. Typically, ICC could use the same technology if it's not already electronified that document. So you need, of course, a recognized body to act as the digital notary. And I will also be explaining that in my session tomorrow in the challenge.
You get a second mic there, but before I come on to something, I was just going to say you were hinting there at where MLETR has already been adopted, and currently, in addition to the fact that the UK will be bringing forward something very similar to MLETR in its effect, Melita is now either enacted or adopted in Bahrain, Belize, Kiribati, Paraguay, Papua New Guinea, and the Abu Dhabi global markets, and perhaps most significantly in Singapore. And hence, there's a lot of chatter at the moment, you should probably know, about linking the UK and Singapore and showing how all of this can work, which is great as a case study. But Samir, in terms of your business, how do you see this sort of new excitement over legal change, Melita? How do you harness that? Is it meaningful for you?
It's very meaningful. So, you know, if you were to take a step back, we are very, very, very excited with what's happening in the trade world. I mean, somebody
That's good,
said that
I'm very excited too,
yeah,
so I want other people to be excited.
So you know, there's a saying that nothing happens for decades. In the world of trade, nothing has happened for centuries, and then everything happens in a week. You know, I think the inflection point got achieved, I think, sometime during COVID, when banks realized, and everybody around the world realized, that you know, you just couldn't carry on like this. Everything was broken. There was just no connectivity whatsoever, and people couldn't get to progress. So if you really fundamentally look at, for any new thing to be adopted, there are three different things that need to be done. One is technology, the other is the legal framework for it, and third is the psychological challenge. One has to psychologically, the masses have to psychologically take it over. If you look at the first one, technology has, in many, many, many ways, whether you talk about artificial intelligence, neural networks, whether you talk about OCR, or for that matter, the API standards, technology has reached that level that can provide the solution that we're looking for. So technology is not the problem. When you look at legal, for a platform like ours, legal has never been the problem. To be honest, I mean, we do 1 million transactions. We are in 17 countries. We've got 3 of the top 5 banks, 15 of the top 50 banks doing, you know, using our platform. So legal is not the problem for us. But our vision is much bigger than what we are trying to see today. Because within the trade document set, you got the bill of lading, you got the bill of exchange, negotiable instruments. They depend upon laws, as you said, which were written 150 years ago. So for us to be able to translate and take it to our vision, which is STP, straight through. Trade today takes 45 minutes, 50 minutes, probably even more. That's when you're processing it. You know, you can be waiting on it for 2 or 3 hours in your inbox. If there was a way to be able to use technology and make it like cash management, STP, within a minute, the only way to be able to do it is take each and every document that you have, and the law has to support it. So for example, the bill of exchange, the bill of lading, which are negotiable instruments, they need to be able to support, as Joel mentioned, the transfer of title, which is beyond the processing per se. And that's where this regulation comes in. Because it helps from there are 2 fundamental problems in trade. It's unstructured and it's non-standardized. So regulation, when it comes in, and we've been pushing for it very, very hard, that regulation allows those bitty documents, bill of exchange, bill of lading, and a few others, to be transported across using the technology that we have. So today, for example, if we can process in 15 minutes, 20 minutes, clearly see the road down, 3 years, maximum 5 years, maybe faster, when you can bring it down to 3 minutes, 1 minute. That's where trade is headed, and that's why it's exciting, because it's game changing. So for us, this regulation is very, very, very welcome.
Good. I want to go back to something you said before, which struck a chord. You said that, you know, the simplicity of it is really important. And I think if people look at where the technology is going to take them, they'll say, well, actually, at the moment, it works quite well. The man from FedEx arrives at my doorstep. He hands me a package, an envelope. I pull out the piece of paper, and it's there. And in many ways, you know, in order for this to work, we've got to have something which is as uncomplicated as that, which doesn't require, you know, the person accepting it to have a degree in computing or sign a 5-page legal document in order to, electronically, in order to access the document. How do you see that particular issue being dealt with?
So, at least the way we see it is that it has to be understandable and it has to be simple, because if you end up in a situation where you need sort of to select between different platforms and you have to make a lot of investments and you have to do all sorts of things, it will get complicated and it will get messy. So, as I said, the way we do this is that we just provide sort of a digital sheet of paper. Then it's up to the user to decide what to put in there. And obviously, the first thing you think about is sort of some kind of text, a promise, right? And a signature. That would be sort of the basis. But it doesn't stop there, because you can also use the technology to create a PDF, and then from this PDF you can create one single original to make sure that this particular PDF is the original, and I can actually own it as well. And then in addition to this, I can sort of electronically sign it, I can add attachments, and I can send it along. I can send it, as Joel mentioned, through Swift. I can send it through email. I can send it through any digital channel that I wish. So going back to the simplicity is really that now technology is available for you to create original PDFs that can sort of be a bill of exchange or a bill of lading or whatever type of document you like. And we're all familiar with handling PDFs, right?
Yes.
That's all in a day's work, yes.
No, and that's really crucial, isn't it, Samir, that people see there's a real move forward. A lot of people have been hailing the advent of electronic trade documents as the point where the playing field is leveled for people in SMEs. They're now going to be able to deal with this on their phone. They're not going to have an army of lawyers and compliance people in order to do this. And is that a reality for people in
Absolutely. We see it on a daily basis. I'm not a developer. I understand nothing about technology from a coding point of view. But I think the power of science and the power of technology is to do all of that behind the scenes, so that the user, it's just using it intuitively. I mean, our kids use the iPhone better than we do, right? I mean, they don't have the same degrees that we do at this stage, but they use it much better than, it's just, they grow into that world. And as long as you can dumb it down for the user in the front, all the science is behind the scenes, and it's very, very simple, intuitive, natural language in English. The coding and everything is behind. So as long as you do that, I don't think anybody needs to be an SME other than what you're doing intuitively.
Joel, final word before we take some Q&A from the audience.
Yeah, I'm going to end with an analogy with travel again, and we are so used to working with paper documents, but I just did something today. I have to return to Belgium, and I have to fill out a passenger locator form. Yeah. Now, if I travel, I get quite upset these days if I cannot get through a gate or through an airport with a mobile boarding pass. I don't know about you, but I sometimes have it with certain airports. Oh, you only accept paper boarding passes. I get upset, and I think for digital trade, it's the same thing. People should not get used to it. With my passenger locator form, what happened was I have a mobile vaccination certificate. I actually can create my PLF form automatically by uploading my vaccination certificate. Yeah. So if you see those simple things happen in the world we live in today, we have to do the same thing in trade. We can do very simple things in terms of using data inheritance. There's already a lot of things happening, but we have to become more creative and not accept something which is it's the biggest anachronism of our time. Paper. We're having to rely on paper documents to take major financial decisions. In trade, everyone knows in trade, the biggest triggers in a trade process for all decisions, either in the physical supply chain or in the financial supply chain, it's pieces of paper. Yeah. And you need to send with physical courier services across the globe. So we really have to solve this problem and do whatever we can. Because, and that's the last I'm going to say, with the regulation yesterday, it's also going to be a matter of survival. Because with the increased regulation, the way to combat regulation, combat is a bad word.
You're talking regulation in a compliance sense,
yes.
not the new law.
No, the way to deal with compliance is speed and efficiency. And speed and efficiency implies that you digitalize documents, that you can actually, in terms of, if you have to go, because otherwise you're going to create massive bottlenecks in the processing of settlements of payments. And that's why I think documentary trade is very unfairly treated. Why? Because they have the documents. The millions of clean payments flowing through the SWIFT gateways today are not undergoing the same compliance scrutiny as documentary trade, which is unfair. But I think the regulator will catch up, but the solution is going to be that transactions are tied into digital documents through unique links to fingerprints. And a SWIFT message one day may contain a reference to that fingerprint, and the API will launch a check on that document through the network. That is the future. No manual checks of data and process. That's the only way we will be able to increase volumes in global trade.
Can I just add to what Joe just said? So, in fact, we completely subscribe to that view of the world, and it's not something in the future. This is not Star Trek, sort of 20 years from now. This is almost happening. Because, think about it. When a lot of our countries, when we were growing up, we used to write checks to each other. There was no electronic transfer. We used to write checks, and those checks made their way back to your account, and money got debited. Nobody writes checks today. I mean, they are completely gone. It's all electronic transfers, right? It's not far-fetched to think that you could assume the same thing in trade as well. It's data ultimately. It's not the paper. As Joel said, it's not the paper that's going all over the place. It's the underlying data. And as long as that data can be extracted unerringly, accurately, every single time, and then checked upon, think about it. You could crash probably weeks of effort into minutes.
With the legal framework to support
With the legal framework to support.
With that, let's just see, are there any questions in the audience? Is there a roving mic for lady over here, Ben? Wait one moment, there's a mic on its way.
Hello? There's a roving man with a roving mic. Okay.
I guess I have more questions trade related. Okay. People might misuse of these platforms, especially with bill of ladings. So how we can mitigate the risks?
Security.
I think it's a good question.
No, you go.
But I'll give, because I had the question so many times. Yeah. What is the risk of, because you have to compare it to what exists today. And today you have paper. What can any smart guy do with a piece of paper? I think the risk of abuse and fraud is 100 or 1,000 times bigger as when you use technology with algorithms. And it has to be, of course, endorsed, yeah? You cannot just take some piece of technology. We've done our due diligence, security-wise, on the technology, and I can guarantee to you the risk is much lower than pushing a piece of paper, giving it to a guy, putting it into a truck, putting it from a truck onto a plane, hoping that the courier is going to deliver it, the amount of time it takes, the risk of loss, the risk of abuse. Paper can be abused much more than digital fingerprints.
And I think it's right to say, isn't it, that with the use of public and private key infrastructure, the possibilities for someone to crack the code in real time whilst it's still worth doing are really very, very small.
Absolutely.
Yeah. Okay.
Thank you.
If there are no more questions, I'll let Michael. Beg your pardon.
Yeah, just to add to what she said, so the thing is, it's very right what you said, that the risk of fraud in the paper environment is much more than in the digital environment. But the issue which exists is that there is very much lack of knowledge or education about how ideally one should operate in a digital environment. Maybe among the larger enterprises there is, but what the need there is that to create a education among the trade community that how the digital mode should be used in the appropriate manner. And for that, regulation is something which is also very important.
Absolutely, because trade requires trust, because that's how trade is done. But there's, like I said, I'm not going to get into that during this session, but if you look what's happening, and some other people refer to it, there's a lot of things happening now in the area of legal entity identifiers, which is actually a business concept. What they're doing now is they are creating what they call a verifiable legal identity identifier, which means there's also a technological framework. And that's something that is driven by, that's going at government level. So indeed, governments and official bodies, and I think through ICC, there is a role for bodies that are recognized to actually to educate and make that sure that the trade ecosystem gets that trust, because it is technology, and there is, I think, a natural distrust, which is, there's nothing wrong with it, and there is, I think, an obligation for the community to actually share and give the trust to the technology. That's our job.
I'm sure ICC UAE and Vin are going to be at the forefront of making sure that education piece is covered as well. So thanks very much indeed to all my panelists, and thanks for listening.
Thank you.
Thank you, Robert. groundbreaking stuff there discussed. I mean, it's, really transformational and exciting. In fact, I tried to make, we're going to do a bit of a roundup now, quick roundup with Vin, and I tried to make some notes of some sound bites that I hear in the session, the last session particularly. And I wrote down very excited. I think that was mentioned by one of the panelists. And then I realized that a few minutes earlier, I'd already written down very exciting as another comment. So that gives you a flavor of, I think, what's going on here. Vin, this has been an amazing session, I think. And, what was talked about in the last session, again, the change in the UK law and the enabling of the transfer of rights through electronic documentation. I mean, that's just, from what I can see, that's truly going to be transformational and a quantum leap in terms of the whole way trade finance is going to be managed and undertaken in the future. And that's also going to affect things like KYC, document checking, anti-fraud measures, all extremely very exciting stuff. And if the panelists are to be believed, then a lot of this is going to happen in the next few years, next 5 years. In addition to that, we've got multilateral development banks, of course, heard from them and their input into helping emerging markets develop and the funding and backing that they're providing, and also the facilitation of enabling legal structures to be built and put in place so that these things can work, these receivables finance structures particularly can work. And the importance of economy is, massively important. The provision of finance to help these emerging market economies in particular develop is so important. Vin, you always pay much more attention than I do in these things. Anything else for you to add?
Well, my main job is to give you the logistics for the evening, but just maybe one or two comments on the digital. We learned yesterday in the legal that in most instances, even though we've 3 out of 3 are regional business 2 out of 3 don't play any role anymore. So we should fix that before we start doing anything else. The second thing is we learned yesterday, but we already knew, when people keep talking about a bill of lading document of title, everyone and lots of people yesterday seem to think this means that the holder owns the goods. It's not the case, okay? It's you're entitled to take delivery of the goods, okay? Number 3, people seem to be under an illusion that under UCP 600 and a letter of credit, when you present your bill of lading or your invoice, but we'll stick with the bill of lading, that, it must be authenticated. It did not like that. Under the UCP rules, the way it's written is the bank just checks on its face that it appears to be signed. So, we should get the standards aligned before we start trying to, but that's not taking away from the value of having recognition of the electronic records, equivalence, functional equivalence. Now, the most important thing is this evening, okay, this evening.
One more thing, just a quick point about the funding gap. That's been mentioned many times. And, everything that was said today, hopefully it's going to help to reduce that funding gap. That's the big goal that everybody talks about in these conferences. But it's not easy. We've heard a lot about digitalization and technology, which should speed up that process. But I just wanted to mention that the British government commissioned a report which was put together by the Macmillan Committee. And this committee was put together because of this funding gap that was identified by the British government as a particular problem. And the committee reported on that. But the main point I want to make is that this committee took place nearly 100 years ago. So that's how long this has been an issue, the funding gap. So let's hope that what we've heard today will speed up that process and reduce that gap.
Well, I can't solve the funding gap, but I can solve the feeding gap, okay? So I'm going to tell you about the dinner, okay? So we're having our dinner this evening. The dinner is at 7:30, and remember, it's in the Park Hyatt. There will be buses outside this building, not the Sheraton, outside the Dubai Chamber at 7 o'clock. But just, it's really close by, and on balance, if you get a taxi, it'll cost you €4 probably, so don't worry too much about it. But Park Hyatt, 7:30, and of course the tickets for Expo will again be available tomorrow if you haven't picked them up. It's definitely in the morning. So looking forward to seeing all of you for dinner. Some of you just joined us in the afternoon, so you're also welcome to come to dinner, no problem. You can bring your relatives, friends, everyone, anyone you like, except my mother-in-law, okay? Okay, so with that, we'll see you later at 7:30, and we've a dynamic day packed for tomorrow, and I feel I'm forgetting something, but I think we're okay for now. So thank you very much for your time and attention. Thank you, and thank you, Michael, wonderful chair for the afternoon. Great.